morning, traders. Happy, wonderful Wednesday. Today we have FOMC later today. Let's welcome our traders, Bull, Barbie, and Nick does futures. Come on down.
Good morning.
Good morning, guys. What's up?
Good morning. How are you guys today? Barbie, how are you so far?
Doing good.
I'm doing well.
Haven't traded yet, but we'll see if we can get something going. Pre-FOMC slowness possible, but we'll see.
Possible chop before the news. Maybe.
We'll see.
Yeah. We'll see.
Yeah, we'll see. Hopefully not.
How has
Fortunately, we've been getting these nice big ranges.
Yeah, that would be nice. We love volatility as traders. Nick, how's your morning going so far?
It's good. It's good. Yeah, woke up, made some breakfast, took dogs on a walk, and yeah, just kind of chilling. And here with you guys, ready to party, like you said yesterday.
Yes, I'm so glad. Do you want to show us your chart and kind of show us what you're thinking, looking at to get us started, get this party going? Good morning, chat. Type in W if you're ready to get started.
Yep. So for me, on the NASDAQ, this daily chart does not look good in terms of, I think anyone who tells you they know where we're going next is like lying, because I have no idea. Even if you drop down to the 4 hour here, just lacks a whole lot of direction, displacement, and speed. So if it could all change with like the war news and stuff like that, especially after last night, there was like some talks on Twitter about it escalating, but we've had a grind up, and then we just had this move down. I would actually, given that we have fair value gap here and we have clear relative equal lows on the daily chart, I would like for us to go lower. These equal lows could be a target, but I think invalidation for that for me would be above this high. And I would just kind of be hands off. But the first 30 to 45 minutes of the market open is just kind of like it was yesterday. It's probably best to just wait for post FOMC. Same thing for ES, in my opinion. It's kind of in that same range. And then for gold, it really didn't move much yesterday. It's still kind of chopping around as well. This is that same range from yesterday. So I'm not watching. I mean, I'm watching NQ and ES obviously from these gaps right here that I just pointed out. But if it goes higher, then I'm probably gonna be hands off. But I want to see lower prices. I think we had 8:30 news this morning, and then we have obviously equities open at 9:30. So I'll give it 15, 20 minutes into the market, see if I can catch something. But that's about it for me, honestly.
Okay, thank you, Nick. Barbie, what are you thinking?
I just pulled this out to the weekly earlier. I was just showing somebody because someone yesterday was telling me that the market was crashing, and just based on the news that they were seeing. And so I had actually pulled this out on the weekly to show that this is not a very crashy chart. Like, we might be moving down a little bit, but this is the daily. So we're still inside of this consolidation area that we had been, where we were testing all-time highs multiple times up here earlier this year, and really before all the tariff stuff, so January, February. But that's where we are. So it makes a lot of sense to me that we're not as enthusiastic about pushing through all-time highs given all the war news. The other big thing, and we cannot forget about this today, it's FOMC day. So I really do filter. I know some of y'all like having all of those events on your calendar. I don't. I just focus on the big important events. That is too much noise to me to know every little release all day. I can still kind of watch those on the feed, but this is the biggest thing of the week is the FOMC stuff, and that's this afternoon. So 2 o'clock we'll get the new federal funds rate, and then at 2:30 we'll have Powell on for the press conference. The annoying thing about this stuff right now is I should still have this up. Now, this is the Fed funds expectation for the rate. Here's the current rate, 425 to 450. There's a 99.9% chance that it's going to be 425 to 450. So we don't have an expectation of a change which will help the market move some today. But it's like every time until this actual news is brought out, the market tends to be a little bit sluggish. Fortunately, we're in these conditions where a sluggish, choppy market is still giving us these really nice ranges. So let's go down. This is hourly, and I can guide y'all through kind of levels that I'm looking at. Well, yesterday I was looking for if we broke the 60-45 to target the 60-30 and 60-17. That's exactly where we went. So you can see that's pretty obvious that that scenario brought us into the lower highs, lower lows, lower highs, lower lows. So we put in a lower high. So in order for the bullish scenario, we have to break that pattern. So that's pretty obvious right now. We have to break and hold above the 60-36 level on ES to break that pattern and start putting in higher highs, higher lows. That's just step one to be able to create that pattern. So if we start breaking over 60-36 and holding, so if we get like these little wiki candles that don't really hold over, I'm not talking about that. I'm talking a big, nice move that gets us through, retest down, and keeps moving back higher. If we get that sort of move, then I'm looking for the highs from yesterday, which are right around that that volume profile node that I'd pulled before. So we're kind of looking at the 60-80 level for that. And then if price can keep moving up, the century mark up there, 6100 is real obvious. And then we have the high from Monday. But that's if we have a change of character here. And it's really important to remember the war news is looming. So there's always, we could get a big move down again, like the stairs up, elevator down. That was our elevator down move, was the war news. So we could get another one of those moves down, and that would continue filling out this current pattern. So if we continue just making moves lower, that would mean that we would be breaking this low down here at the 60-17 level and testing this other low that we have down here around the 6,000 level. And then the one after that, we have another low down here to test around 59.80. So those are the next levels down we have. As far as chop, I have a pink box of shame for the market for ES here. Basically, because we've had so much trading around in this price, there's going to be a lot of kind of different orders and different strategies that make this area really choppy. And it's mostly from 60-20 up to 60-50. This is the hardest area to trade, in my opinion. So I'm hoping that we can get out of this. We could form a nice little range in here and end up seeing the range trade. But I want to see that range form before I try to trade it, because it's not clear right now. But we could end up in that range. And that's still a nice, decent, wide enough range to get some trades in. So I'm watching VIX. It's hovering around 20-21. So
okay, VIX is a little bit higher than I remember a few days ago. It was like at 17, I think you said.
Yeah, so I mean, if it starts coming back below 20, that's going to help that bullish scenario that I talked about first. But as long as it's hanging out higher, that's favoring this bearish move.
Okay. Do you take range trades often, Barbie?
If I see that pattern forming, well, I didn't used to. It used to be I was just completely avoiding ranges, but we used to have an ES range that was 5 or 10 points. And because the volatility is so much higher right now, and we have these wider ranges, and it's really just, I mean, when I started trading, the S&P 500 was at like 3,000. So just the percent wise too, twice the range of that would give us a 20-point range, right? If I'm used to trading a 10-point range a few years ago, that's like a 20-point range now, but we're still getting extra volatility. So it can be, if we have a nice pattern setting up, and it can either be like a little channel moving down like this, although if it's a range, it's not going to have as great of an angle as this chart right now. If it's true range, it'll be more horizontal. But even if it's just mostly horizontal, if we start filling out a really clear range, then yeah, I can put some trades on in there.
Nick, do you
It's not my favorite.
Yeah, I think they're trickier to trade ranges. Nick, do you trade ranges?
Not really, to be honest. Like I kind of like when the market's like moving a good bit, but I mean like price is fractal, so I mean you can drop down to lower time frames and find bigger moves the lower you drop in time frames. But mainly with like the hourly and M5, which that's the main time frames I trade. I don't really like to see a whole lot of ranges, because those are usually what makes up like the daily range. And like I said, the NQ, like the daily range is just kind of, I know traders that do very well in ranges like this, but me personally, I just don't. I like having speed and volatility in the markets. Like back in April, I thought was very fun to trade, but you had to be careful and you definitely had to size down. Like all this to me was so fun. A bunch of classic sell weeks where Tuesday makes the high and then we just expand Wednesday through Friday. But, it makes sense. We dropped, I think, 25% down and then 30% up. So it makes sense for the market to kind of chill out and breathe a little bit, right? So that's what it is.
Yeah, Barbie, you call it breaths. Market is breathing. It needs to rest. It's really cool to hear you both talk about that. Like just so many similarities.
That's what I was talking about yesterday when I told you someone was informing me that the market was crashing terribly. And I was like, no. I laid this level out. The level that the market went down to, which was the 6017 level, I laid that out before any of the news came out. The market goes where the market goes. It just needs that catalyst to get us there, but everything's still making total sense. So,
okay. The sky isn't falling is what you're telling us.
The sky is not falling. Not yet.
We're okay. So let's look at our numbers. Where are we at? 354 people watching live. Everyone share the stream. Share it on all of your social medias. Let's get those numbers up. Am I seeing this right? There's 51 likes. Let me hit refresh.
Pathetic. Chat. Where's the support? Where's the love?
Oh, okay, I did refresh. It says 82. Everyone smash the like button. Let's get this party started.
Come on, chat.
What was so interesting yesterday was watching how gold kind of consolidated and silver was really shooting higher. That was what was crazy to me.
Gold consolidating and silver shooting higher. Hey, Luke.
What's up, guys?
What's up? Good morning to you. Wonderful Wednesday today. FOMC.
Wonderful Wednesday. W's. All right, I heard you say only 350 viewers and 81 likes. I know we're still heating up. But again, community, we do this all for you. We launch product for you. We build update our technology for you, the plans for you, the pricing for you, the promotions for you, and of course, MFTV for you. Again, we want to do this together in conjunction. So if there's something better that we ought to be doing, let us know. If not, share the stream with your grandma, your ex-girlfriend, your current girlfriend, your second girlfriend, your uncle, your aunt,
your wife, your girlfriend, your boyfriend.
Yeah, exactly. Yes. Barbie's got it. Exactly. That's who we need. What's the bounty at, Terry?
We have not set the bounty yet. Let's set it. What are you guys thinking? Chat.
What are you guys? We got to impress Luke. What are we gonna do? Luke's here. What are we doing for Luke?
Nick G says 500.
It's a lot of 500s, but come on.
Yeah, we're so close to 500. Already.
I'm saying 7.
7?
500 all the time.
Skill, so 700. Ooh,
yeah, let's be more ambitious.
And Barbie, what do we have to look forward to in the next hour or so?
Just some stocks and some futures and some trades and some fun.
Okay.
Woohoo!
Great.
I see a 777. I think that was Mr. Smith.
And if you're really nice, I'll bring out the stress balls.
Yeah, I'm still on. I gotta upgrade the collection.
I think
the eggplant was really hard to find, actually.
Really?
Yeah. Oh, I think we should set 777. Oh wait, only 7. Yeah, I like 777. That's the lucky number. Let's do it on FOMC day.
Triple sevens, lucky number, great airplane. FOMC day. All right.
Great airplane, huh?
Did you guys hit the bounty yesterday? Like before y'all got off? I think it was like 1,200 or 1,100.
Yeah.
Okay, you did. Oh, nice.
We got there. They rallied it up. So, all right, I just popped in and started interrupting.
I love it when you interrupt, though. Give her
do.
a things.
All right, maybe can I do one of the giveaways today, Terry?
If you're not-
Absolutely.
All right.
You can.
If we get
We
there,
love it when
chat.
you come by.
Share the stream.
Let's impress Luke today, you guys. Let's
I
get those
love that.
numbers up. Thanks, Luke.
All righty. Thank you. And it looks like we did hit 15K subs.
There we go.
Oh my God, we did?
So we might need to celebrate that one too.
Nice.
Yes, let's celebrate that one. That is a milestone.
What's that
Mine is
mean?
only
Like when
showing
you
14,000. 9 something. I
what's
think
the
we need
mean? Like
100
when
more.
the group gets an A+ in the project and you didn't participate. You know what I mean?
Like you right now, Nick. We'll get you going here.
That's hilarious.
Is mine delayed? Mine is showing only 14,009. Does yours
Yeah, I
say
think
15?
you're a little delayed.
Okay.
Keep up,
Let's
Terry.
celebrate.
Yeah,
I'm
mine's at
delayed.
14.
I'm behind today. What the heck?
Woo.
It's still delayed. I don't know.
Benchmarks
Yes.
are fun. It's like
Bill
hooking a
E
little
says,
win in front.
woohoo!
Feels good.
It does feel good. Yes, and it's midweek. Some people call it Hump Wednesday.
Hump day.
So,
Yeah.
Hump Day.
Hump day.
Yes, like
And-
the camels.
Hey, Luke. You know what we haven't done in a while either is the OOTD. Look what arrived in my mailbox.
Wow, look at that.
I'm official.
What a
Woohoo.
wonderful
OOTD.
Very nice.
Thank you to
I'm
Matt
much more
Leach.
boring.
Thank you, Matt. That we're all here. Free shirts at 15K day, Bill E says.
Yeah, there we go.
We can give out shirts. Do you guys want to do shirts at some point?
Yeah.
I mean, am I modeling it great for y'all?
I think people
That's
would
sick,
love
yeah.
merch. Chat, if you would love merch, type in why you want some merch in chat. Let's let Luke know. I know I want merch. Mike
All right,
says
I'm seeing
yes.
some wise.
I
Yeah,
would say
I
I'd
see
like me a
why.
hoodie, but it's freaking
Okay.
100 degrees here right now.
Yeah, there is that. I normally like a hoodie too, but
Abish
it's
says
literally
yes.
100 degrees here.
Like 90,
Well,
that's
she
90
says
degrees
yes.
is at the cutoff for hoodies.
For
Is it?
hoodies, unless you
Like
turn on the
rocket
AC.
But that's with the AC.
With the AC,
That's okay.
no.
We've been using the hot tub in the heat. I don't care. It's awesome.
Okay, I see a lot of people want merch, Luke. Can you
All
hook us
right,
up for
so
some giveaways with merch?
Maybe, just maybe. Next week, make sure you subscribe to the channel. Next week, we'll do a merch giveaway. How's that? I just need some time to get everything in order, figure out what merch we have and all that.
There you go, y'all.
See, we
Yeah.
listen to you. Voice
Yeah.
of the people.
You guys are
Apparently
awesome.
there's merch.
We already hit the bounty. Good job, guys. Luke,
Yeah, 865.
chat's on it today.
All right, that activates a code.
Yeah, so once we hit a
Dun,
bounty, it unlocks the treasure. So we don't know when the prize will drop. It will drop. It can drop in the next minute, 2 minutes. It can drop in 20 minutes. We don't know. It's always a fun surprise. So everyone stay tuned and we will keep showing our screens and trading and talking about air conditioning and
I've been
fun
trying to get air
ideas.
conditioning in my old truck. I'm still working on that though.
Yeah, Barbie's working
I
on a
was
car, you
missing
guys.
one piece. I was missing one piece. But I got it. I just haven't had time.
So the market is we're just chopping around. It's green. NASDAQ is green, 55 points right now. Market will be opening in about 6 minutes. We are trading above VWAP. So we'll see what happens. I'm kind of expecting chop before FOMC, unless we get a tweet.
Yeah, I
Anything
mean, the default for FOMC day is chop. But
Yeah.
but this is a Trump election. I mean, this is Trump era. We've got Middle East drama. So even and we've got wide ranges. So even if we're in these nasty conditions, we still might be able to find a couple of things. So we'll watch.
All right. We will keep our
It's not my
eyes
favorite
peeled.
day. Yeah.
Yeah. So it could be a sit on our hands day.
It could be.
It could be, but we will
I'm
keep
not
our
looking
eyes
for that big
peeled.
trade. I talk about that a lot. Like a lot of days are just average and boring. They're like the B days. But sometimes we have that A day. And if I can get a few of those a month, that's, really nice. So I'm not expecting that A day today.
Okay.
That's kind of the way I look at it.
Do you guys trade FOMC?
Not really.
Like-
I have with options because then your
Yeah.
risk is defined. And if your stop loss gets screwed, you're still like that option's going to go to zero, not your account, which is nice.
Mhm.
But it's really hard.
Yeah, it can be a coin flip. Like you just don't know what the results will be. Nick, do you typically trade after the news comes out?
No,
Or like during the press
I have in the
conference?
past, but like, I mean, we stream the PM session in the Discord, but like, I usually don't trade it. I'm usually not in there in the PM session. I just don't like how the PM session moves. The one thing I like about 9:30 or the AM session is you get 9:30 open every single day. Like, when it starts. However, with FOMC, that news driver comes in at 2. He speaks at 2:30. It really depends on like what the charts are looking like beforehand, because if they don't look very nice beforehand, the odds are they're probably not going to look very good after, at least for me. But you never know. It's like if I was to trade PM, today would be the day to do it, I think. But I'm not really anticipating like a rate cut or anything.
That's the thing is, if you are playing it with options, you want to get a massive, massive move, because if you're going to buy a call and a put at the same time, one of them's going to go to zero. So that means you have to make more than 100% on the other one to make any money. And in order to do that, you do have to have the massive move. So given that we're not expecting a rate change today, we're probably going to get a move that kind of goes back to zero in some way. We might get a grind up or down afterwards, but that murder candle, that big terrible candle, it's probably not going to be huge, because we're not. It's when we get a big surprise or something like that, and we're not
Those
really
big candles. You usually get those on like CPI or NFP, right, before the market opens. Unfortunately,
well, yeah, but you can get those on the FOMC too, just not lately. So like
lately,
during Biden's time, when we were not sure if they were actually going to drop the rate or not, or have a pause, or what was happening, it's those surprises that would give us the massive candle. We're not in an environment to get Fed surprises right now. He's been very, very boring. So
right.
Yeah. Market is
early 2022, yeah, like when they were doing those rate hikes and stuff like that. I remember that. That was crazy.
So everyone, fill out the survey. What's your bias ahead of FOMC? Barcode, of course, bullish or bearish? I just voted. And market will be opening in 2 minutes. Still, NASDAQ is still up 42 points. We did have that news at 8:30 Eastern time. It was pretty muted, right?
yeah, a lot of unemployment
right
claims,
here.
and they came in as expected. So we were just kind of talking about this, but anytime there's a big news drop, when we get the big reactions out of that, it's because there's a surprise. It's not come in as expected. So if we have a really muted reaction, that's usually because it came in as expected. You don't even have to look at the numbers. You can tell if it came in as expected or not.
Just based on what the candle looks like.
Yeah.
So when I see this, just the moving average is kind of lined up with VWAP. That tells me too that we're just chopping around. We might go back to unchanged. We're 40 points or so green. Would be a great gap fill back down on FOMC day, but we never know. I am planning on playing the scalp fill down. All right, I am short 3 contracts. And
I love it how you're like, oh, I'm thinking about doing this, and it's done.
and it's done. Let's go. Let's go. Okay,
I'm
it's in
leaning
the
short
money.
too, but
There you
Here we
go.
go. It's going. It's going. 160, 180 point or dollars. I'm sorry. Oh, it's going. Come on. Shoot, I should have got out. All right, I'm gonna get out.
Terry does not mess around.
Okay, 100.
Yeah,
about
you
100
gotta
bucks.
go. You gotta go fast on those opening candles, man.
I know. Done.
Balls of steel on that one, y'all.
Win. Okay. Now I got out of my.
She doesn't need the squishy stress balls. She's got the balls of steel.
Yes. Thank you, Barbie. So that was my MNQ chart. And so I'm going back to NQ to look at it. Yeah, you got to be fast on that open.
Yeah, there you go. Full port Terry in the house. That's from Pine Tree.
Yes. With how many micros did I take? 2 or 3? Yeah, I am being better at that, you guys. At less full.
She's in micros. She didn't take 5 NQs. So.
Tiger Sleep says, nice call, Terry. Thank you. All right. Market is, it looks like it went back to unchanged.
Yeah, it's probably going to like to do that. We're also at a magnet level on ES. So that was one I had identified early in the week around the 60, 43, 45 area. That's where we are. So that's another point for chop.
Right. So this is the hourly. This is the range that you were talking about earlier.
Yeah. I mean, you can, when you zoom out, you can really see it's where all of that just stuff overlaps. All of that little consolidation price action. There's a lot of little wicks and things, and you can kind of draw a box around all the little wicky areas, and then you can see all of the little touches that we've had on the hourly within there. And on what strategy you're using, you're going to put an order on different little levels within there, and that can create chop when you've got a whole bunch of participants with a whole bunch of things all inside of a little box. And it's also so the big hedge funds are not just putting an order in market at 60.45 or whatever. They have to do their business over time and price. So they're trading in a box. They're not trading on a line. They're trading in a box. So it can be a position building inside of these things too.
Thank you.
Oh, there's a big old ugly candle.
Yeah, it is pushing down.
Are you still short, Terry, or?
I got back into a scalp. Just a tight 200 point risk for 500 target. I'm seeing a break off the hourly, the lows right here. This is why I got into this short, and I am going to trail this stop, protect some gains. I might get stopped out, right? Because it is a tight stop. But I think risk is off the table, so we just let it run. Hopefully it hits 500 bucks.
What's your where's your target at? 860 or where?
The take profit is at 925.
Oh, okay.
So I put this trade on because I saw the break of these hourly candles and it was pushing. So I just hopped in. I've had some good success with this 200-500 bracket because I can get 2 wrong, and as long as I get 1 right out of the 3, I still walk away with 100 bucks. So that is why I like that bracket. Do not copy me. Don't copy any of us. Don't ever copy anyone on YouTube, guys.
That's good advice, by the way.
Yeah. So I am getting better at trailing stops because that is something that I've struggled with. Like I typically have liked, a big stop, big take profit, and then just let the trade run and work. And but the problem is that if it goes in your favor and then if it comes all the way back, and then sometimes you walk away with a loss, and that just really hurts mentally. I think there's like that mental game, right?
Yeah. Well, I'm still not seeing anything. So there's mental game for me too right now. So you're sitting here printing and I don't have a setup, so I'm not entering. So that's
Same
that's
here.
kind of the mental game here too. But yeah, I mean, I don't have my VIX set up. I don't have my volume set up. So
Yeah.
I'm chilling.
You have to play your game.
I showed overnight on a CFD account like later last night in Asia, but nothing on futures. I was hoping to take advantage of this retracement. Yeah, it looks like
Yeah, we had a
you said
beautiful retracement.
925.50 is your take profit.
925, but I did bring down my stop more. So my stop is at 945 now. So I'll lock in about 5 points if the market comes back. Okay, my stop is at 944.25 now.
Nice, yeah.
So it might take me out, and that's okay. I'll lock in at least $100. So it take me out. Done. I think I'm done trading now for the rest of the show. That's 2 trades. I have been working on limiting my trades, guys. So
especially when you're winning. Yeah, I think we all have that where we have a great morning and then we just want to keep going. And so we push into what's kind of outside the plan and all that. And that's what gets you, isn't it? It's
yes,
creative
exactly.
outside of that.
You can make a bunch in profit and then just like the feeling of wanting to click the button and just like the winning high of like, oh, every trade I put on is winning. And you think that's going to continue, and that's not necessarily the case. Yes. So I'm going to practice sitting on my hands. Thanks, guys. Thanks for encouraging me.
Good job following your plan and getting it done and locked up.
Thank you. Make sure we use those stops.
Yeah.
Yeah, one thing I like to do for stops too, like to trail my stops, is like pay attention like when like order flow is starting to like flip the other way. So like these gaps I mark off. Like if I was short, like let's say I was short up here and then like 22,000. If I see this gap get like completely inversed, that's a good place to trail the stop. But like if it's all right if it comes back up in here a little bit before going lower, because I mean like it's not. I don't anticipate it to, just keep selling off, 3 or 4 red candles in a row, but it could come back up into here. But I feel like invalidation levels could be used to, put to trail your stop loss in the right way of order flow. Like if you're bearish, you don't want to see bearish signs get disrespected. And once they do, then that's a good place to trail a stop loss. At least that's what I do.
I'll trail real tight. And I was actually watching that too. That's why I'd kind of, I don't know, in my head, I'd brought up VIX. Maybe I didn't say it, but I was watching VIX is kind of on a 5-minute bear flag that is now breaking. And so that's what I was watching when she was still short. I was watching that bear flag break. So at that point, that's when I would have been trailing super tight too, to make sure that.
I'm watching the 15-minute close here. Like I want to see us displace through these lows, because these gaps to me are like this is like a bullish gap and this is a bearish gap. So I would like for one of them to get disrespected, preferably this one, and go lower towards these lows. But if it keeps doing something like this and bouncing between it, it's most likely trapped order flow, and you're going to see a lot of range bound conditions. And we have had seen that for the past, since Asia, really. So hopefully not. Hopefully we get some direction, but
we'll have some single prints down to about 60-30 on ES. So that's what I would really love to see tagged, is that 60-30. Do I have my
on ES? You said 60-40?
60-30.
60-30.
Oh, we've really got single prints all the way down to 6,000 too. Wait,
yeah, it looks like we just put in equal lows down here too on ES. So if I'm not mistaken, yeah. So we got equal lows on ES. And we also have equal highs on ES up here. So it could do one or the other. Like I said earlier, and like before market open, anyone who knows where the daily range is going to expand to is, I think they don't really know. It's just kind of guessing. Yeah.
This is a really nice target down here, just kind of based on that gap down overnight. It's been filled, but it was filled and kind of gave us a single print. So I don't know. I don't put a ton of stock into the extended hour single prints, but it is still there, which makes it a pretty nice target. The 60-30, which we're not far off of. But yeah, this is kind of that choppy conditions. You still have VIX coming up too, so it's going to be harder for ES to make that move lower with VIX coming down. So we're pushing down to mid 20s right now. If it breaks through 20s, it'll probably move back up. But if it finds support down here and bounces back up, that's when it'll help us tag that 60-30 level. But yeah, it's definitely leaning into chop, at least initially. Like what happened yesterday as I was like, I don't see anything. I don't see anything. I don't see anything. And then it's like it opened up. I was like, oh, there it is.
There it is.
That's why I'm like still waiting to see if that little sweet spot opens up and everything starts making sense.
What are you thinking for the 15-minute orb, Barbie? Would you take it today or skip it?
I don't know. I mean, it's the choppy conditions, so I'm not super excited about taking it today. And like yesterday, we ended up choppy. I don't remember how it ended up completely working out because I didn't stay in it, but I ended up just kind of scratching out of it. So because it was kind of those conditions that we didn't like. I mean, the FOMC days aren't great for it. I'm really hoping I can get something better because my other trades tend to pay better anyway, but we'll see.
All right. Market is just chopping around about unchanged. It's not doing much. Do you have chart of the day, Barbie?
Yeah, well, what I was going to look at is I was just looking at stuff that we hadn't really talked about because earlier this week we had so many things come up. I was looking at NVIDIA because NVIDIA has had a ton of news. So let me see. I had pulled some articles that I could tell you all about so I can make sure I don't miss any of the things that have been developing in NVIDIA. But there's the U.S. CHIPS Act, and that could be potentially helping NVIDIA here. There's all of that tariff news with the semiconductors and everything. That's a lot of this drama that we've had on NVIDIA. I saw a lot of bullish flow still coming in, not just on NVIDIA, but on the stocks that where they're buying, people who buy NVIDIA chips, like the other tech stocks. There's a lot of talk about bringing some more cloud services and things over to Germany. So that would be something that would definitely go along with the current idea of getting some of this stuff out of China if China's not being cooperative. Hopefully Germany is. So that's one of the options that they were looking at. So that would be where they're bringing some cloud manufacturers for their cloud chips. There's kind of been a lot of stuff. NVIDIA's been kind of all over in the European news. Lots of announcements with European partnerships and things. This dip that they had, that's what I was kind of mentioning. This is like all that geopolitical stuff. So these geopolitical gaps, they keep getting bought up. So this is the 15-minute, but if I even go out to an hourly, every single little geopolitical gap down that we get keeps getting bought up. I mean, this chart is just bullish, bullish, bullish. And I love NVIDIA. Every single time we get a good little dip close to 100, I've been loading up on NVIDIA. There's still like just massive, massive, massive. The amount of value in this stock right now is absolutely insane. So I keep trying to find a reason why NVIDIA is not worth buying, and I can just never find it. And I think that's the same thing that a lot of the bank analysts and fund analysts are kind of dealing with too, is every single time there's news against NVIDIA, they'll end up pulling through with some actual good news. So you can't keep them down. They've got orders through I don't remember which quarter, but quarter 2 or 3, 2026, they've got orders for their servers that are their chips to go into servers and everything else. And they just can't keep these things on the shelf. So that's, until that changes, I don't see the bullishness of NVIDIA changing. Who's with me? Where are the other NVIDIA degens?
There's not a whole lot of was it earnings this week? Is there for stocks? I thought
no, we're through all the big tech earnings. Tech earnings is nice. It's a really good time to kind of look at all these, but we're through a lot of the big tech earnings.
Yeah, I was at the first of the month, I believe. Yeah.
All right, market is around 25, 24 points in the green in NASDAQ.
Just hanging around our magnet zone. Yeah.
Yep. Right
Looks
around.
like you got it out at the right time. 935, 21,935, and then it just ran a little bit lower. And now it's shooting higher. So
yes. Thank
then you gotta,
goodness for my stop, for my tight stop. Otherwise, I would have taken a loss. What is one thing that everyone is working on with your trading game? Barbie, you want to go first? And then Nick, you want to go? And chat, I want to hear from you guys. What is one thing you're working on to... Oh, there's a code! Fed Day 50! Woohoo! Let us know if you got it.
I'm going to give everyone a minute. I don't want... Nobody's going to listen to me. Go get your code and then come back. So I guess we're going to talk about kind of what our current... We're going to talk about what our current kind of... What we're working on in our trading, right? What our current...
Yes.
Because we're all on a trading journey.
that was
Whether
quick.
you've been doing this,
I didn't see that.
yeah.
That was
Whether you've been doing this a month or years, we're all on a different part of the journey.
Yes, and you are perfectly fine. You are good exactly where you are. No one becomes an expert trader overnight. This does not happen. No one is born a top 1% trader. It takes years, right? So in order to get there, we
get rich slow.
Yeah, get rich slow. So in order to get there, we need to stay focused and focus on the skills needed along the way. And so, yeah, let's share.
Well, so right now, I'm kind of, I mean, me, because I'm doing so many things right now, I have too many balls in the air. So what I'm focusing on is focusing down and just keeping really organized. Because I feel like the stage I'm at now, and I've guided y'all through kind of how I got here with working on one trade at a time and becoming an expert in this setup and in this skill, just doing that over and over and over again until I had a playbook of, 5-6 things that I can do really, really well. But now I have this playbook of 5-6 things. I'm trying to automate them. I'm doing it in my own personal funded accounts. I'm doing it in retirement accounts. I'm doing it in prop accounts. And it's kind of chaos. And so right now, my big thing is getting organized and getting really kind of more professional about how I'm managing all of these different accounts and plans all at once, because it's a challenge.
Mm-hmm. It really is.
I think for me is just trying to trade, be a lot more picky with my setups, because like it's hard when price is, consolidating like on the daily, like I was talking about. But the one thing I like to look at is go back in my journal and look at the trades that are like my A+ setups, my A setups, and that helps me realize that, okay, in a couple of days the setup will come. It may have been a couple of days since it's happened. I just need to be more patient and let everything come to me, because that's usually why I do the best. And rather than just coming here and like enforcing my hand on the market, forcing my bias and my narrative and things of that nature. But yeah, that's probably the one thing I always try to work on. And definitely it's harder to do in conditions like this because we move so much that people think, we're just going to keep moving. And then all of a sudden it slows down. That's when people, right when it starts to slow down in terms of like daily ranges and stuff like that, it gets hard to trade because people are so used to volatility, and don't get me wrong, it can still be volatile. It's just going up and down rather than just going one way like it was a couple months ago. So
thanks for sharing, Nick.
Yeah.
And Barbie, where are we
I
at?
did end up taking this orb because I liked how the VIX was coming down. So we'll see. It's a kind of smaller range. We'll see if it can do anything.
I like that entry. It looks like it's also like a nice reversal off that opening 5-minute candle. So let's get our likes. Let's get our likes up. Oh, our likes look pretty good. Let's get our views up. What should we set the next bounty at? What do you think, Barbie?
Chat, help me out. We've got a lot of likes. Should we do one for viewers?
I kind of got set up here. I just popped up.
Yeah.
So
Ooh, let's see. We'll come back to the bounty. Chat, let us know. We'll come back.
Yeah. Type in, I'll pay attention to the chat. Let me know what we should set the next bounty at.
The one thing that makes me a little hesitant is the fact that we have been in this range and we haven't had a clear breakout of it. But given how the 15-minute candle is about to close on NQ, the previous 15-minute, how that closed, and there's an SMT of these lows, ES did not run this low. A close above this 5-minute candle here in the next, 15 seconds actually on ES, since this is actually the stronger pair with a retest of 60.48, stop right here, targeting up to, you could take it to these highs actually. I think would be a good play if you want to take something. Like I said, my only hesitation is just we haven't broke this range. I would like for us to break it before participating, but this is a pretty good setup. I'm anticipating something like that to happen. And if you miss it on ES, if it doesn't give a retest of this green line, you could potentially take it on NQ, and it could catch up with ES. So that's kind of something I'm watching right there.
That's been what's happening a lot. I've noticed all of a sudden lately, ES has been leading us on all of these little bullish charges and kind of dragging the NASDAQ.
Mm-hmm.
This is over and over again lately.
My setup on Monday was ES, and it worked out. It worked out nice. It's just a little slower, but it's usually like the stronger or the weaker one.
That's why I like NASDAQ for breakouts, but lately.
Right, yeah. For sure. Let's see. I'm going to mark this off on NQ too.
Yeah, it's doing it again. ES is a little bit more powerful again.
Right.
Again?
ES hit trail on the orb and NASDAQ has not. Again.
So bounty update. We think we can hit 1,000, you guys. We do have a special guest coming on in 9 minutes, VolaTrades. Let's share the show. Let's get the likes up to 1,000. I know we can do it. We've done it many other days, so we can definitely do it today, and that will unlock the next giveaway. Everyone share it on all of your socials. Smash the like button if you haven't already. Just a reminder, right now this week's promo is if you buy a Starter Plus account and or Expert account with code YouTube and you pass the eval, you will get one for free, which is awesome. And you can take as long as you want to take to pass it. You don't have to pass it within a week or within a few days. So use code YouTube for that. Up to 3 times you can do that. All right, let's get those numbers up, you guys. Let's do it.
Pump it.
Pumping it. Market is pumping higher. We are in the green, about 60 points in NASDAQ. Barbie, your trade must be looking pretty good.
It's looking okay. It's looking better on ES, like I keep saying. But if we get this wick up here, that's my trail spot. So we had that wick pre-market around the 30 level on NASDAQ. So that'll be when I trail to break even and change. I want to cover my commissions with that. So I'll go just a couple ticks over that.
Nice trade.
It's going. The ES one, if you did take it on the same setup on ES, has made that trail spot. So that's all right. That's all right, Nazi.
Magnus said, I highly doubt that was the low of the day. All right. What are you thinking, Magnus? What are your thoughts?
Well, ES has that little spot it hasn't gone to yet, but we'll see. We could be checking higher, back up to that 63 level on ES.
Yeah. Let me check on the poll. What everyone
it was tested pre-market, but it was not tested regular hours, and that is a single print from RTH also for the market profile nerds.
Okay, so the bias of our community is barcode, of course, 49% voted for that. Bullish, 33%, and bearish, 17%. Our community has been on it lately. So I'm thinking it's going to barcode. I'm going to go with whatever our community majority thinks. Because you guys
we only trade based on the poll.
Oh, yeah, we did talk about that, about getting an account and just based on our community vote, making trades based on that.
I'm trailing this just a little bit early just because I feel like it, because we're kind of choppy. But the VIX is still looking good.
Prom said Magnus and Abish should come live one day. That would be really fun.
We're working on
Abish-
that. We want Magnus live.
Yeah, and Abish too. You guys do so much to keep us in line and to help cheer our community on. It would be really fun to bring you on. I don't know if you guys want to come on. It would be really fun though.
Who all have you guys had on? Like Luke, obviously, and then you had, I think, was it Matt was on like last week or something? Who else was on? Who's been on?
Tanya's been on.
We got a
Ray
bunch of
Trades
people.
has been on. Yeah, a bunch of people. Zero Day J, Cove, Pine Tree Trader, Trading with Travis. Bunch of other people too. I can't think right now.
Yeah, so we got the 5-minute candle close on ES above that level I had marked off right here. Oh, sorry. 60.48. NQ did not close above it. But if you have your limits set on ES, that could, still be the play. I think these highs are, maybe imminent. NQ,
I ended up getting stopped out on mine. I moved my stop too soon, but oh well.
The hourly chart looks pretty bullish. I'm anticipating it to go higher, but
yeah, I fumbled mine. I should. That's why we have the rules where you don't move your stop until it's time.
Yeah.
Well, I didn't FOMO in. I took the right entry. I moved the stop too soon because I didn't feel like looking at that chart anymore.
How many charts you usually look at?
I've got 3 monitors. I don't know how many charts are here.
I have 3 here too, but I only look at like 4 or 5 charts. So like you stocks and futures.
Well, yeah, because I have this one just for stream, so it's not the one that's connected to the accounts I usually am rocking. Oh well.
We are.
It's just a fumble. It happens. I'm not a perfect trader. Newsflash. I'm not perfect.
No one is. Even the best of the best. They do not think they are perfect.
This
traders.
is one of the things like as a new, like when I started getting good at identifying plays and level and sharing them in a group, this was something that I had to deal with because it was sometimes I would fumble it and then someone else in the group would nail it. And it's like, that's not fair. But that's just a weakness that I had to work on. And I'm still working on. But partly I'm just nervous because of the chop and I saw the VIX slowing down. So that made me trail it. But I mean, we all second guess ourselves. So.
All right, you guys are doing good. We are pumping up those views. Keep going. About 290 more and we will unlock the next bounty just in time for VolaTrades in about 3 minutes. VolaTrades will be joining us to talk about market strategy and what he's looking at. So let's keep pumping those up. Let's hit it. Let's get the numbers up for VolaTrades, you guys. Share the stream. Share.
I think so many people like married to like news and volatility too. So like they know FOMC's in the afternoon, so like they're just gonna wait until FOMC and they start trading.
That's kind of me too. Like I'm not a big trader on FOMC days, and so I don't know. It doesn't happen real quick. I'm probably gonna not be that interested. I'm here with y'all, so I'm here trading it. Otherwise, I could like be at the mall. So.
Yeah.
You rather wait? I'm sorry, Barbie. What did you say about the mall? I heard you say mall.
I could be at the mall. Because no, sometimes like when there are conditions that are just not favorable to the trade setups that I like to take, sometimes my time is just better spent elsewhere. We just have a joke. It's like the Billy Madison thing. It's like, do you want to go to the mall later? We just say that all the time, but nobody's going to the mall. Nobody goes to the mall anymore. Who goes to the mall?
Lucas said we hit it. Over 1,000 viewers watching live. Awesome job, guys. Woohoo! So that unlocks the next bounty. And let me confirm what that next bounty is. Let me see if I can find out. While I confirm that, let's welcome our guest, VolaTrades. Come on down.
What's going on? How we doing?
Hi. How are you?
Good morning.
I'm good. How are you? Oh, we got to get rid of, it's only the 3 of us.
Oh, shoot.
I feel bad.
I didn't get to say goodbye to Nick.
Just kick
Nick-
Nick
That's
to the
okay.
curb, huh?
Nick had
Yeah.
to go. Okay,
We'll make it
don't
up for
worry,
him.
guys.
We'll make it up to him tomorrow.
Yeah, Nick will be back tomorrow.
Oh, he said he's got to leave at 10 anyway. So
Yeah. Vala, how's your morning going so far?
it's going pretty good. I did try to get a trade on that dip down this morning at open. It was like 9:33, 9:34. But I tend to be a little bit more careful at the open because you never know when that thing is just going to continue in one direction for a very long time. So I tend to not trade in the first 15 minutes of market open, but if it's a move that I really like, I'll still take a stab at it with smaller size. But unfortunately, I didn't quite get the move I was looking for. I was looking for the big move down towards 21,900 on the NQ.
Yeah, that's that same look I was looking for on the ES, and I'm not really getting it either. That's why I'm like, ugh. But that happens. Sometimes you're waiting for a plan that doesn't happen, and that's part of trading.
This is true. But yeah, I haven't had a trade all week, so
Really?
I've been pretty frustrated. Everything's been kind of sideways.
So you're getting your patience tested.
Very much so. Weeks like this are not fun. But I mean, yeah, I didn't even notice my chart was the one that was up right now. But yeah, I had it was yesterday's close as well as where it kind of found support over here in the pre-market. So I was really looking for that nice dip below there, and then we would have been looking for a retest. I would have been looking for a long position for a retest of that area, but we only got
Now we're moving back down. Maybe we'll still get it. We could still get it.
Be nice.
That's what I'm still waiting for. I like the long better after we finish. The way I look at it is we're going to wrap up business in one direction before we head the other direction. So that's what I want to do.
Gotcha. Yeah. I was actually rooting for your long to go a lot further because as you can see, I have this line drawn as well from pre-market.
Yeah.
And I was looking for it to blow through that up to the highs, but we didn't get that either.
Now I'm glad I protected it because now it's back underwater, but we'll see. I would have felt a lot better with it if we'd done that little sweep, but
yeah. That's what I mean, that's literally my trade is those sweeps. I'm just looking for a decent little move through there. When it ranges like this, I sit here and hopefully have a good conversation with my chat on my stream and let the time pass because
that's the great thing about having the community. Yeah,
exactly. Yep.
Does your chat get a little rowdy? My chat gets a little rowdy when the market's slow.
Yeah, they start. That's when they start asking for things a little bit more often because they're not busy trading.
So mine gets a little rowdy. It's
silly
fun.
questions.
It's fun,
yeah, I always do a ask me anything. Sorry, I didn't mean to cut you off, Terry.
Oh,
I do ask me anything, and they'll ask some weird questions every once in a while. But I put myself.
You should try being a girl trader and see what kind of questions you get.
I'm sure. I mean, you do kind of egg them on with your.
I do. I do say we should have some live nude trading someday.
But that would be interesting.
It would be interesting.
Everyone fill out the form. The form did drop. Good job, guys, hitting the bounties. So fill out the form for a chance to win a free account, which is awesome. Not just a reset, which is, I feel like, also a free account because it's fresh, but also, but with the form, you have a chance to win a free account and it's not based on speed, which is nice. And hopefully we can do the wheel later. I hope so.
Hopefully.
We haven't been able to do it for a while, I feel like. Right, Barbie?
Yeah, I always let Ash or somebody do it. I mean, they're cool too, but when's our turn?
I love the wheel.
Chat, help us out.
Yes, everyone fill out the form for a chance to win a free account. And we will announce the winners. Roman Art said, I'm addicted to the wheel. Yes.
Yeah.
It's very addictive
to do it.
To be able to announce all the winners.
So typically for anyone that doesn't know my strategy, I'll have key levels drawn out like this, and I'll look for a big extension away from those key levels on the break. And then I'm looking as the closer I can get to these Keltner channel bands, the better, because then the odds are you're going to get a little bit of a retrace. And so if I can get both all at once, so like if we were to break this 22,030 level and go straight up to these bands up through the 22,050, that'd be perfect, because then I'd be looking for an eventual retest of this 22,000. It's basically support resistance. That's really all it is. So, but the bigger the move I can get through a key area, to me, the higher the odds of a retrace. So, but if it starts grinding like it has been all week, I'm just not interested, because we have been getting some moves up and some moves down. It's just they've been kind of grindy and slow. So there's really nothing there for me.
I'll have those weeks though where the market just doesn't cooperate with me and I see other people making money and it's frustrating. But I swear, if I just keep my head on straight and keep being patient and keep waiting, it all lines up the next week or the week after that and makes up for it.
Karan just said oil just fell off the cliff. Let's take a look at oil. What is oil doing?
And the US dollar. Okay, so Trump says he cannot say whether the US will strike Iran. Iran has a lot of trouble. They want to negotiate. Nothing is too late. Iran has reached out. And he's talking about Fed rates too. But if the Fed would lower rates, we would buy debt for a lot less. Powell will probably not cut today, as he has done a poor job. So the reason that Trump wants the rates reduced is then that's less interest that the U.S. is paying on U.S. debt. So that actually makes a lot of sense. And I'm not saying it's right or wrong to lower the rate to do that, but that's what he's after. But I do think I think we're having Iran news, which is the oil catalyst.
Okay. Anyone trading oil in chat?
It's CL, right? Is the
CL for crude oil futures.
Yeah, I don't even see it on my. I can't tell you the last time I looked at oil.
I used to trade it back in the day.
So
I feel like everyone was trading it back in the day. It was like as popular as NQ is now.
Yeah, unfortunately, we're not getting that move up. We're just kind of ranging, barcoding, as you guys call it.
Yeah, it is. So how do you stay so patient, Vola?
Well, it's actually a much simpler answer than most people will believe, but just years of pain. You go through it over and over again, and you watch yourself make the same mistake over and over again, and then you finally just one day it kind of clicks, and you're like, I should probably stop doing that. So you know you have a system that works, and every once in a while you are having a boring couple days, and you're like, you know what, I want to trade. Well, then you force a trade, you lose, and then you're like, why did I take that trade? That was not my strategy. I have no edge in that trade. And after you do that enough times, eventually it will click. And it's one of those things that we can all sit here and tell everyone in chat to not do, right? We can tell them not to do it, but until they experience it themselves, it's just not going to click. It's the unfortunate truth.
It doesn't always click right away too. I don't know. I got kind of think of that old thing that they say. I don't want to word this wrong, but it's like idiocy is doing the same thing over and over and over again and expecting a different result. So I don't want to be an idiot. I don't want to do the same thing over and over and over again and expect it to work out this one random time. That's why I always think about it. If I'm making the same mistake over and over and over again, it's like, stop being an idiot, Barbie. We're not being an idiot.
Right.
It does take time.
Yeah. Everything takes time, especially in the markets. It's all about time in the market.
And what I'm hearing both of you say is that it takes not only time, but many times of touching the hot stove. And then finally it'll click. And it's like, okay, that stove is really hot. I should not do that. I should not touch the hot stove.
Yeah. Some of us can be a little dense and slow.
Helpful in chats is saying we're referring to them as toddlers, and it's actually not a bad way to think about it. Like when you first start trading, if you want to think of yourself as a toddler or even a baby, I mean, it's true. Like you have to progress through each of the stages in trading, and you have to learn certain things along the way. So, I mean, if you're new to trading, then I guess you could consider yourself a toddler if you really want to go that route.
Yeah. Sometimes I'll picture like school levels. So I'm in 6th grade or I'm in 9th grade and just advancing with every time something clicks. Because as you're going on your journey, different things will click and then you're like, okay, yeah, I got that. Like, okay, trailing my stop. Like, I've been working on that more lately, and it's starting to really click. It's like, okay, it's a good thing to do that. And right, so not full porting. All right, improving. We're just looking for little improvements, and to not be hard on yourself, I think, is such a big key.
Yeah, it
No
is kind of a
reporting.
basket of skills that we all have to get one at a time. There's our
Yeah.
fruit basket.
What was that at the open then, Terry?
Pardon?
So what was that
Do
at
as
the
she
open then?
says, not
That
as she
was
does.
not full porting. Oh my God, are you kidding me?
I'm just
You have to
messing with
watch me full port sometime. That was not full porting. Oh my goodness. No, that was good trading, actually.
No,
That
it was a good trade. It
trading.
worked out.
Yeah, thank you. Okay, so market, we are green about 72 points. And market,
You also made a good point, Terry, about like the grade levels kind of thing. That was a good analogy. To add on to that, I wanted to let everyone know, never stop trying to learn. Like, even if it's something that you're not totally interested in, I can't tell you how many times I've found like a golden nugget, like listening to a video or, you know, listening to an audiobook or something about something else. And you'd be surprised like how many things in life are related to trading and how you can take trading and apply those aspects that you learn, like discipline and patience and stuff like that. It applies to all areas in life. So if you're kind of like going through some self-care or some self-learning in any aspect of life, you'd be surprised every once in a while how it will affect your trading, and it'll give you some like aha moments throughout your journey. So like never think that you know enough is kind of what I'm getting at. Like always be on the lookout for like, how can I learn something new today? Because whether, you know, it might just be the chat joking around, like the whole like toddler thing we just went through. Like I would have never have thought of that, but it's actually a good way to kind of describe it to some people that are new, you know? So there's always something out there for you to kind of take from.
Definitely. The top traders are constantly learning new things. Like, I don't think this game ever ends. I don't think growth ever ends. Like, the best of the best are constantly pushing to become better each and every day. And that applies to everything, not just within trading, it seems.
It's very true.
Yeah.
Yeah, so market is 70, about 80 points in the green. NASDAQ is. Not too much is happening. It is pushing higher. How are we looking?
Yeah, we're kind of doing that walk up.
The walk up, right? Overnight highs is.
Yeah, I'm still watching that 60, the 63 level on ES. I have had a little bit of a long going here, so that's where I have my runner going to.
Nice.
Yeah, it is looking like it wants to go and test the overnight highs here.
I would have gone in a lot more if it had made that move lower, so I'm kind of like, but let's do it. Just go get it.
It's going. Go get it.
Go get 63.
Yeah. I'm
Let's
hoping
go.
you get some really big candles right now. It'd be nice.
I like big candles.
Up through the highs.
It reminds me of that song. I like. I'm gonna get in trouble if I sing that song.
What?
No, well, now you have to sing it.
Oh, okay. I won't get into too big of trouble. That rap song. Remember, I like big butts. I cannot lie.
It's a song they play on the radio. How can we get in trouble?
When a girl walks in with an itty bitty waist.
Yes, right.
Everybody knows that song.
Everyone knows that song. It's a good song.
Mm-hmm.
Okay, market is trying to push higher.
It is pushing. It's just doing the slow thing. I'm watching VIX too. It's still moving down.
There it goes. MyFundedFutures said, y'all.
There it goes.
Wild.
Yeah, I got my target. And I'm not in the NASDAQ anymore, which is just annoying me right now. But that's okay. We all have our misses. We all fumble our trades sometimes.
I thought you had a runner on, Barbie.
I just closed my ES. The NASDAQ one I got stopped out of because I moved my stop too early. I didn't follow the rules. It's my
Oh,
play,
shoot.
my rules. And I was like, don't do that.
It's
It
okay.
happens.
It happens. Exactly. No one's perfect every day. No one's going to follow the rules every day. I mean, most people probably not. As we're continuing our journey, right? The goal is just to improve a little bit each and every day.
I'm actually surprised we're getting even this kind of movement so far today, with FOMC later.
Yeah.
Yeah. That's what I was talking about earlier, though, is it's the market is not caring as much about FOMC because we have these expectations, but we also keep having all this bad war news. Like the market just does not seem to care about the war news. It did yesterday, but we moved up and then we were moving down off of that, and then we retraced that whole move. So, I know it sounds terrible, but the market's not caring.
Yeah. It's sad. But speaking of happy, because I love to feel happy and I love to celebrate, I see it's King Bing past 150K expert accounts.
Nice.
It's King Bing. There we are. Yeah.
That's a big one to pass. Congratulations. Let's celebrate some more. Drop in chat if you recently passed an eval or if you recently received a payout. We want to celebrate you.
I know that Noob in the Discord just passed one of the big accounts.
Hunter?
One of the eval to live. He just got an eval to live passed yesterday. So woohoo!
Woohoo! Congratulations, Hunter, if you're listening. Congratulations. That's a big one too. Let's see. Ren says I'm 140 off profit target. Nice trade.
I swear that last 200 can psych you out sometimes. So stick with the plan. Don't take any weird trades. Stick with the plan.
Yep, it does
Yeah.
sometimes. We've all been there.
It's like, oh, I can just get that real quick. It doesn't have to be a real trade. It still has to be a real trade.
Yep, exactly.
Otherwise, you're going to have $500 that you still need to make up. Because the market can be dicks like that.
Here we go.
Anything can happen.
There's
Market
your big
is
candles,
pushing
Vola.
higher.
Almost.
I would like the candles back at 10:02, 10:03. I would like to see.
Not impressed. Bigger candles. Bigger candles,
Yeah.
market. Bigger candles.
Barbie asked for them. They must give.
They must give. Just a reminder, you guys, it is this week's promo is if you buy a starter plus account and or expert account and you pass the eval with the code YouTube, you will receive another account, which is fantastic. It's like a reward, BOGO in a way.
It's like a reward. BOGO pogo.
Yes, BOGO pogo. Make sure you use code YouTube for that to help support the channel. And everyone, fill out the form for a chance to win a free account. Abhishek just dropped it in chat again. Thank you.
I have some major FOMO going on right now.
Are you
Royal,
wishing
we all want infinite resets in life, in the universe, and everything. Infinite resets.
Can you imagine?
But you gotta try to trade. Oh, there's your big candle.
Come on.
And I'm not in
highs.
It is pushing.
The highs.
Okay, the overnight high is 22,066.25.
No diamond hands Barbie today. We should see if Nick is still in this. I don't know if Nick's listening to us. I hope Nick's still got a piece of this.
Ugh. Legacy City got missed by one tick. That's the worst.
Oh,
Yeah, I've been there. Oof. That's so annoying.
Rich
Hopefully that was on
asked,
a take profit, not your entry.
Oh, sorry to interrupt. Sorry, Vol.
You're never interrupting me.
Thank you. Rich just asked if the weekly promo will work with the 50% off new account too. I believe it will not. It is so for any new traders with MyFundedFutures, you can use kickoff 50 for 50% off any account within MyFundedFutures, which is fantastic. It's like a nice welcome gift. And then you can purchase as a new trader, you can get that 50% off, and then you can go and use code YouTube to receive the weekly promo, which is fantastic. So we can have up to 3 funded accounts at a time. You can have more than 3 evals going, but max slots are 3. So just a heads up on that. So you can have multiple accounts that you're working on. I would say if you're a beginner, just focus on one at a time. I know it's very tempting to do many. I have tried doing many before, and I just got tagged in.
Cool.
I put a buy stop above overnight high.
So you're long now?
I'm long. Yeah, it's just a breakout trade, quick scalp. We'll see.
Yeah, I'd be looking for
we can
something
push.
up towards like 90 right now if we can get there. 80s, 90s.
On NAS.
Yeah. My take profit is at 81. Go.
Yes, go.
There it goes.
Go.
Yeah,
It's
Nick was
going.
in. He just
Go, go, go.
posted. See, he's getting his profits. I only got
Nick.
small profits today.
Woohoo! Go, Nick.
Y'all are getting big
TP.
profits though. So at least the team's hitting it.
All right. I am gonna get out of that trade.
I'm trying to be so patient here. It's so hard.
I know.
It is hard when everyone's like doing all kinds of stuff.
Oh,
I did
yeah.
not sit on my hands. I failed, you guys. I got an F today.
I'll have you guys in the background sometimes, and you're like, "Oh yeah, I just got this trade, or I just got that trade," and I'm like, "No, I just want to trade."
No, that's me today. I'm like FOMO Barbie today. Seriously,
it's hard not to.
I took profits early, and I on ES, and I got a stupid stop out at break even on NASDAQ. I'm up 18 cents on that trade.
18
so
cents.
At least
18 cents is better than negative 18 cents, Barbie. I like it.
That's why we move. That's why I move the stop though. Is like when I get screwed. I rarely have bad stop outs. So there's that.
Well, I'm glad I got out of that trade. It was just a quick scalp. I think I made like about $50 on it.
That's all right. They keep adding
Barbie,
up.
Here's my watermelon little guy.
I was expecting a bigger watermelon. I'm going to be honest, but I do like your watermelon.
You know, down there in Texas, you guys expect everything to be bigger.
Thank you for showing me your watermelon.
This is true though about Texas. When I went to Texas, all the houses are like the bigger, better. So many.
We've added on to this house so many times, like it's embarrassing. This house is like twice the size of when I bought it. So yeah, that's true.
Everything's
Barbie wants bigger candles, bigger watermelons, bigger.
I mean, my hot tub bigger. That's true
bigger
too.
Hot tubs.
Okay, let's not get in trouble.
All right, back on track. I did see a couple people asking about
guys.
It was pretty. He's got a cool face on it and everything. He's got like his smiley face.
It's a great watermelon.
Yeah.
Chat, did anyone make money off the longs today? I want to know. Type in chat if you made some money on any longs.
Someone was just saying gold just made a major move down.
George made some money today. Congratulations.
I do think I can see gold.
Crown made some good money on evals. Awesome job.
There it is.
Trader Y.
It's all in the consolidation, but gold is filling out that consolidation right now. That is a stairs up, elevator down situation there.
Oh wow.
This is gold. Pine Tree Trader made some money on some longs. Awesome job.
So guys, why would gold be getting crushed? Because everyone's more confident in ES right now in the market. Why? Make it make sense. I thought we're like bombing places.
Isn't that crazy? Could you imagine a place getting bombed like a couple years ago, like the impact that would have had on the market? And now it's just like, whatever. It's crazy.
Yeah, markets move so quickly nowadays. Like that's what I hear from all the old school traders as far as how efficient our markets are compared to how it was like 30 years ago, 40 years ago. It would take time for news to get digested.
we have an OG trader in the Trading Ranch group, and he does not like the morning sessions at all right now. And we were talking about that because it's like, what do you mean you don't like him? Like, we have great volatility, but he's loving the Globex opens. And so we were talking about that, and we decided it might be because the Globex opens right now are more like the New York opens used to be. And so that just feels more natural and comfortable.
Interesting take, actually.
So I want to spin the wheel before we go. What do you guys think? Barbie, Vola?
If we
should
get the
spin?
wheel, I'm all for it. So let's do it.
Let's
I'm
do
ready
it,
for the
Vola.
wheel.
You
Let's
want to
do it.
spin?
You want me to spin it? I mean, I can tell you to spin it, but I can't physically spin it. That's a lot of names. Holy smokes.
Look at all those names, you guys. You guys are all so awesome. You make
You
our
can guess how
show
to pronounce them.
fantastic every day.
Yeah. I didn't get to do that last time, so I'm excited.
You might get addicted too, Vola.
I have a wheel spin happening Friday as well for the MyFundedFutures giveaway I'm doing on X. So
There you go.
I'll have my
Awesome.
own little my names calling out thing going.
Everyone, make sure you go follow Vola. That was a little bit of tongue twister. On X and on YouTube. Vola, can you help us announce the names of the winners?
Sure can. Who's cheating there on the wheel? See how they got like a big spot, or is that just two reds like next to each other?
I think that's the actual wheel, like the red spot. I think that's like the
looks like
ticker
someone's got a
thing.
big spot.
Better not be a
They
cheater.
paid extra.
get
They
'em.
paid extra for that spot.
Okay, let's spin.
All right, let's do it.
Let's do it.
Oh, that one's easy. Slexty. Winner, winner.
Congratulations. All the winners, make sure you open up a ticket with support to claim your free account. It's for a 50K starter plus.
I think with the wheel, Terry, I thought with the wheel they were emailing them.
No, you have to you do have to open up a support ticket. Yes, I did confirm that. Even though you do put in your email.
Okay.
Drew from SOL? Where's SOL? Is that
I think it stands for
country?
something naughty. Congratulations.
I would not be surprised. Brian. That's an interesting way to spell it. I've never seen that before.
Congratulations. A free 50K starter plus account.
New jeans, 50-50. Oh, you're not sure if you want them? You know, what's the 50-50 there? Should I get new jeans? Should I get old jeans? Ones with the holes in them? Ones with... How many are we doing?
Find
like
the ones that don't
20?
have holes in them, though.
Oh, that's true. Hop, Flosser?
Congratulations.
Still watching the chart too. It's still not cooperating. Xenon. Like the
Congratulations.
is it like the old printer, or wasn't there a printer called that?
Princess Xenon or Xena. Was that Xena? Congratulations, 50K starter plus account.
Oh, this was a tough one. Is it Sam?
Woohoo! Congratulations.
Cognitively healing. Okay.
Very nice
Like
name. Congratulations
Oh, that was the last one? Oh, boo.
to all our winners. Thank you for tuning
was having
in.
fun.
Making
I think it's Xerox,
plus-
yes.
See, it's addicting. That's what she's
Xerox.
telling you.
Yeah. See, I only get to spin it twice. I can't imagine. I would never stop spinning if I could. I'd just be like, keep clicking.
You'll have to come back on the show so you can help us spin some more.
Yeah. Real quick before I do get kicked out of here, if you anyone puts the Keltner channels on their charts, what I'm looking for is the price to go into the channels. Every time you see the price go into the channels, you'll kind of, this isn't a guarantee. I said this last time I was on here with you guys, but you'll notice something, right? Every time you get the big move into the channels, what tends to happen? That's kind of why I have them up. So I tend to look for a reversal. I think of it as like a rubber band, because the Keltner channels, they are measuring price volatility, and the further it stretches, the faster the price action is as well. you'll get down into these bands. If you don't have good price volatility, you just get this, where we just kind of sit in between them and you're kind of following the middle moving average. But if you do get a big move up into or down into one of these Keltner channels, you do tend to kind of stretch the rubber band a little bit. And then what happens when you let go of the rubber band, right? You kind of get a little bit of a snapback. And that's the idea behind my trading strategy. And if you go back and look over the course of the last few days, you'll notice it's just a lot of this, where there's really not anything. Anytime we got close, like I really look for it to hit the bands, just because it's a lot safer if you wait for it. But you do tend to still get pullbacks if you get a little bit more aggressive with it. But even like here, I mean, you don't really get that nice move into the bands. So when it's just in the middle here, it's kind of not doing this. Must be open. Yeah, I tend to stay away from the open because, like I said, I believe actually it was the last time I was on here, we had one where it just went up like 400 points, like off the open. So, but I saw a couple of people asking about the Keltner channel, so I figured I'd slide that in there real quick.
Thank you, Vola. And your YouTube channel is VolaTrades.
That's it.
And your X account is, you're on X, right?
Yeah, it's at Trade Volatile. And yeah, we do have that MyFundedFutures giveaway. I'm giving away 2 50K starter plus accounts on Friday. And all you gotta do is a couple little things over there on X to enter for that. And I'll be doing that live on my stream on Friday morning.
Awesome.
But you guys have all the viewers, so
thanks for coming on.
We got you. And Keltner channel gang.
Yeah, I know. We were talking to you about that last time. You do it on the long term, but I've actually started looking into
on
that
higher time frames.
Yeah.
Well, I've been trying to look at it at lower time frames too. So
it works. It does. It's been successful for me anyway.
Yeah. Thank you, Vola. I hope we see you soon. And thank you, Barbie, for a wonderful morning and for showing us your trades and for winning together.
I'll show you my fruit. And holiday tomorrow, so we'll be back for a fun Friday.
Yes. Reminder, we won't be streaming tomorrow because it is a federal holiday in the US. And yeah, we'll see you guys on Friday. Bye, Barbie.
Appreciate
Bye,
it.
Vola. Let's welcome
Barbie.
Let's welcome Ash. Come on down. She's so cute.
Hey.
Or within 48 hours.
Almost there. Let's see.
Then by touching it, it would make it our.
Not sure what's happening with the transition here.
Good morning, Ash. How are you?
Good morning. Good morning. Good morning. I'm doing good. How are you doing today?
Good. Market is pumping. I mean, I'm kind of surprised that we're already up 120 some points and it's only 10:30 Eastern time on an FOMC day.
Yeah, the longs got paid this morning and it's been a momentum one. So we moved in the correct direction very quickly.
Yes, it sure did. Any trades this morning yet?
Yeah, we're going to talk about this one that occurred. We were able to find the longs. I definitely want to go over it. So definitely worked out very well for the model I use, and there's a lot to say about it. So very excited to get on here and review it with everybody.
Awesome. Well, I will let you go do that, and I will see you on Friday.
All righty. Have a good day.
Thank you. Bye, Ash. Bye, guys.
Hello, hello, hello. What's up, chat? How's everybody doing today? Good morning or good day, depending on where you're from. Hope everybody's week is going well. Hope everybody's day is going well. Got ourselves an FOMC day. So we're going to review some information. There was a beautiful long position that occurred this morning. You can see it on my screen already. It's closing in on 2R here. So we're going to review it. Just going to take some time to say good morning to the community, see how everybody's doing, and then we'll get into the information. So How's everybody's day going? How's everybody's week going? Let's see how chat is doing so far this week. Throw a 1 in the chat if you're green on the week. Throw a 2 in the chat if you're red on the week. And throw a 3 in the chat if you've yet to trade this week. Good morning, good morning, good morning, or good day, depending on where you're from. Just taking some time to say good morning to the community before we get into the information here. Hope everybody's week is going well. Got ourselves an FOMC day, which we will talk about here shortly. See how chat's doing so far. Looks like a handful of ones, very nice. Handful of ones, even more ones, very nice. Pretty green chat today. Love to see it. Very, very good. Well, next question I had for you is, are we bullish or are we bearish today? Throw it in chat. Are you guys expecting this run higher to continue? Are we going to continue to see higher prices? Or is FOMC going to come in and change the direction? Are we bullish or are we bearish today? What does chat think? Pretty 50-50 there. Some bulls, some bears. Some bulls, some bears. Okay. Okay. Well, beautiful long position that occurred here at New York Open. I'm going to start to review it. This was the trade that occurred. This beautifully aligns with my system. So we're going to review it now. We did point out this trade on my stream. I also live stream on my YouTube as well. So for any of the viewers that followed me over here, to get an update on the position, it's time to start closing out those longs, right? We look to aim for 2R. We use the unicorn model. We enter at the beginning of the breaker. We put a stop at the low, and we aim for 2R. Now that we're approaching 2R, this is the moment in time that I would say, don't be so greedy that you're one tick away from your take profit and you don't close your trade. Don't be that greedy individual that loses a beautiful trade. I mean, this thing didn't even see any drawdown. It went right to your target. Don't be so greedy that just because it's 1 point away from 2R, that you let this thing turn around on you. Okay, so just a quick update before I go into the information for any of my viewers that followed me over here on this live stream. A lot of us were able to capture the W here this morning from this information. So let's start to review it now. Everybody knows that I use the unicorn model. Okay, the unicorn is simply a breaker block plus an FEG. So here's an example of a bullish unicorn. The breaker will always be found in the initial swing low to the initial swing high. A bullish breaker is the highest up close candle before the leg down that took liquidity. And we need to see an FVG aligned with it. Okay, an FVG aligned with the breaker is what the unicorn model is. The unicorn model is simply a breaker block plus an FVG. Now what we do is we look at certain times and we use certain confluences to take advantage of this information. Okay, so the important times of the day are the opening times. So New York Open, that's why I'm here streaming during New York session, because I'm on the East Coast. So for my daily life, New York Open is where I focus. You can also focus on London Open or Asia Open, right? The important concept here is using the opening times. So whether it's Asia Open, London Open, or New York Open, those would be the times to provide your undivided attention to price action. So during New York Open, we're looking for the unicorn model. We can see here that right here at 9:30, we had a beautiful move lower to take out some liquidity, right? It ran below this swing low here. And when it ran below that swing low, it also put in bullish SMT. Okay, so We've talked about SMT a lot of times at this point, but a quick little refresher is that two correlated assets, when there's a crack in correlation, that's what SMT is. It's a divergence between two correlated assets. So ES is correlated to NQ. They should be moving the same at the same time. So seeing that ES did not go below this low here, right? So the equal lows right here, ES did not go below that low. Okay, so keep that in mind. We need to use the same 2 points in time on NQ to measure SMT. So let's take a look at the 6:55 a.m. low on NQ. 6:55 a.m. low on NQ. You can see that NQ ran below that low. That's what a crack in correlation looks like, when two correlated assets are doing two different things at the same time. Okay, so now we're talking about bullish SMT at New York Open, and then you get a bullish unicorn, right? So here's the unicorn. You have a swing low, you have a swing high, you have a new low, then you have a new high. We need to find the highest up close candle before the leg down that took liquidity. You can see it here, the 9:15 a.m. candle. And we want to see that there's an FVG aligned with it. All right, so you can see the FVG there. This is the definition to the unicorn model. When there's a breaker block that has an FVG aligned with it, it occurred during New York Open with a confluence. So just a couple notes about that. SMT is not a standalone trigger. It's a confirmation to an idea, right? Here's the idea, right? The bullish unicorn. The idea of executing it at New York Open, right? 9:30. And it's confirmed when we see that it also has SMT. That's what it comes down to. Having a defined model, understanding when to execute that model, and having strictly defined risk management. So now let's play it out and let's talk about the execution of it. We've analyzed it. It's one thing to be able to identify it, but it's a completely separate thing to be able to execute it. There's a difference between being an analyst and an operator, somebody that's capable of executing. Okay? Now, in terms of executing, the way that we use the unicorn model is that we enter at the beginning of the breaker with a stop at the low, right? So the market determines the entry, the market determines the stop. I know what invalidation is because my entry function. Stop loss goes at the low, entry goes at the beginning of the breaker, so I know where to enter, I know where I'm wrong, and I need to put the odds in my favor. So that's why I reach for 2R, right? So if you're trading anywhere near 2R, all you need is about 40% win rate to have a profitable model. That's the point to aiming for 2R. Okay? So now is properly executing. There's multiple ways of executing the model. First way is front running, right? So the very first moment in time this breaker is created, there's probably a lot of people front running this position, right? The breakout traders, right? People that need less confirmations and are willing to go into the market earlier with less confirmations. That's somebody that's going to market order right here during 9:45 when this thing breaks through the breaker. They're going to front run the bullish unicorn, and they're going to market order in here. That's the first way of executing the unicorn model. If you want to front run, be my guest. Okay. You can also wait for the retest. So after we confirmed the entry function, right, because at 9:50 is when this FEG is confirmed, right here, because an FEG is a 3-candle pattern, right, where the first and third candle do not overlap. So the FEG is confirmed when the 9:50 candle closes. So for the individuals that need confirmation, those are the individuals that are waiting for a retrace, waiting for a retrace to the breaker. So those individuals are ordering here. Yes, I understand that this thing went 1 tick above the breaker, right? Now, this is a conversation that I do have to have with you, is thinking that perfection is a real thing, in my opinion, is unrealistic. So if you're sitting there saying, oh, I didn't get an entry because this thing went 25 cents above the breaker, that's asking for a lot. I personally don't think perfection's a real thing. I don't think the market is supposed to do what you want it to do every single time it's open. You have to be fluid with the market, right? You have to be willing to say, okay, this thing's at my entry location. I'll go ahead and take 0.25 more of risk to get into this position, instead of forcefully saying, I'm only entering at the beginning of the breaker, right? Because if you waited for the retest to the beginning of the breaker, you got missed by 0.25. Be fluid with the market is what I'm saying, and understand that being perfect is unrealistic, right? Like, there's no such thing as a 100% win rate. That doesn't happen. So being perfect, whether you're talking about win rates, risk to reward, whether you're talking about processes and operations executing successfully, like, you're going to deal with slippage. You're going to deal with orders not being executed. There's a lot of different little nuances in this business, which makes things not perfect. And you have to realize that. So carry that across all of the portions of your business. Okay? Nonetheless, front runners got paid. If you were able to capture the retrace, right? If you waited for all of your confirmations to get long and you were able to capture this entry here, phenomenal job. Last portion of the conversation is understanding how to execute. Okay? A lot of individuals will instantly raise their stop loss the moment they become green, right? So those front runners, if they entered at 9:45, if they saw this thing go higher at 9:50 and then raise their stop loss a couple points above entry, they would have got taken out at break even before this thing moved higher. In my opinion, you need to accept the risk before the risk is taken. Okay? You have to understand that you're willing to lose X amount of dollars in an attempt to make X amount of dollars. So align your emotions and your actions with that. Don't allow price action to make you feel some sort of way that changes your executions. In my opinion, I'd rather just assume this risk, right? Understand that I'm willing to lose X amount of dollars and leave it there, right? Leave the stop loss at invalidation. Take profit anytime we're near 2R. So 1.9, I'd be done. Okay, so the point being is that your winners have to be larger than your losers, preferably 2R or more. because the reality of the scenario is you're not going to have a 90% win rate. Okay? Having a 90% win rate, having an 80% win rate is unrealistic. Having a 50% win rate, that makes sense. Having a 60% win rate, that makes sense. Having a 40% win rate, that makes sense. Now, if you have a 50% win rate, this is why we need to put the numbers in our favor. This is all just a numbers game. The market doesn't care about your emotions. The market doesn't care about how you feel or how you think. You have to ensure that the numbers are in your favor. Okay? The way that you do that is risk to reward. If you're going to risk X amount of dollars, you got to make sure your reward is 2R or more. So leave the stop where it is, and when you get to that 2R target, take profit. So for example, let's say you take 4 trades. 3 of those trades are just above break even because you trail your stop aggressively, and you get taken out at break even for all 3 of your winners, right? So you have very small profits because they were essentially all break even trades. Well, that first time you take a full stop loss, you're going to ruin all of the progress you made, right? So the example was 4 trades. Let's say 3 of them are losers. Let's say 3 of them are just above break even, right? So let's say plus $100, plus $100, plus $100. Those are your just above break even wins. You make plus $300. And then that one loss you had was minus $500. Well, then having a 75% win rate doesn't mean anything because you're negative. Your P&L is negative. So do we want to have a better win rate, or do we want to see the balance going up? Do we want to make profits? You understand what I'm getting at here? Is that your actions need to align with the numbers, not your feelings. The market doesn't care about your feelings. The market doesn't care about your balance. You need to focus on the numbers. Okay? Price can and will do whatever it wants whenever it wants to. So the only thing that you can control is your risk management. Put a cap on your losers. Make sure that your largest loser can only be whatever number makes you feel comfortable. $100, $200, $500, whatever it is. Make sure you have a cap, an absolute maximum of what a loss can be. That way you know what a loss is. That way you know whether you're having big losers or small losers, or whether you're having big winners or large or small winners. Right? So if your losers are always $500, then your large winners need to be $1,000 or more. If your largest loss is $500, then your small win should be $500. Therefore, those cancel each other out. So that's break even there. And your large winners is what makes progress for you. Point being is you got to put the probabilities in your favor. Your actions need to align with that. And that's why I wanted to go over this long position that we were looking at this morning. It's one thing to have a model. It's one thing to have an edge and understand how to execute, but you also need to put the numbers in your favor. Your actions need to align with that. Okay, so if you have any questions or comments, feel free to throw that in chat. We can also talk about the position. Now that I've reviewed the trade, we can go over any information regarding it or the model or anything regarding this business. But the last portion of that information that I would leave off with is that for any of the individuals that were able to capture the longs, now that you're nicely green on the day, it's your responsibility to stay green. Okay? Over trading will be the first thing that burns your account. So if you're the individual sitting there saying, oh, I have a cushion to work with now. So let me see if I can size up on this next trade and make today the one day that sets me free. Well, when you go and blow the account right after that, it's going to feel horrible because you just had such a beautiful trade. You were nicely green on the day, but since you somehow needed more than what was already given to you, you go back in, oversizing, overtrading, and you lose all the hard work that you just completed. Overtrading is never acceptable. Revenge trading is never acceptable. Oversizing is never acceptable. Those are going to be the things that blow your account. So deal with delayed gratification. Accept what has been given to you. Patience is truly a virtue. Once you've completed your objective for the day, turn it off. Be done for the day. Go work on health. Go work on other businesses. And this is that moment in time. Imagine being done for the day here at 10:35 a.m. in the morning. Okay, so that's the review for the trade for today. Some phenomenal longs. We'll see if price wants to continue or if FOMC is going to bring some obstacles for us.
Obstacles. There are no obstacles for you, Ash.
Luke, how are we doing today?
You run them down.
I run right through the obstacles.
Right through them. We all know that's true. Absolutely. But I'm doing great. Ready to rumble. When I'm here, sometimes it means good things are in store. And with that, I'd like to do a little giveaway. How's that sound?
Chat's been dying for one.
They're dying for one. So we've already done a wheel spin. We've done an announced code. We've done a sneaky code. This is another announced code. Boom. You're going to go fast. As fast as you can. We've got more wheel spins in store. In fact, I'll drop a link in the chat in just a little bit here. But this one is, in fact, an announced code. You got to sprint. You got to run. You got to get there. And Ash is going to intro Tom for us, which is going to be great. His debut introing Tom. That's fun.
Absolutely. Will do.
But can we get that code on the screen? Are you ready, Ash?
You guys better be ready. These things go quick. So
loosen up your fingers. You must be a subscriber to the stream to be eligible to win. Let me clarify that. So if you have not yet subscribed, now is your chance to do so.
Who's front running the code?
Make sure you like the stream. You must like the stream to be eligible. And with that, code is going now. Boom.
50
reset
free resets.
Bears.
We got
reset the number 4 Bears. 50 of you. That's right. 50. This is a big giveaway. We have not done a 50 in quite a minute here. 50 of you are going home with a free reset with code reset for Bears. You love that? You love that 50? Finally.
The Bears are not loving this morning, though.
We've been doing a lot of free accounts. Today, it's free resets. Get them, got them, good. If you got it, let us know in the chat. We want to hear from you. And if you didn't get it, I'm going to put a link and a code in the chat for our Pass One, Get One promotion. Pass One, Get One. If you buy an eval with the code YouTube and the link in the chat, whenever you pass that eval, you'll get a free eval. Pass an eval, get an eval. Simple as that. You can take as long as you need to pass that initial eval. You can use resets to patch that initial eval, whatever it is. It's almost like a 2-for-1. But it's pass one, get one. Link is in the chat. Go and grab it. All right, Ashy, I'm passing it back to you.
Sounds good. Who was able to get one of the resets? Throw a W in chat if you were able to get one of the resets. There's the W's. Congratulations. Love to see it. 50 resets. Absolutely amazing how much value is provided here on this stream. Between all the experts, all the hosts, all the guests, all the trades that we talk about, all the education that we have, all the giveaways that occur. There's just so much value being provided every single week, which makes me say, thank you. Thank you for everybody that's here. It's greatly appreciated. Being around like-minded professionals really provides a lot of value. Getting to go over this information, going over these questions, it's providing that experience that we need to gain conviction in price. So thank you to MyFundedFutures. Thank you to chat. Thank you to all the hosts and the guests that are on the stream. It really provides a lot of value. So back to the conversation here. I was just leaving it off with stating, over trading is not acceptable. So if you captured the longs, be done for the day. We also have FOMC coming up. So I wouldn't be surprised if this was the move and that we consolidate heading into FOMC, right? So asking for additional move higher sounds like we might have to wait for FOMC. Okay, so at this moment in time, the objectives have been completed for the longs from New York Open. Accept what's been provided to you. Call it a day. Understand that FOMC is coming up. We also have a bank holiday tomorrow, so we really don't know what we're going to get from FOMC, let alone tomorrow being a bank holiday as well. Terry advised it earlier. I'll just remind everyone again now, there will not be a live stream tomorrow because of the bank holiday. The market's not open, so we will be right back to our normal stream on Friday. Just make sure everybody is aware of the schedule. All right, so now that we've gone over our information for today, the bulls got paid. Beautiful bullish unicorn. Congratulations to anybody that caught the longs. If you want to go over any questions or comments now, let's throw some questions and comments in chat, and I'll head over to chat, and we can do a quick Q&A for the last 25 minutes of my segment. If you're wondering why you can't communicate with us here in chat, it's because it's sub-only mode, so you have to sub to the channel. While you're at it, like the video, turn the notifications on. That way you can be notified for when we go live again. Hi, Ash. Do you prefer taking your model on ES? I see your trades are mostly on ES. Actually, my data shows that the majority of my trades are on NQ. So I've only been on this stream for about a month now. Maybe in the last month, there's been more ES trades, but I've been trading close to a decade now. And over a decade, the data shows that the majority of my trades are on NQ. So yes, today's trade occurred on ES. Okay. I'll show you why it occurred on ES instead of NQ. If you go to this point in time here, okay, so notice how 955 and 950 failed to break through the breaker. Okay, now if you go to ES, look at the difference here. There's very clear strength because of the SMT. So when you're longing, you want to long the stronger pair. The stronger pair is shown by SMT. It's also confirmed due to the fact that we were clearly able to displace through the breaker. So at this moment in time, 950 and 955, you have a confirmed unicorn model versus NQ, where you do not have a confirmed unicorn model. So that is why today's trade was on ES and not NQ. But just so you understand, the overall data shows that the majority of my trades are on NQ. Very good question, though. What RR and win rate do you get with the unicorn? So, first of all, results are unique to the operator. I could give you the same exact model, and we will have different win rates and different risk to rewards. Simply because human emotion, human psychology, experience, conviction, risk tolerance, you're not going to be able to click the same buttons that I click, plain and simple. You are the only one that will ever click the buttons for yourself. So that is why you need to gain the conviction, you need to gain the knowledge, you need to gain the experience to complete your trading business. Now, what I'm trying to say is, for somebody that is new to trading, they probably raise their stop loss above break even once they go into profit because they think that they're protecting themselves, right? They can't lose any money, so it makes them feel better. Well, that person probably got taken out at break even, whereas the experienced trader left his stop loss in the original location and they were able to capture a 2R win. Do you see the difference there? Same exact model, just two different actions by the operators. Okay, so you're not going to have the same win rate as me. You're not going to have the same risk to reward as me. It's contingent upon the individual. If somebody tells you that a certain model has a certain win rate, I'm sorry, but that's misinformation. You have to click the buttons. You're going to create that risk to reward. You're going to create that win rate. Very good question, though. Once again, we are doing questions and answers for the last 20 minutes of my segment. We went over the long position. For anybody that is just now joining the stream, this has already been completed. So maybe putting a check mark here will help. We are no longer considering this position. That's why I'm saying that. It's already completed its objective. So for anybody that's watching now, this is no longer an entry. This was a trade that we reviewed that occurred from New York Open. Why didn't you cover the swing high of the breaker? Wouldn't that be the high of the move? A bullish breaker is the highest up close candle before the leg down that took liquidity. A bearish breaker is the lowest down close candle before the leg up that took liquidity. So it's a specific candle. It's not a swing point. It's a specific candle. It's a defined location. It's the highest up closure. So notice how the closing price of this candle right here is higher than the closing price of this candle right here. Notice how this candle occurred before the move down that took liquidity. That's what defines a breaker. So the move down that took liquidity started at this point in time right here, from that swing high to that swing low. That was a move down below this swing low here. That's price grabbing liquidity. We need the highest up closed candle before that, right? This is the highest up closure that occurred before the move down that took liquidity. So it is not the swing point that creates a breaker. A bullish breaker will always be an up close candle. A bearish breaker will always be a down close candle. Look at the closing prices. Look at the swing points. It needs to be before the leg down, and it needs to have the highest closing price. Those are what creates the breaker. Do I swing trade? Yes, I have long-term positions. I have crypto. I have real estate. Day trading is not the only thing that I do. I've mentioned this many times. I highly suggest multiple sources of income, whether that means dividend accounts, whether that means real estate, whether that means running a different business, whether that means having a job. I highly suggest you have multiple sources of income. On top of diversifying helps your risk tolerance. Okay? Have some long-term positions. Have some crypto. Have some real estate. Have some day trading. Diversify across markets. Diversify across accounts. That will help your risk management. So yes, I have long-term positions that I swing trade. Hope everybody's day is going well. Hope everybody's week is going well. Got FOMC coming up here. Once again, we're throwing some questions or comments in chat. We've already reviewed our position for today. Feel free to throw any type of question in chat, whether it's about this business, whether it's about trading. Everyone should understand that there is no right or wrong in trading. Okay, I'm here to share my journey and my experience in trading. If my trading doesn't fit your personality or your style, that's completely okay. Right? I'm not sitting here saying what is right or wrong. I'm sharing what I do. So, what matters is you're either green or red at the end of the day. And I would love for everybody to be green. So, however you do that is great. Just base your decisions off of your own data. Right? I don't care if you trade moving averages. I don't care if you trade indicators. I don't care if you trade. It doesn't matter what you trade, really. What matters is that we're all building the skill to have a source of income, that we're working on that skill day in and day out to keep that edge sharp. For anybody that wants to work and learn with me, I'll gladly continue to keep sharing this experience, both over socials, both over live stream, the whole nine. Unicorns means breakers aligning with the FEG. That is correct. But the low has to sweep the liquidity. Yeah, that is correct. A breaker needs to have all of the institutional swing points, right? A swing low, a swing high, a new low, then a new high. Okay, so this would be a bullish breaker, whereas this would not be a bullish breaker, right? Because it did not take out the low. Okay, so this is a different conversation than a higher time frame level. First of all, we need to know what a breaker is. This is what a breaker is. This is not. And then the second portion of that question was, does it need to tap into a higher time frame level? No, it doesn't need to, but if you base your ideas off of higher time frame levels, you'll have higher probabilities. So yes, you want to see it tap into a higher time frame level. That makes the idea better than if it didn't. But a breaker is a breaker. Those are two different conversations. Very good question nonetheless. Hi, Ash. Would you advise trading on a half day like tomorrow? I don't participate on bank holidays. So my answer to that would be no. For anybody that's just now joining, we got another 15 minutes until my segment is over. We're doing a question and answer type of segment currently. Feel free to throw any questions regarding this business, mental or emotional intelligence, risk management, anything to do with day trading. Would you trade multiple models to get experience or just focus on one? That's a unique question to the individual. So, if you're capable of handling multiple models, then be my guest. Collect the data on it. But if information overload causes confusion, then stick to one model and just collect data on one model. You got to know yourself, right? Just because something works for me doesn't mean it's going to work for you. So the only way you do that is going through the experience. Try to collect data on two models. If that causes confusion for you, then only use one model. What does SMT stand for? That's a crack in correlation or a divergence. That's another thing. There's so many terminologies out there at this point. It doesn't even matter what you call it. I don't subscribe to any one type of terminology. Okay, so this is a divergence is what it is. Whether you want to call it a cracking correlation, SMT, divergence. There's so many different names out there at this point. How long have you been trading? I've been trading for about a decade now. How long did it take for me to figure everything out? I've never had everything figured out. If you don't think that this is going to be a battle every single day, whether it's the first year, second year, 10th year, 20th year, then maybe trading's not for you. You should always be a student of the market. You should always be willing to learn. You should always be willing to get 1% better. If you think becoming profitable means that you'll remain profitable, I highly disagree with that. Just because you made a withdrawal one time does not mean you'll make a withdrawal a second time. Okay, so being profitable does not mean you're forever profitable after that. Traders, whether they're in their first year, 10th year, 20th year, 30th year, they still go through ups and downs, lefts and rights, forward, backwards. You're going to have to deal with all of these things that come with day trading over your entire period of day trading. Okay, so there's periods where I have win streaks. There's periods where I have loss streaks. I'm a 50% win rate trader. I win, I lose. I win, I lose. That's what day trading is. So, no, I don't think there was a specific point in time where I figured it out. I think it's a daily battle where you have to show up willing to learn every single day of the week. Doesn't matter if you're in your first year, your 10th year, your 20th year. Very good question, though. This is what I mean about being around other like-minded professionals. It's really providing a lot of value, getting to go over this information. So thank you again for everybody that's participating, getting to go over these questions, getting to go over this information. It provides so much value, both for myself and everybody that's here in the community. So thank you once again. Hi, Ash. Would you still take the trade if there was no SMT? SMT is just a confirmation to an idea. So it's not a part of the model. It does not have to be there, but it provides conviction when it is. So it's a matter of if you're willing to accept the risk or not. Yes, you can still trade the model if there's no crack in correlation. So we got another 10 minutes before our next host, Tom, starts his segment. I definitely advise to stick around for Tom's segment. He's been providing a lot of value every time he comes on the show, and I really enjoy watching his segment. So definitely make sure you stay around for Tom's segment as well. How many models do you trade? I'm only trading the unicorn model. I'm the type of individual that really believes in less is more, quality over quantity. I don't need to be in the market every single day. I don't need 10 different models so that I can always have a trade. I like to fit it to my personality, and that's patience. I don't want the stress of having a trade on every single hour of every day, taking a trade every single day. Have you had to change your strategy over the course of a decade? Yeah, absolutely. I've tried so many different things at this point. You know, breakouts, indicators, inversions, unicorn model, SMT, divergences, options, crypto, stocks. I've tried so many things over my time being here. That's what allowed me to collect the data. That's what allows me to speak from experience. All of the times that I've put into this day trading. Yes, I've tried many different models over that time. How do you control your emotions? That's the multiple sources of income conversation that I keep having. You know, if you put a certain amount of money towards your day trading that you can literally take and burn it, you could throw it in the trash, you know that you do not need that money, then you're going to be more willing to accept the risk, right? If you don't put your day-to-day life in harm, if your bills are paid, if there's food in the fridge, and then on top of that you make more money, so that it's that extra money is directly used for day trading, you're not going to be worried about if you lose it, because you know that it was supposed to be used for day trading. So there's not going to be any emotions that come with that. So work more, get more sources of income. I still get emotional because it's money I want to have to stop working. So you have to control that greed, right? You have to deal with delayed gratification. You have to focus on the process and allow the results to be a byproduct of it. Okay? If you try to rush the process by oversizing and over trading, look at the results that will come with that. Just analyze your data and see what kind of results that provides. In my opinion, trading less, choosing quality over quantity, having patience, I think the results from that is going to be better than the impulsiveness. Is there a stream tomorrow? No. Once again, tomorrow is a bank holiday. Okay, so the stream will not be happening tomorrow. The next stream will be on Friday. Very good response, Angel. I really appreciate that answer. For the individual that's worried about that amount of money, Angel is saying, I'd also look to, excuse me, I don't know why I can't read, that they would change the dollar amount to ticks. So when you watch your P&L go up and down, instead of using a dollar amount, change it to ticks. That way you could focus on the trade instead of the dollar amount. I think this might be the first day that we hit the under on the piano comment. Unless I'm just blind and missed it in chat. Thank you, Magnus. First day of hitting the under. I qualified for a payout after today. I'm done trading. I collected $3K over the course of 5 days, but I'm having an internal battle of withdrawing or continuing to build it. What would you do? Take the profit. Withdraw it and put it in your bank account. You just completed all of that work, and the objective was to obtain a payout. Take it. Profits are not real until it hits your bank account. Okay? When you're eligible for a payout, take the payout. Nobody cares about a leaderboard. The only thing that matters is that your expenses are less than your income. The only way you get income is if you complete that withdrawal. Take the money. Right? People think being profitable is having a profitable model. That's the furthest from the truth. Being profitable means that your income is more than your expenses, right? Because you can have a profitable model, right? So let's say you have a 70% win rate and you ran account up to plus 10K in profit. And then you try to full port on FOMC and you blow the account, and that 10K of profit is gone within one trade. Even though you have a 70% win rate, you didn't withdraw anything. That's not profitable. Okay, so if you're eligible for a withdrawal, take it every single time. Okay? That's why we're here, right? We're quite literally here to try to put more money in our bank account. So if you're available to put money in your bank account, please do it. So very good conversation today. I know I've said thank you multiple times, but I'm just feeling grateful because there's so much value in these conversations we're having. I really appreciate all the questions and comments that we get to go over. Even for myself, it's a form of repetition. Getting to live stream allows me to put my thoughts and my logic in real time right in front of me. So that's maybe something that I'll leave you off with before I intro Tom, is that journal, document as much as you can, because this is a you versus you battle. It doesn't matter what anybody else is doing. It doesn't matter what anybody else's opinion is. You will only be the only one clicking the button for yourself. So when you go to do that, document it via text, record your screen, whether you want to do it privately or live stream, do whatever you can to gain as much data as you can, right? Because when I live stream, then I get the logic from my decision making in real time, and then I get to go back and watch it to review whether that logic was good or not. So I get many different learning experiences via different forms of documentation, and that's what I'm leaving you all with here. Repetition, repetition, repetition. Experience is what builds that conviction. So live stream or record. That way you can gain that real-time data while also doing it via text. Take the screenshots of when you were going to enter, what was the result of it. Take the screenshots of your pre-market analysis and your bias. Do the before, do the during, do the after. Get it over text, get it over recording. Okay? All right, so that is the end of my segment for today. I'm very happy to bring Tom up on stage. He has been doing a phenomenal job with his segment.
Hey, everybody. Hey,
Let's
there,
welcome
Ash.
Tom to the stream.
Hey, good to see you, man. I must say that I always enjoy listening to your segment. And when I get here, I just have nothing to talk about because you just said everything. Everything was great. So glad to be here. How is your day so far?
It's going really good.
Awesome.
I also want to say the feeling is mutual. I really find a lot of value from your streams, so I highly enjoy getting to listen to your point of view. And
Thank
I
you,
also
man.
think that's one of the best parts about it is there's a lot of psychology that aligns. There's a lot of experience that aligns, and that.
Yeah, I mean, that's what we can use this time for, right? Especially when we have the market like this before FOMC. Like, don't push the button and talk about the mindset. That's what important as well. I mean, as you always say as well, I mean, 90% is the mindset, and that's what we need to focus on. And yeah, it's
absolutely.
True.
So,
it's true.
What do we have to look forward to for your segment?
Well, obviously, I'm going to do a quick recap from my point of view of what happened today and what we could be looking for. And I have some topics here. And I was just listening in, and you were talking about the conflict. I mean, I think you were answering to a question about the conflict of taking a payout or keep continuing to trade. Believe it or not, I'm still dealing with the same type of conflict nowadays. So it's a real issue for me as well, because sometimes it's just hard to stay on track when you see all that profit on the account. When you have that feeling, should I continue? Should I take it? I think I'm going to talk about that topic a little bit more because I think it's important. But I always have some more topics with me here. So yeah, we will use the time wisely.
Very good. Well, I'll pass the stream over to you.
All right.
Thank you, everybody, for tuning in. Let's stick around for Tom's segment, and I hope everybody has a great day.
Let's go. All right, everybody. Let's thank again to Ash. He is definitely sharing awesome information every day about the psychology, also about the mental game of trading. This is just, I think, as I said, it's crucial. Strategy is 10 to 20%, and the rest of it is risk management, aka psychology, and that's it. So welcome everybody again. I see some names. Hello, Naomi, and hello everybody else. Magnus, Abhishek, hello. Pigeon, hello. Welcome. So, yeah, what can I say? I'm going to do a quick run through of what happened earlier throughout the AM session since London. As you guys know, I'm streaming in London as well. And so just going to do a quick recap. And obviously, FOMC day. Whoa. So there's a funny video. Don't worry, I'm not going to play it here. But yeah, Jerome Powell is just going to, enter the stage. He's just going to say good morning, and the market is going to crash and just go up and down. But who knows? Anyway, that's a different thing. So let's go back a little bit to the London session of what happened there. I started trading somewhere around 2 a.m. this morning. And I think we had a zone right here. I deleted it. I don't know why. We had a zone on the 1 minute chart, and we were kind of like targeting that area. Yeah, right there. And I think I took a small position right down here. Anyway. So we went up there and took out a nice 1 minute zone. There was another fair value gap higher right onto, it was a 15-minute / 1 hour fair value gap starting at 22,057. So eventually, just when the London kill zone ended around 5 a.m. ish, look at that, we just went up there and swept the liquidity. But anyway, after that, I wasn't really trading. I was actually away from the computer, but But the market open, well, that was quite interesting. I guess we can call all this phase here, especially after the 7 a.m. I mean, in ICT terms, as the kill zone starts at 7 a.m., especially this area here, kind of like a consolidation or accumulation phase. And so we had, I would say that this would be the manipulation as we took out some sell side right here. And if we look at this sell side, I'm going to switch to the 15-minute chart in a second here. So the sell side 944.50. Now look at that. The 15-minute chart. Let's zoom in to that level. Now this is also an order block, bullish order block or demand zone right here on the 15-minute chart. So that's why I was eyeballing that level too, as kind of like a liquidity sweep. Why? Because this candle swept liquidity from this bullish candle from yesterday, 8 p.m. Yeah, 8 p.m., 15-minute candle. Here was the fair value gap. That candle swept a bit of a liquidity there and then pushed higher and created multiple structure shifts here. and here as well, but that's not important. This makes it technically valid, okay? So bullish shift, strong push to the upside, and liquidity sweep. So I kept that level on the watch list for the market open, and let me switch back to the 1 minute. Everyone's going to get a BMW. So that level has been swept right here, 944, right after the market open. And I was like watching this and must keep watching. This was the first fair value gap here. And I was a little bit hesitating, like what to do. I was a little bit, I chickened out. I got cold feet to pull the trigger or not. So I was watching basically price going up here. And as price was approaching this swing high, I switched to the 5-minute chart. I'm sorry if I'm switching too much here, but I need to show you guys this. And we had another zone, a 5-minute supply zone right here, which I started to look a little bit closer. And as we approached that level on the 1 minute, I also took a small scalp just for a few points, but that's not the main thing. The main thing, we had another one, a 5-minute zone up there. So I missed this move. And the only thing I could do later is that we pointed out on live stream that we have a level at 22,098.50, which is a 5-minute. No, that's a 1 minute, sorry. That's still a valid 1 minute supply zone right there from yesterday. Yeah, yesterday lunch hour right here. So I thought that, okay, maybe we should go there, 98.50. And so this is the trade which we took live on stream. And this was a nice entry, a nice risk to reward ratio as we were going higher. And finally, I mean, my TP was at 95, but finally we took out that 98. And that's it. And ever since then, so far, and let me just go back to the 5-minute now. This is what we can expect until Powell is going to enter the stage. And that's it. Barcode time. Exactly. Barcode time. And I'm not even trying to anticipate what's going to happen after this one. So the beauty of this is when you do the tape reading, and I wanted to talk about this too. When you do the tape reading, and even if you start to trade, for example, this would not be an FOMC day, okay? And if you just got to the computer, you just have the time to trade in the PM session, whatever. If you do the tape reading, you mark out those levels. You don't have to go with the zones like I do. You can have your own specific areas of interest or point of interest. You do the tape reading, you might see, okay, what happened here? Swept liquidity, pushed higher, took liquidity there, and then was another sweep, manipulation, and then pushed higher. What's left to do? Okay, and then you will have a bigger picture to understand what might be happening in the next few hours, right? Tape reading is actually very, very good. Even if you're doing the back testing, try to do it as not just focus on the trades, but try to tape read. Obviously, when you're doing it while back testing, it's much faster. You don't have to spend hours and hours before the chart. So in that case, practicing tape reading with some kind of a back testing software, there's multiple type of software out there. You can just use TradingView. It's very valuable to practice tape reading. So, hey, Josh, hello. Yeah, D-Pain. Oh, there you go. Hello there. Yeah, we took that nice trade earlier. Yeah. So that's why it's kind of important. And yeah, as usually, by this time, two things could have happened if you traded the AM session. You might have made profits, or you're still at break even, or you might be in a drawdown. By the way, if you're break even, you're basically winning. You know, don't forget, if you went into the market, made some trades, but eventually got out with break even if with a small loss, you know, just a few dollars here and there, which is basically a scratch, you ended up break even. So you were risking profits or capital, and you exited the market with a break even. That's actually a win. You conquered the market. You got out. Nobody's hurt. So that's a win. So if you made profits by this time, I strongly advise you not to trade, especially on a day like this on FOMC. If you really want to push the trigger, push the button and pull the trigger, well, at least wait for the press conference to end. By the way, the real kicker is going to be the press conference. From my experience, the statement itself is like, yeah, it can hit hard when suddenly there's a rate cut or something which is unexpected. I don't know, but the statement itself is a thing, but the press conference is when the fireworks really go off. Obviously, Powell is going to try to avoid the questions, or at least try to avoid to answer some questions about rate cuts and or maybe the recession or inflation. Those questions could be heavy and will be. And so we'll see how he's going to comment on those. Anyway, if you still want to trade in the power hour, the press conference should be ending in about how much, like 30 minutes or so, 20 to 30 minutes usually. I don't know. So you can still gamble a little bit in the power hour, but trust me, it's not a good feeling when you risk your profit, especially if you're in a profit by now and you're just risking it to go away on some crazy gamble trade. Anyway, just my 2 cents on the dollar. Okay, I do have some topics for today as well. Actually, yeah, I do have some topics. I just wanted to say, like, you guys were talking with Ash about the conflict of taking a payout or continue to trade. I'm still battling with the same issue nowadays. I'm still like trying to decide what should I do. For example, this funded account that I have with MyFundedFutures, and I want to do my best to Roman, hello. Roman Arts, welcome. So I try to do my best to push this account as far as I can in terms of getting to a live account, because eventually that would be the goal. And I already took a payout. I want to get more payouts, obviously. I want to get rid of the payout, the withdrawal cap. So obviously I still need to push more. I think I should be pushing the account above 35 or 40, $3,500 or 4K, something like that, before I take the next payout. And, I think I was down, I don't even know. Let's see. So when I took the payout, I was down to 1K in profit. So I'm almost back to 2K, but I'm just trading like super slow on that account. But anyway, that's the goal. So in terms of topics, if you guys have some questions about risk management or trade setups, let me know. I'm going to dive into some of these topics that I outlined to myself for today. Pigeon, my win streak ain't ending. I feel something big coming to the end of my account. Hey, Pigeon, you know what you should do is just size down. Even if you start to, have some fear about that, because obviously losing trades or maybe a losing streak can be around the corner anytime. But if I were you, and if you have that fear, size down. Forget about the profits. That's always a good cure to go with. Okay. Go with very small size, obviously with micros. Go with 1 or 2 micros just for a few days. Okay. Maybe you will have your losses. The market is going to maybe shift, and that way you can get out easy with that. But, size down for a few days, maybe. That's always helpful. All right. So in terms of topics, I do have some more. Oh, you lost 3 funded account last week. Oh my, that's not good. It happens. It definitely happens. Cannot do much about that. Only to not give up, try again, and just start all over. Small size, as I said. Depends on how many funded accounts you had already. So if you already know how to get to funded real fast, then obviously you're much more experienced. With copy trading, yeah, that's the issue with copy trading. Yesterday, we talked about that. When I copy traded the accounts, everything went upside down. Totally. So, Bowser, hello. Nice payout. All right. So, already doing that. All right. Took a break. Yeah, sure. Do wait for some kind of confirmation before entering the trade, even if you're set up or not. Yeah, usually, I mean, as I said, I use the classic ICT 2022 entry as my entry trigger. First of all, I need to have my target. For example, on this trade, which we had live on the stream, we outlined that we should go to 98.50. I said it exactly the way like this during the live stream that, okay, I need, and it was like here, a few minutes after, somewhere in this push as we were going into that fair value gap. I said, okay, if we're going to have a displacement with the fair value gap, I'm going to enter as a continuation. So we had this here, this area was my confirmation. If I'm looking for a continuation towards a level, I can still utilize the ICT 2022 entry. I think this is a textbook example, at least, that if you know where the draw on liquidity, which in this case was 98.50, I always take profit a few points earlier, by the way, just saying. So my TP was at 95 or 94 or something. So I said to myself, okay, if we have a strong candle with a fair value gap, I just enter. So usually this is the type of confirmation I'm having when I try to enter a trade, not just for reversals. So I'm not just using this entry setup for reversals, because I think many traders, especially the new ones, are thinking that this setup is basically made for reversals. No, it's not. It's perfect for continuations as well. And that's what I'm doing, basically. I'm using it for continuations. But first, in order to do that, you need to have a strong conviction about your level. And that's why I'm so much all over about these zones that you guys hear me talking about, right? So I'm always talking about the zones. Here's a zone, there's a zone. But you know what? I don't really care. As I said weeks ago, that I'm like, I don't want to use 10 different kind of entry setups or like all the ICT concepts or whatever. And I think I said last time that I just want to do what Bruce Lee said. Like, you don't have to practice. You don't need to know 10,000 different kicks. You need to know one type of kick if you want to win, but you have to practice that kick 10,000 times or something like this. So I don't really care about the rest of the concept. So I got that issue a few times. I mean, I got those comments that, oh, you're totally an ICT guy. No, I'm not an ICT guy, really. I learned a lot from the concepts itself, but I really don't care too much about the rest of the concepts, to be honest. I don't really care. I know there's always a new thing coming out every month or two, which is awesome, super great, huge respect. But I'm just practicing the same old stuff over and over. Next day, tomorrow maybe not, but next week and after, I'm just going to do the same thing. I'm going to outline out my zones. I'm going to be looking for the same exact entry model like here, and that's it. And once you do your analysis before the big moves happening, technically, if you're starting, if you want to trade the big moves like after the 9:30 open, you should do your analysis like at least by 9 a.m., right? Or at least before the market open. And I think you should focus to the market, especially if you're trading after the market open. You should go down into your mind into like a Zen state or something and focus on the market just for a few minutes. Outline your levels, what you're looking for, do some tape reading. It takes a few minutes, trust me. It's something like a meditation or something. It really like you would be meditating at those times. Just do some tape reading basically before you sit down and pull the trigger. Mark up your levels. And then when you have the big picture feeling, that's going to come automatically. More chart time and that sixth sense, that special extra feeling about, having that extra special confirmation about the drawn liquidity, it's going to come. It's going to happen. And once you have your levels, in my case, I have my zones lined up. I have my plan, and you should do the same. And so I'm not going to do as I said yesterday, 2 or 3 or 5 or 10 different types of entry setups or yeah, I know it's very popular and I might look into that, but it's very popular to use SMT. It's very popular and you can call it 5 different ways. SMT, or what's the other popular thing? You can use the order blocks for entries, of course, propulsion blocks, or I don't even know. So many ways to do this, or maybe pivot points. I don't know about the SMT. I tried SMTs, by the way, and I know it's a real thing. Yes, I know the SMT divergence is definitely there. All my payouts I never used SMT divergence. There you go, mic drop, boom. I never really used SMT divergence. I know it's there. I respect everybody who's using it. Super awesome. Great. It's a working concept, I guess, because people are printing money with that. But I never really used the SMT concepts in my trading model. So I'm not saying like disrespectfully that I don't care about it, but I don't really care about it. I'm okay. Now it sounds disrespectful for the SMT traders, but but whatever prints money, So do that. Do the chart time before. So when you have your time, when you sit down, let it be the PM session, let it be the AM session in New York, let it be the London session, or even the Asia session. By the way, small side note here. I think the Asia session nowadays is better than the London session. True story, really. I look back, I see like, wow. Asia session sometimes is respecting the levels much better than in London. But anyway, when you're sitting down, just do a few minutes of chart time by doing the tape reading, outline your levels. And once you've done that, stick to your I would say, one and only entry model that works. So practice one kick for 10,000 times. Exactly, Pigeon. So one kick 10,000 times. After a certain amount of time, after failures, many failures, and even more failures, obviously with more winners as well, it's just going to be like a reflex. You look at the chart, you'll see, okay, that's the draw liquidity. I see that now. So when I look back, even on the 1 minute chart, I can line out everything I'm looking for. But anyway, let's move on. And this is why I think it could be important. Let me just scroll up in the chat. If you guys have questions about that or about the entry or setups or levels, let me know. And I'm going to, until then, I'm going to check these topics that I have here. Okay, so I have a very good topic. That was a question. Do you even have an edge? How to know if you even have an edge? I had this question earlier on my stream. How to even know that you have an edge? What is an actual edge is? Just a small hint there. An actual edge is not just a setup. It's not just the setup itself. It's not just, you can search for YouTube for the YouTube 2022 entry model. It's not going to be an edge in itself. This is just an entry model. Okay, so the setup itself, or if you're just looking for a trend line breakout, it's not that, simple and not that simple. Obviously, there is more to it, right? We were talking about the emotional edge as well. When you have to know when to trade, when not to trade. For example, right now, we know we should not trade. We have to wait until, I'm not going to trade anyways, so I'm not going to trade the FOMC PM sessions. I don't care about what's happening throughout the rest of the day in the market. I'm in a small green today. Well, actually, overall, I think I'm up about $1,000-something. I don't know, but I'm okay. I know that I already have an extra emotional edge next to my entry setup, that even though I see some levels, I'm just not going to push the trigger. Why I'm saying push the trigger? Because I'm Hungarian. It's hard to express myself. I'm not going to pull the trigger. I'm sorry. So I made my profit. I had a beautiful trade. I am not going to give it back to the market. If you have that strong conviction that these setups are going to happen over and over, which they are, and they will, why do you want to end up, especially on a day like this, in a negative side, especially if you're in profit? That's an emotional edge. So we talked about that the other day, right? So that is when we come down to clarify, do you even have an edge? What is your edge? The setup itself is only the setup itself is not an edge. Okay. What are the signs that you don't have an edge? I had this question too. I think we could say that one of the signs is that even though you know your entry model, and I'm just going to stick to my example here, you do two different things. You're executing all the fair value gaps. So basically, you don't have an emotional edge. Or you're just chasing your trades, like for example, the trade goes by already. You see that you missed your entry, but you enter too late, and you still think that it's going to break above the 100 level, for example. Here, you basically are just chasing. That is also not using your edge correctly. So risk to reward ratio, if you don't apply that, you don't have an edge. We talked about the emotions. We talk so basically risk to reward ratio. If you don't apply to that, you don't have that. Yeah, feeling stressed, that's a sign too. Exactly, like Magnus is saying. And And I have another thing here. How to find and refine your edge with prop firm rules in mind. Now, I think this is a win-win situation. I have these questions written down here because I think these are important questions, and I always love to talk about these things here. So how to find and refine your edge with prop firm rules. And the reason why I'm saying it's a win-win situation is, as I said the other day, the prop firm rules, obviously prop firms are profit orientated, like everybody here, because everybody wants to make money. But these rules are, I think, excellent guidelines to make you a better trader and make you a better risk manager. Like, for example, let's just take an example, the starter account. There is a daily loss limit, right? In itself, by knowing that you have a daily loss limit, is preventing you to go on full tilt. At least it gives you a second chance to go next day. And maybe with the clean sight and everything, you can try to trade the next day as well. But the goal is not to go down to the daily loss limit. And the consistency rules and the daily loss limits together are there for you to practice discipline. It's easy to go into a big trade like full porting, and sometimes I do that. I did that. did that, going in crazy. And yes, you can have your lucky trades, and that is building up bad habits. But as I said last time, try to keep an account for 30 days. Try to trade with the smallest size. And eventually, if you can do that, and if you can just pull in like a few $100s a day, like $100 or $200 or $300 a day, that confidence, that extra conviction through your towards your trading model is going to be much more valuable than the money that you might, make in a lucky trade, but it's going to build bad habits to you. And you might as well use that money that you buy some luck, withdraw from the prop firm, and you might as well just spend it again on another evaluation account, right? You have to treat that as a business as well. Anyway, that's another thing. So I have another one here. And by the way, if you guys have questions about that, let me know. I know it was a little bit of a deeper topic. I didn't really want it to go too much into the risk management stuff. I don't know about the bounty yet. I don't know what was that, but I guess we will know. And there's another one, the truth about daily drawdown rules. Yeah, I outlined this as well. Yeah. So the daily drawdown or maximum drawdown rule. The problem is, I think, is that we are focusing too much on the maximum drawdown. So you start to trade on your evaluation account, even on your funded account. And the first thing that's in your mind, like how much drawdown can I still use from my safety net or from my daily loss limit or whatever. Instead, you should be focusing on risk management. Like, how much risk can I put on this trade, or how many trades can I take a day? If you trade small size and focus on the process, then obviously the winners, and you have an edge, of course, then obviously the winners should be outperforming the losses, even if you trade with one micro, by the way. And as I said last time, if you trade with one single micro and you blow up the account with one micro, not by adding to the trade, but just by keeping every trade on one micro, then you definitely have big problem with your edge, and you should step back and start all over from scratch, because that's just not what you're looking for. So try not to focus on the daily loss limit. I mean, not in the terms like, okay, how much contracts can I still put on the trade? It goes against you and you want to DCA a little bit, like, oh my God, I'm still going to add to it because I still have a few $100 more from my daily loss limit or from my maximum loss limit. That's very bad to think like that. That's very bad, especially if you're I mean, there's no problem with DCAing in a certain in like under like a certain risk criteria. So that's fine. I used to add to my trades as well, but using all the contracts and going full port with DCAing is not something that you should do, and you should not. When you see your account, for example, in a few hundred, let's just stay with the 50K account because I'm mostly going with a 50K account. And so if I'm seeing myself in an open position, especially on a funded account, in a few $100s of drawdown, let it be just $500 or $600, maybe $7 throughout the day. And it's just like, for example, one position, I already know that I made a mistake. It's not the market, it was me. And that's simple it is. If you find yourself in a drawdown for like $500 to $600 on a position, because honestly, I don't think that you should be risking more than maybe maximum $300 to $400 on a trade, even on, well, for example, on a starter account or on a starter plus account on a 50K. Okay, you should not, because you're pretty much limiting yourself down to just a few positions, right? Especially if you're dealing with the daily loss limit on a starter. You should already know that if your position goes down to $500 or $600 in this case, then you made a mistake and it's not the market. You should have exited that trade much earlier. And that's it. And that's when we find ourselves like a deer in the headlights, right? We just stare at the charts. Oh my God, should I close the trade? Should I not? I know, I've been there. We all been there all the time. Even these days, I recognize myself in the same position. Yeah, it happened. Like, oh my God, you're still hoping, like, oh, I hope it will turn around. It's not good. You should close that trade down. And that's also a skill, by the way, in terms of risk management. So if you are already down, as I said, like, for example, $400 or $500 maximum on your 50K account, then you made a mistake. I'm sorry to say, that's just too much risk. Okay. It's a different thing when you already have like a 5K buffer or 8K or 10K buffer. Then I would say, okay, that's when the real risk management comes into this place. And that's why I said earlier that I still have a conflict when I get to like a nice, healthy buffer area, well, like what to do. That's a huge dilemma, right? You're getting to 4K, 5K in profits. What should you do? Should you just increase your position size? Should you just get the money? I would say definitely get the money. By the way, if you're starting out trading, definitely go for the payout, get the money, feel the money. As Ash said earlier, you got to have that money on your account. Okay. You got to have it on your personal bank account and spend that money, of course. But until then, in my personal opinion, if you're losing more than $500 on a single trade on a 50K account, it's just too much risk. Okay, just tone it down. That's what you need to do. So let me know if you guys have questions about it. I have more topics on this one. And by the way, as the market is, well, the 5-minute, as we thought, it's just barcoding. So forget about it. Nothing. I'm definitely not going to enter into any kind of trade. I'm just curious, by the way, are we going to spike up there and take out the 107.50? Because that's a supply zone high. Anyway, just my. Oh yeah, by the way, Cam, that's very good that you brought that up. MyFundedFutures has a lockout feature. That is like awesome. Okay, use it. Use it. Please, I'm begging you, use that feature. It's going to help you a lot. Okay. That is like, I think that's an awesome thing that MyFundedFutures has it. It's definitely going to keep you from making stupid things, especially on a day like this. And when you go to your dashboard and let me just check it specifically. You go to the website and you go to dashboard and you just click on daily lockout. That is like an excellent thing to have. Use it. It's, oh yeah, I'm going to show you guys. All right. I am going to show you. Here it is. Here you go. There it is. Daily lockout. All right. So you can use this one. And you click on it. Do you want to proceed to the daily lockout, which inhibits the trading on this account until the next session? Let's just confirm this. Okay, let me lock myself out. I made $103 on this account, so I'm going to lock myself out. Boom. I locked myself out for the day. Daily lockout, everybody. And if you click on it again, I can't lock myself back in. No. And you can, of course, put on a daily loss, daily profit, a lot of things you can do here and add. I think it's just an excellent feature to do. So you will find it if you click here, you're on the dashboard, you go to your dashboard on the left. Okay. You go to your dashboard and use the daily lockout. I think this is so awesome that we have this one. Yeah. Please use it, everybody. That's not on TraderWeight. Well, I'm using the X feed. Yeah. That's the other, because I'm trading on Quant Tower, and yeah. Exactly, but it's going to help you in the big picture. It's definitely going to help you with risk management a lot, because it's going to help you build more confidence. You can still do tape reading after that, but I think it's just an excellent feature. Okay, this is on the website. Victor, you log into MyFundedFutures website, you go to dashboard, and you will find this button there. Yeah, exactly. And it helps you to manage your emotions, manage your account, by the way. Beginner trading platform. I don't know what you mean by that, but only DX feed. Sorry. DX feed users. True. Point taken. Maybe there's a feature for, or maybe there will be an upcoming feature to do the same with the TraderWeight users as well. Since I'm using Quant Tower for trading, it's quite comfortable. And the magic code, I wish I would know. But anyway, here is the next topic that I wanted to discuss here. How to structure your position sizing around drawdown. Okay, so I think it's like the same thing as I was talking earlier. DX feed is basically anything else other than choosing TraderWeight. So when you're you can go with, for example, Quant Tower, ETS, another trading platform. So yeah, and so as I was saying, structuring the position size properly when you're in drawdown, it's basically the same thing I said earlier. Once you get to the, I wanted to add this. Until you get to a safety net area, so like a healthy buffer zone, I would say that level, especially on the starter plus accounts, and I'm just staying with the example on the 50Ks, I would say it's at least should be like $2,500 ish, but usually more, like 3,000 or more. I think you should be, for example, if you're talking about the starter account, the 50K, I think you should always be able to have like 2 times your daily loss limit, so like $2,400, but most likely more. So that's why I'm saying build up that buffer to at least $3,000, and until you're not reaching that level, and by the scaling rules, you can go with more contracts as you go by, but be careful with that. You should still not size up too much as you approach that 3K buffer level. Just go with the same size as much as you can. So don't try to aim for $1,000 day. Obviously, it's a good thing, but if you can, build up your account even by just $100 a day or $200 or $300 per day, that's perfect. As I said, this is a marathon, not a sprint. What do you like about Quantower? Can you show us around it? Well, there's not much to show around it, but I can do that for you guys. So this is Quantower. The main thing I like about Quantower is that it's the charting also is super easy. It's very easy to draw lines, and I use mostly line. I don't need all the indicators and everything, but the execution, the trade execution, especially at MyFundedFutures. Oh, this is gold. Especially at MyFundedFutures, it's like very smooth, no lag. Connection is very good through DX feed, by the way. Super easy to install. Doesn't really need too much resources from your computer. The copy trade, the main thing is the built-in copy trader, right? So everybody loves that. Where is it? Okay. So this is the copy trader. Quantower is also free. And if you guys want to copy trade your MyFundedFutures account, the good news is you don't have to pay for it in Quantower. So it's free. You can connect to multiple brokerages or even prop firms. I'm not going to go into that. But if you're using it for MyFundedFutures, and if you have multiple accounts, evaluations, funded, it's a clean platform, nothing super crazy about it. And it's just very, very simple to add your copy trading rules here. Okay. I would say probably I was trading with NinjaTrader for a year, and I switched to Quantower at the end of 2023. Well, early 24, I would say so. And I just love it. I think it's great. I think it's just great. So, sneaky code. Is there a sneaky code? Keep an eye out for it, So, oh, there's another one here for me. Account reset syndrome. That's what I write down. Account reset syndrome. Yeah. So I know some traders might be resetting the accounts because they are chasing perfection or something like that. Let me give you an example. Sometimes, and it was earlier, like nothing nowadays, but yeah, sometimes it happened to me. Like I went down to the daily loss limit on the starter account, and I was so pissed off because I was really chasing perfection. I just didn't want it to lose on the first days of the evaluation account. And what I just did is I just hit the reset button, even though I had another day to try it. to try to trade the next day, but I just couldn't go with it. I just couldn't. I wanted to do the reset. That's how much I was trying to chase the perfection. But anyway, I just strongly advise not to do like that. Why more trades equal more problems? Well, we all know that, I guess. But by the way, congratulations for those of you who got the code. Yeah, you're welcome, Nick. You're welcome, Nick. All right. So, more trades, more problems. I hear you guys were talking with Ash about why is it good to have less trades. I said that too. And I'm on the same page as Ash. One of the biggest goals for me for this year is to reduce the number of trades, right? It's hard. I'm going to try to scalp less and less. I think scalping is just going to drain all the energy, because it's just hard to do. At least I find myself like it's I get super tired when I just try to scalp even throughout a session, because you really have to lock in on maybe on the lower time frames, like 1 minute 30 seconds. I don't want to trade at 30 seconds, but I never did. I tried, but anyway, I just skipped it. Looking for like scalping to go for like 8 or 10 points and always be on an alert, like what's the next candle going to do. I think that's draining so much of your energies. Especially if you're on the 1 minute chart, it's so much easier to do day trading once you put on your levels, as I said, before the session, and just go for those levels. Use the entry model and just go for it. Execute the trade, put on the risk, and just leave it. I'm saying that is something that as a day trader should do, and that's a process to follow. Obviously, I know some people who are opening 20, 50, or even more trades in a session. I don't know how that's possible, by the way. That's just a lot. But less is more. And if you have your analysis done correctly, you don't have to be 100% right about the outcome or about the levels. The best thing to in terms of doing your analysis beforehand, before jumping into the market, is what I said, that after the session, at least you will know, or later throughout the day, you can look back and ask yourself the main question that you always have to know: was your analysis correct or not? Even if you did not execute a trade, or even if you suffered a stop. For example, if this trade would have hit my stop, I would have said, okay, no problem, because I had a strong conviction towards this 98.50 level. It was okay, but the market decided to sweep lower. No problem. I still did what I wanted. I executed all the steps that I needed to go for the trade. And that's it. So don't be afraid to have losses at the end of the day if you did your analysis beforehand. So I think I'm just circling back to the first topic of my segment here, and I think that's what I really want to put the emphasis on. That, guys, do your analysis before the session that you trade. Now, one more small add-on here, the daily bias, because I get that question many times, like, okay, but what's going to be the daily bias? It's like 9 a.m. and I need to have a daily bias. Are we going to go up or down? So what should I be focusing on? Some of you may disagree with me, and I completely get it. I'm not debating anyone, as I said. I don't really have like a strong conviction about the daily bias, especially when I start in London session, but not even in New York session. So I know it sounds crazy, and I'm not saying you cannot have a daily bias. I would say I'm adopting throughout the day. So I have my zones on the downside, on the upside, obviously. I point out those strong levels that I think are strong. And I'm just watching these levels up and down. And, if I was saying like, okay, we should be going up, and then suddenly the market changes, and I do have a very strong zone somewhere down there that I outlined, I say, okay, I don't care about the bias because I don't have one, but I do think that the market could be moving into that area, especially after, doing some liquidity sweep and blah, 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 all that stuff. So obviously it's a good thing. You can do so by having a daily bias, but I try to do that. And that's just a personal thing. I got married to the idea so many times because, the market was going up. I was still saying, I don't care. I'm gonna take every short opportunity that, everything. I'm just gonna take every possible short that's, that the market pulls back. I'm just gonna take a short here, everywhere. Because I was so much into the thing that, okay, this is gonna be a bearish day. I don't care about the market. It's a bearish day. It's not. I just don't like that kind of thing. So I'm adopting throughout the day, throughout even the session. And that's why I love the zones. And that's why, obviously, I trade differently a little bit. No problem. That's why it's so beautiful, because everybody does it differently. But I just keep adopting. So back to the analysis, as I was saying before my time is up. I know everybody's here for Matt. I know he's a pro. He's a celebrity. I know. Just trolling, of course. So, by the way, it's still just, I just can't. I mean, did you guys know that Matt is making 10K days? I mean, how does he do that? Is he real? Come on, man. I'm finding my way through the month to make 10K. I'm suffering. I'm crying. I'm sweating, everything. I'm putting my life on the line here to do that 10K a month. And Matt is just like, yeah, sure, 10K a day, no problem. I mean, is he a pro or what? Who is this guy anyway? All right, just a little bit of an extra trolling, positive information here. But really, I was amazed. He's printing money over there. Anyway, speaking about the analysis a little bit more, I'd say that definitely do your. He can hear me. Jesus. Okay. We can cut this out later, right? So there's no trace of this or evidence that I said anything bad, right? Anyway, so do your analysis before the session. You can start in London, Asia, whatever. Just do it. Outline your point of interest. It can be a zone, it can be a swing high, whatever it is that you're looking for. Oh, thank you so much, Magnus. Thank you. All right. So you can outline your point of interest. Just do it before you start to trade, and obviously do your markups, draw out everything. And once you do that, and it's going to take a few minutes, I know, don't be lazy. Put in the time and the effort. That's just my personal experience. It's going to help you throughout the session. And obviously, you don't have to be in front of the charts for like 4 hours. By the way, I think in about 2 hours in every session, let it be London, New York, or Asia session, that's more than enough to see your optimal setup that you're looking for, okay? Just do your analysis before. If you're just jumping into the market without doing some tape reading beforehand, that's just going to be suicide. You're just going to, yours is going to be like, you can trade with intuition, which is awesome. We have Natasha from my stream. She's printing money, but anyway, that's a different topic. But there are some people who are printing money all the time based on intuition. Kudos, hats off, but do it beforehand, before the market starts. So that is basically what I wanted to cover with you guys. I am super, super, super happy that we talked about this. And by the way, just a small advice. If you're in profit, please, for the love of God, do not trade for the rest of the day, especially if you're new in trading. Walk away. Obviously, wait for Matt because, you know, he's the big guy. You know, you have to wait for me. He's going to tell you everything. You know, he's a pro. Can you hear me? Or can I say anything I want? Anyway, so he's the pro. And just listen to his segment. Absolutely valuable information. But if you're new, please don't trade the FOMC, okay? And the fireworks are gonna come sometime around the press conference, I think. And yeah, I am so humble. Oh my gosh, I'm blushing right now. Thank you. If you guys want to join my stream, by the way, there's my YouTube handle. I stream every day in London and New York. Tomorrow there may not be a New York stream. We'll see. But I'm here every day. I'm doing this full time, preaching. But why do I preach? We have people making 10K a day. You know, so easy. I'm gonna do that too. I'm gonna do that. By the way, I'm gonna have my second 10K month. I'm just fighting my way through to get that 10K for a month, and Matt is just printing money every day. 10K. How does he do that, man? I have to subscribe to him or something. Anyway. Thank you so much, everybody. I really enjoyed it. I have to look into this, what's happening, and I'll be back, obviously. Oh, here's the man himself. Look at that. Behave, everybody.
Hey, what's up, Tom?
Hey, what's up, man?
How was your day today, brother?
Well, just the usual, and we had a great conversation here with the chat. So everybody's waiting for you. So everybody just talking about you. I said, who's this guy? And then I realized, oh, it's you. Okay. But anyway,
we kind of look alike though if you put us side by side. We like glasses, brown hair. You know,
I know, right? Yeah, they used to call me Babyface when I was in the army.
Really?
Yeah. Anyway,
I can see it. I can see it.
All right, guys. Here's Matt. Thank you so much for having me, and obviously stick around because super valuable information is about to come from Matt. All right, thank you so much, Matt, and have a great one, I guess.
You guys know how this works. We got FOMC coming out now. Of course, FOMC is a big deal, right? But not just FOMC. We can all predict that there's probably going to be a rate cut today. Fed Fund Futures is pricing in practically no rate cut, but people are thinking that there's maybe a one rate cut this year, maybe in September. What's really important that's coming out is the projections, right? Every quarter, you're going to get the projections that are going to come through, and this is the one where we get that. That's kind of the bigger thing that we're waiting for. Now, of course, the interest rate projection of 1 year, second year, and basically the longer term. This is what we want to see how the Fed is distributed. Now, let me explain to you like how these things sort of work, right? Each member gets a vote as to where they think we should be. And this is the, I think this is the quarter two ones from, let me double check where I'm referencing here. This was the March 29. Yeah. Okay. All right. So what it basically is like each dot, if you know how to read this, this is what's going to move the market, by the way. This is why I'm going to bore you to death with something really like lame for a minute. This is what's going to move the market. We already know there's no rate cut. We already know this is going to happen. And we already know because the tariffs went up to make inflation possibly higher for the year, maybe no rate cuts this year. Traders are pricing into September. So the question is, what are we going to actually get this year? 1 or 2 or none? Now, each member has a vote on where they think we should be. And you look at it as a bulk of like where everybody kind of is voting. So right here, everybody's saying, okay, for 2025, most people think that, the bulk of the members are like floating around this 4.25 thing. For 2026, the bulk of the members are thinking, 3.25, 4.25 to 3.25 as an example on how to read this. We'll tell you that roughly each one of these is 25 basis points. So that's like 3 cuts maybe. And then the bulk of people for 2027 are kind of like 25 points below that or the middle. So essentially that's where people come up with the 4 rate cuts this, next 2 years and maybe 2 this year sort of thing. But what's interesting is that what we started seeing was the longer term discrepancy of where everybody thought we should go. Once Trump got elected, things changed. The dot plot actually used to look like this on the longer term projection. You had a lot of people sort of agreeing on this is where we needed to be, and it was lower, okay? But when Trump got elected in the office, the dot plot took a completely different look. It started looking like there were two camps in the Fed. There's like two different groups. There's a group here and a group here. You can divide it up into half of the group thinks, yeah, we still need to go lower. And the other half of the group is like, no, the people that think the 2 or so that we get this year are holding the fort for the long haul. No more rate cuts. And when Trump got elected, you started seeing the longer term projection kind of like look like a snowman. Didn't look like this before. And why is that, right? And this all comes down to the fact that we knew Trump was going to do the tariff thing. We knew the tariffs are going to kick the inflation numbers up. While CPI has been gracefully coming down since 2022's highs, the projections of the Michigan numbers were that we were going to go up to 7% in the first year, according to the first estimate of the tariffs. While the CPI had come down from 5 into like the mid 2s, the estimates of 7 clearly are what these people are fearing and why they're not cutting rates that much. Now, the Michigan numbers have since come down to the last read we got was 5.5. That's still well above the Fed's 2% target. And that's still well above what the CPI is saying we have. So right now, the question is, what is this going to look like for the long haul? I think most people are expecting this to look relatively close to the same and maybe a few more dots up here. Because of the tariffs, fewer people want to cut rates because of the inflation. That would make sense. And Wall Street's certainly pricing that in. But if we come through and the dot plot starts changing to like look like this, and then this is no longer there, then we're going to have a problem. If more and more and more of the people in Camp B shift over to Camp A, then it's less likely we're going to get a rate cut in the future. And that's what we're pricing in today. So when we go through Fed, you'll see today, this is the projection of the important thing. So Matt, where's my 10K post-it? So in my 5 trading accounts that I'm trading today, this is what I've made today in the 5 that I always show. So not 10K today, but I had a pretty decent day. Currently right now, I'm trying to trade 4 other accounts. I've got one of them that's live and active right now that wasn't an active long here that I'm going to take a stop on and probably take a loss on that one. That one's down about $1,800 right now. And I'm about to close it while we're sitting here and take a loss on that. So right now I'm perfectly flat. I actually just closed. My stop loss is this yellow line, but yeah. So subtract 1,800 from this and then add 1,600 to that. So of my 4 accounts that are not on the screen, 2 of them are up $880 ish each, and one of them's down 1,800. So basically washed in those 4 accounts. But yeah, so today was a decent day. Now, yesterday I was down 9K. So yesterday didn't turn out to be so hot. I got chopped up a little bit. I was up when I got into the stream with you guys. I was up for the day. And then you guys know how the news gets. I tried to buy the dip, it failed. I tried to buy the dip, it failed. I tried to buy the dip, it failed. And so sometimes the news just comes out and makes the random market more random, and it happens. But yesterday was a sad day. We didn't walk away with a lot. But today, I basically made back what I lost yesterday. So probably good. It feels good to kind of... each dot represents a trader's failed account. There you go. Great information, Matt. Kind of tidbits you won't find in the books. Appreciate the knowledge snippets. Yeah, of course. And the part you want to be able to know is like what's really important. Let me teach you guys how to trade the Fed in 3 easy steps. Okay, ready? Step number 1, don't trade in the Fed. In reality, nothing happens at, I'm in Central, so I'm going to say it from Central 1 o'clock. This is when it happens my time. So at 1 o'clock, nothing happens. For the most part, you can predict the Fed pretty accurately. How do we predict the Fed? Well, there's a couple of tools you can use out there. One of my favorites is you can type in the words CME, Chicago Mercantile Exchange, CME, Fed Watch. There are actual Fed funds futures that people bet on the probability of rate cuts and stuff. And the Fed Watch sort of translates everything in the probabilities. So did you know there's a futures contract that you can gamble on the Fed with, by the way? So inside of here, 99.9% chance we don't move from the 425 to 450 basis point that we're sitting at now. 0.1% chance that we go down here. This is what Wall Street's thinking. Okay. That being said, probably no rate cut. Okay, which is fine. We can anticipate that. Market's probably going to span a tiny little range. So in the first 5 to 10 minutes, let's say 1 until about 110. Let me just put the number of minutes here. About 10 minutes in, the market has its initial move. Okay. It usually moves a certain distance. From about minute 10 until about minute 30, that range sometimes expands, whether it's up or down. Don't think it's choppy. I'm just drawing what the range will be. And then from minute 30 onward is usually when it picks a direction and goes. 30 onward is when the press conference starts, which really is what is important. Because as traders, we can already guess what the outcome is going to be. So that doesn't really matter. What really we can't guess is what the future is going to look like. And that press conference at minute 30 is where Powell comes in and starts telling stuff. And right when they hand the mic over to Steve Leisman and all those guys, the first thing they start asking about is the future. And that's when we need to listen. Powell usually has a scripted response. He says the same thing every time. We're watching the data. Recent numbers have shown somewhat risk to possible inflation due to tariffs. We're watching the labor market. We're watching import and export price. We're watching this. All the same things he says left and... Hold on. Pickle? We have special guests, guys. Hold on. Buddy! How'd you come all the way up here to say hi? Buddy! Special guest, guys. Y'all haven't met Pickle before. Got Pickle the puppy here. He walked all the way up 3 flights of stairs to come say hi on MyFundedFutures. Pickle, say meow. Good boy. He hates being in front of these lights, though, so he's going to try to claw down. What's up, buddy? What's up, buddy? Stop biting my nose. All right, go have fun. I heard him whining through the door over there. Sorry about that. All right, back to where were we? Okay, so minute 30, when Powell starts talking, he basically starts going, what? You want me to chase you around? I'm on a TV show, Pickle. I can't chase you around right now. All right, guys, this is important. Okay. All right. Go. Bye. Okay. It's literally he does the same thing every time. He runs in, he wants me to chase him around, and he'll bark until I stop. He'll bark until I stop. So what I'm gonna do is I'm gonna open the door and just let him run around. Hold on. Buddy. All right, one more time you can come in. I can't chase you though. I only get an hour. I promise I will take you on a walk in an hour. Come on. Come on. You gotta stop barking. If you guys have ever had a dachshund, they bark a lot, by the way. Pickle, long or short? Okay, bark once for long. Whine once for short. Which one is it? Pickle said short. Okay. All right, buddy. All right. So press conference is basically going to be where Powell starts talking about the same stuff. Labor market's good. I'm telling you guys that it's good right now. Job market's good. It's kind of stalled out. It's not like it's growing really quickly, but it's not like it's bad. Inflation's coming down, but with the tariffs, it could probably go back up. And the question really is what they think the future is going to look like. And they're going to talk about the uncertainties because of the tariffs. So it sounded like a short, I'm telling you. He's an insider. Pickle knows the market makers, by the way. The ones that made the algo of the market. Just FYI. I hear Luke coming in here. Luke, what's up, buddy?
What's up, my friend? How you doing?
Look who I've got with me.
Oh, you got a little buddy. Do we love Pickles?
Pickle's the best.
Yes,
He's
we
like the
do.
official mascot of the show.
I would say of the whole channel. How about that?
Hey, buddy.
Pickle wants lower rates. Pickle wants lower rates.
He does.
Yes, he does. Matt, how about a randomized giveaway? You like that?
I love randomized giveaways.
All right. Link is in the chat. All you have to do is fill out the form, answer one simple question, and you, that's right, you will be entered to win a 50K Starter Plus account. How does that sound?
I like it.
You like it? And Pickle wants some extra spins of the wheel today?
Yep. He wants a couple extra.
All right.
He
Pickle
said
spins.
extra is good.
We might have a code drop too. We're certainly not if we're below 1,100 viewers, but we might have a code drop. TBD. Some people are saying a long time since a code. We just dropped a 50 reset code a little bit ago. 50. We haven't done a 50 bagger in quite some time. And now it's time for the randomized giveaways. For those of you who are not lightning quick, you've got a good shot at winning. The other thing, Matt, that I'd like to remind people is that we do have our link with code YouTube. Link with code YouTube for pass one, get one. Buy an account and eval with the code. You pass the eval, you get a free eval. You can take as long as you need. You can take 6 months if you needed to pass the eval that you buy. You can use as many resets as you would like, and then you're going home with a free eval, 30 days.
That sounds good.
Lovely. And if you're a new user, you've never been with us before, code YouTube will give you 50% off of any plan. So I'm taking care of the new people. I'm taking care of the existing people. And for the existing people out there, I am working on a loyalty program. So stay tuned for that loyalty program. Okay. All right. I'll stop.
That sounds amazing. Wait. Oh, did he leave? Oh, I thought we were doing it now. Okay. All right. We're back, guys. Hold on one second. All right, so we're back. Now we're just gonna wait. We're gonna land probably, hopefully higher. I think today, if you really want my call, I know Pickle's barking and whining. He wants to short the market, but in all honesty, I think we might get a positive response to this. I think the odds are pretty good that the Fed is going to stop being so strict about rate cuts. I feel like more of them are going to turn towards the policy of more rate cuts at some point in the future. I think we've been a little extra tight on this because of the uncertainty of the trade war stuff. But I think now it's kind of proof that we're working out deals with everybody. And the probability is much higher that we will get rate cuts this year, maybe next year. And I hope some of those participants start voting lower, lower sooner, but we'll see. Now, in the meantime, remember, like I said, in the first 5 to 10 minutes, give or take, the market's going to move a little bit. I never want to trade in there. Then kind of after that first initial response, in the 20 minutes leading up to the press conference, the market will get a little wider and move a little faster as people are starting to assess the dot plots and everything. All right, you ready to get down? All right, you hit the lights. Bye-bye. No. You're good. So with that, I'm going to tell you guys at the press conference is really the real meat and potatoes are going to be of this day. Everybody, you're going to either be quiet. I can't play with you today. Just sit down with me, okay? Just be good. You're over here. So what we normally do actually is I'll take him for a walk sometimes at lunchtime. And if you guys know iDoc, she usually takes him out in the daytime. So he's getting a little restless because she's out of town this week. But yeah, but other than that, I really have I don't really have a trade idea for right now. I do want to long. You guys know how my liquidity pockets work here. So I always like to take longs inside of this pocket. From here to here is a good setup. And of course, from here to here is a good setup. This is the SPY gap, right? So we gapped up, I think, actually. Let me double check, up or down. It was more like a flat day, but we had a little bit of, so we did gap up today. And inside of here, we have this gap fill predictor, which is down here at the bottom. It's like it looks at the aggregate of all the stocks are doing. And let me draw this a little better right there. Okay. And this white number at the bottom of my screen is telling me that most of the stocks have gapped up and kept going. They're not really selling off. And so inside of this white line, what that means is there's support inside of this box. So inside of this range, I just longed right out the door. This was a great setup. And all the indicators were lining up to the upside. Everything was nice and pretty. So long, long, long. And then, of course, we have one resistance, which is this is a thing in futures that I teach about. It's called margin buffer limit. It is a very strong pivot, especially if we lose it. So as you see right now, it's really trying to hold that pivot. And hopefully it does. But if we lose that yellow line on my screen, it can be pretty bad. So this is a very solid resistance that has a hard time if it does break. So hopefully it doesn't, but we'll see inside of here. So right now the market's just dancing around underneath my pocket here. I like to long off of this to the upside. And if FOMC stuff comes out and we fall to any of these strong pivots, I'll be willing to take longs all over again. If the market somehow dumps or tanks off of that, this is S&P. So 60-12 is a really strong monthly hedging pivot. And then, of course, that's basically what I'm looking at. So this is what today looks like. And my initial trade today was I longed Chew here and I closed out, which is what I did. And then the market dipped and moved. And I basically longed through there a second time. And now I'm trying to plan a third long through there. I initially had a trade here and then it fell and then I stopped out and now it's there. I'm about to hop back in. So right now I'm about to pop another long. That DOM is actually off the screen though. I can't really move it onto the screen because it's in a browser. This is like the desktop app over here, but I'll let you guys know when I close it. Usually I'll pull it on the screen if I can. These accounts, the ones on the screen, are pretty much maxed out for the day. I can't really make any more on those because of consistency. So I might not be trying anything in those accounts. Yeah. Yep. All right, so you guys, can I put a GoPro on Pickle and just use that as your live video feed one of these days? That'd be hilarious. Just to like see what he actually does when I'm up here trading. Oh yeah, that'd be awesome. So you guys said, all right, read somebody else's comments here. They're going to cut in September for sure. Yeah, that's kind of the sentiment, right? Is that September rate cut's going to happen? And I think as long as the trade deals are getting better, I'm pretty confident that we might get a rate cut in September, as long as things are getting slightly better. Inflation, the CPI itself is coming down, which is good. And that's, I think, what the Fed is really paying attention to. Not yet, not long yet. For me, I'm kind of waiting, and I know we have an hour until FOMC. I would like to have seen this kind of move, and really what you'll notice as well is there's not usually a lot of big momentum leading up to FOMC. The market kind of spans a range. We're still kind of in that, downward last couple of days, the Israel-Iran stuff creating downward movement. But as we know, as traders, it's going to have very little impact, I think, on the actual U.S. stock market itself, unless we're drawn into a longer-term conflict. The panic that's coming from that is temporary. This isn't like the market's turning around because of some Middle East conflict. Not really. I'm just waiting for it to smooth out so we can get back to being bullish. And hopefully with all the stuff we're hearing today, Trump has hinted that they want to come and talk it out. There was some sources about a little bit ago. We had some big volume right here where one of the news sources came through and said that somebody around was like, no, we actually don't want to meet in the White House. And so that created a little bit of volatility here. But that, basically everybody's looking at the idea of, are we going to work out a deal between everybody or not and ceasefire. Other than that, I think the panic in Wall Street is for the most part over. But again, with no other news, the market just needs something, you know, a reason to trade. So people are looking for reasons to sell. I already captured the best move of the day pre-FOMC. Yeah, I already did. And so now I'm in like absolutely no hurry to risk much or really do much going forward. So yeah, pretty much what it is. And I'm just going to wait. And that's usually the best policy, you know, wait until FOMC and kind of see what happens. Did anybody today catch that long move up? I'm curious. How many of you guys were trading today and managed to get something good out of the market? Getting anything good out of it? Got something, got some longs. Cool. I like it. So I'm just prepping and getting ready for it. Hold on one second. And for now, I'm just looking to see if there's anything to trade inside of here. I'd like to get a long trade through there, but I don't think we're going to pick up any momentum until Fed now. So I think what I'm going to do is just chill. I mean, the market keeps trying to make its way up there. But for now, I'm just kind of like waiting on this, to be honest. Now, do you guys have any questions for me? I remember last time they asked you guys if there was a lot of things you guys wanted to ask me about, different types of topics you want to talk about. If you have any general kind of question about trading, risk management, psychology, any of that, you guys are all more than welcome to ask me. I'd be glad to answer any questions you may have. So unusual jet activity after unusual missile launch, financial juice. Yeah, so I think that right now, with the way the market has been going, we were so used to having bad news because of the, the tariff stuff. Now the market's just been quietly bullish for the last 6 weeks. And now it's like, okay, now we need some news to make the market bad again. And I think that the coverage is always like trying to squeeze out as much as they can from everything. So we're hearing about every tiny movement in the news right now. And just be careful in your trading because the market's still kind of sensitive to it. But in the longer term, I don't really fear that this is having a long-term effect on our market. So that's kind of where I am. Do I remove a stop loss? Not really, no. Defeats the purpose of having a stop loss. A stop loss is a stop that you decide on your risk and reward, right? I'm getting profit target to here. I'm taking my loss here. And if you're starting justifying like, okay, it's starting to move lower, let me stop a little lower, let me move my stop around, it starts to defeat the purpose of a stop loss to begin with. I trade in a specific way where I get all or I get my full loss or my full win no matter what. If I'm planning on longing from here to here and making 10 points and I'm planning to lose 5 points to make 10 and the market's dancing around, I will lose my 5 points or make my 10 and rarely get out early or stop early or get a somewhat wider stop. Committing to the trade is committing to the risk plan. And I don't normally move my stop target around just because what's the point of a stop then, right? You're telling yourself that's where I want to get out. If you're like, let me give it a little bit more room, well, you're justifying a larger risk now for the same return. And that's not really good trading. The way that I see it is that I actually stop in a different fashion than most people do. Say that I want to stop at 60.56. Well, I don't have a stop loss there. What I do is I'm watching it when it gets to 60.56, like it did a second ago, and then I'm watching it. And what I started seeing was declining candles with advancing volume. That's always key when volume. Let me make this bigger so you can see it. Volume is always key to understanding if a pivot's holding or not. And I usually stop based on that. I'm manually pushing the button. And the way that it works is that whenever you start to see volume moving higher, like volume is picking up right here, I'm circling that, volume into downward candles is telling me, oh, it's probably going to break. A lot of times it hits my level, and then I watch and see what happens. If the market's got advancing candles on declining volume, then you're good. That's what you want to see. And that's it. So Trump just deploys 2,000 National Guard troops to Los Angeles. Okay, that's not related to Iran. Okay, I saw troops and I got panicky a little bit that we're preparing for war. Okay, so and this being said, when we hit this level and I'm starting to see volume spiking up into declining candles, then I just pull the trigger manually and get out. So I call it soft stop. It's a stop loss at a level, but when I get there, I'm also watching it and giving it some wiggle room when I get there and deciding, is that loss holding or not? Because sometimes you can overshoot areas and dance around before it turns around for you. And you have to decide, is that just like a stop sweep or some kind of algorithmic thing, and then the market is still holding this pivot or not? And I kind of try to manually watch that instead. But that's like giving myself just a little bit of extra information to let volume incorporate itself into my stop philosophy. Do I use financial juice? I do. Yeah. Live squawk? I don't use the live squawk. Although I probably could. I'm usually streaming, so I don't have any capacity for any more like extra stuff. All right. You guys can't see this, but watch. Hold on. Ready? Hold on. Oh, he was just standing on top of the thing. He was looking like he was just like sitting on the armrest, staring off into space. Nope. Hold on. Platform just. And now we wait. Great question, though. So right now, like as an example, let's pretend that I keep on making this trade here, the one I took a little loss on a second ago. Anytime we approach my little liquidity pocket there, I will chase on the confirmation to take a long. But like we did today, the market, I longed here, it fell to there, I held, and I decided to stop out. And now it's trying to go through there. And now I'm waiting to see if it goes through there one more time. I'm going to get in one more time to long it. Other questions. How would I manage the buffer balance in a funded account after taking payout if the remaining balance is $500 or so? Oh, okay. Yeah. So that's an interesting thought. I wouldn't take a payout to make that the case. So if you did take a payout and now you got $500 of buffer, you're kind of in a really tight spot, right? So the question becomes, what do you do? In hindsight, I wouldn't take a payout until the payout left me with a bigger buffer. Whatever your daily loss limit is that you normally go for, like say if your normal days are like $1,000 to $2,000 up or down, and you're going to allow yourself that, I would make sure I take a payout, leaving me like $5,000 or $6,000 left. What's up, buddy? Left in the account. And where you are now is kind of tight, right? So what you have to do is you have to trade. Now it's not investment advice, so but I guess it's with your prop firm, so it's not. It's okay to talk about like what I would do in that situation. Here, Pickle, you gotta go. Trying to go, buddy. No barking. What I would do in that situation is I would wait for like my biggest, most A+ setup and only the long side of the market too. I would avoid any of my short setups and wait for a good day that presents itself with a good long target. Long markets tend to be less volatile, so you're going to have less chop than short markets, right? So when markets sell off, volatility goes up. And sell-off markets tend to get very choppy as they fall, but bull markets become less choppy as they rise, right? So the probability of you getting stopped out on your last $500 is less on the long side of the market. So start thinking that. Let me trade when it's not volatile. Let me find my best setup that's long, and then you got to basically rebuild a buffer with micros. So $500 is not a lot. Basically S&P moves in 10 points. I would avoid the NASDAQ with such a small buffer to play on. Every 10 points is $500 with a mini. So if I were to trade 5 micros, it gives me two $250 shots at 5 micros to make that attempt at a really nice stable long trade. So what I would do is 5 micros or less. If you did 3, you get 3 attempts. 5, you get 2. So you want 3 shots at saving your account. You're talking 3 micros to 5 micros, and long only, so you're not playing with volatility. And if you wake up and the market's already dipped hundreds of points, like on news, avoid the day altogether. So I call this digging, right? You need to dig yourself out of a hole. You need everything to line up. You need non-volatile bull market, long setups, and play micros. And wait. Key is to wait. Wait for your setup. Like, don't just be like, it looks like it's going up, let me jump in. It's like, this is my A+ setup, my best setup I got, and the market's not volatile. I'm going to take it. Hopefully that makes sense, right? I've crawled back from little bounces like that before in my life. It's definitely possible, but you got to build, right? And I wouldn't be switching from those micros for a while. I'd rebuild that buffer to like $2,000 or $3,000 at least with that same strategy to give yourself a little bit extra room. But that's what I would do if I was in that situation for sure. But again, not investment advice. You know, you guys trade on your own and stuff. Trade what you said, Trade Debate was data. Oh, sorry to hear you having data issues with Trade Debate. That sucks. What's a good profit margin to take your first payout on? Okay, so I have a strategy when it comes to trading. This is what I normally do. When it comes to trading, especially in prop accounts, I allow myself to lose 3 days at max daily loss to blow up the account. I go pretty aggressive. And so basically, if I lose max daily loss 1, 2, 3 days, I should bust the account. And I give myself 2 trades a day to go with it. So how much buffer do you need is enough to survive your 3 trading days with 2 trades a day. So for your example, if I say that I'm going to make up a number, $2,000, say that I have a $6,000 total loss limit that I'm trading with. Okay. So my 3-day rule is I can lose $2,000 a day. So if I'm getting back to buffer, I need to get back on top this same amount, 3 times 2,000. So I can have at least the normal amount. So I can play with my normal probabilities. A lot of my setups are, you know, like I told you guys, 70 to 90%. Some of my setups are really solid. And so I play on the idea that, you know, I'm not going to lose 3 days in a row, most likely. And if I do, then I just start over. But it is rare that I lose 3 days in a row. And so I play on those odds to give myself that amount. So you decide how many days you're willing to trade before you blow up. And that dictates the size of the position you take per trade. If you're like, you know what, I'm going to take it slow and save money, I'm going to give myself 5 days to blow up. And you say you have a $5,000 daily total loss limit, then you give yourself $1,000 a day on that rule. And so you would say every 10 points on the S&P is $500 per contract. I can do 2 trades per day as well. Then 1 contract is it, because that gives me 2 losses of that same to equal 1,000. 2 losses of 10 gives me 1,000. Doing that 5 days in a row is 5. And I would make that kind of judgment call to see what size position I trade with, right? Somebody says 6 consecutive losses and you blow up. That's what you do, right? There's no rule of thumb as to what the best amount of like losses before blow up. It has to do with how fast you want to go. Most people base it off their win rate, right? If you have like a 30% win rate, you might lose like 3 or 4 days in a row before you bust. You might need to trade smaller to give yourself more room to do so. As you guys have seen all over my socials and I post, my historic win rate for 2025 is currently at 73.8%. So I win a lot of trades, but I have a very particular system I use and trade with. I win more than I lose, so I don't trade as much. With that, I can actually go a little more aggressive. And the reason you'd go more or less aggressive is basically how much you want to spend per month. If you're blowing up every 2 days, then, that's 10 times a month you're replacing that account. If you're blowing up every 6 days, maybe only 3 times a month. It has to do with your budget and your win rate. So the higher the win rate, you can, some people tend to be more aggressive, like I am. I hit it harder than normal. I don't ever try to blow up in a single day, though, whenever I'm doing my eval side. So with that being said, you have to decide what your budget is per month, how much you're willing to spend on prop firms, and then decide your position size from there. And everybody has their own rule of thumb. Yeah, my 3-day is like a medium aggressive way. Somebody said they do 6 days. 6 days is a very moderate pace, and that's probably a very smart way to go. I go a little harder, but I got money to spend. Somebody says Matt's win rate is insane. I very much wait for high probability setups, and that's all I do. I don't ever speculate, try to pick direction. Right now, market's in between 2 ranges that I like to trade on, so I'm just chilling. But I'm historically known for having a high win rate. I just looked at my stats, and my MyFundedFutures live account, my win rate is 68%, I think, something like that. I was looking at it this morning. Something like that. 65%. Now I've been trading in that for like a couple weeks, maybe like a week and a half, something like that. Somebody said at some point when you find your edge, money just keeps coming. Well, when you find your edge, think of it like this. It's not that the money keeps coming. There's a famous saying that says, as long as you don't lose money in the market, then the profits will come. When you finally get your edge, the real hurdle of trading, I tell people, is not trying to make money as a trader. Making money is the easy part. The hard part is not losing money. That's the hard part. And that is your big hurdle. Once you get over the hurdle of not losing money, you're so close to making a lot of money doing this. Most people never get over the hurdle of not losing money. Anybody can flip a coin and make a lot of money very quick. That's what that saying is all about. Easy to make it, hard to keep it, harder not to lose it. If you're able to spin your wheels for a month or two and still walk away flat, you are so close to being profitable, you don't even know it. That is the hurdle. Now you just need to tweak your strategy to find better setups that are higher probable winning. What's my R&R with the 60% win rate? So my win rate's 70 to 80% win rate historically for all my accounts. My R&R differs per trade. Liquidity pocket trades often are 1-to-1, but that particular trade works somewhere along the lines of 90% of the time under ideal conditions, which today we have ideal conditions. Today, this trade has worked once. It is still technically not worked yet. I consider the 90% rule based on, do I lose 10 points before I make 10 points? So technically, the second attempt is still kind of on, even though I'm not in it. But this is a small trade with a high win rate. Other times, the market dictates what the R&R is on the trade. Sometimes I get 2-to-1, 3-to-1 trades. Today's setup was almost a 3-to-1 trade based on this. And we have this one little handout that I have that shows bull zone, bear zone, bull zone kind of trade. It's a straight shot from bull to bull zone, which is the initial trade today. Bull zone to bull zone was a 32-point with a 10-point stop. That one was 3-to-1. Your R&R is not, this is where a lot of traders kind of get this a little wrong. Let me shut my door real quick. You shouldn't have a fixed R&R that you like, I'm only going to trade 1-to-1 or 1.5-to-1 or 2-to-1 trades. You don't decide that. That's the thing. The market decides what the R&R is. You decide what your position size is around that trade. Okay. Never do you say, I'm only going to take 1-to-1s. I'm only going to take 1-to-1s. You don't get the choice to do that. The market has a structure and the market will choose it for you. So if you're given a 1-to-1 trade, then you know maybe you're going to trade it with maybe a lower position size. What's the probability that it wins? So the example is, in this example, I get this 1-to-1 trade and I have thousands of data points that backtest and says, wow, Under these current conditions, 9 out of 10 times, it usually goes up before it goes down. Okay, cool. Then I'll take that trade, maybe a little heavier because the percent is higher. Each one of my setups is different. The market will dictate what they are. And then I work around it. So when I load up SPY as an example, liquidity map is where I get my information from using Rocket Scooter. Inside of here, the setups are pretty clean and easy to see. Just on the pockets alone, there is a trade from here to here. There's also that little sandwich trade from that diagram of there to there, the one I took this morning. So when I see it, I go, okay, I can trade from zone to zone. That's what I normally do. And I count, okay, that's 3 to 1. Well, because it's a very big run for a 3 to 1, maybe I don't have to trade as big because I can still make $2,000 per account with just 2 minis. I don't need to go in with 5 or 10 minis to make thousands of bucks because I let the longer travel give me the bigger profit with the smaller risk. Any amount of time or amount of risk avoidance I can do, I do. It maintains my win rate. If I know it's going to go up really big, I don't need to put a big position on. I'm opposite of most people. Most people are like, oh, it's going to go up big. Let me make the 50K on this trade. Let me risk a whole lot. I do the opposite. I say, well, if it's going to move really far, I just need a tiny position because I can make $2,000 on a big stretch with a small position. But then the higher probability trade right here that's only 1 to 1, I can hit that with 3 to 4. And I can make 2,000 on this or 2,000 on that, risking pretty much the same amount each time. So I keep my risk the same. And I use the idea that markets are going to move fast to lower my position size. That's how I do it. And I just kind of analyze it each particular day. And I also have rules of thumb on my position size based on prop firm accounts on, the drawdowns and such allow you to set your rules based on that. But as a general rule of thumb, you guys will see me in most of my prop firms that I do or any kind of funded accounts, they're all going to be pretty much the same set of rules. For the S&P, if I'm really confident in a trade, like really, really confident, my A+, it's 4 minis max for my 3-day rule. 2 is normal if I like medium risk. 1 is my small risk, and then 5 micros is my basically, actually, sorry, or I sit out. I'm doing NASDAQ here. So 4, 2, 1 or sit out. Normal trades like this are likely going to be 2 to 3. Big long trades like this, 1 to 2. And in NASDAQ, it's roughly half of that. So if you guys want a rule of thumb for NASDAQ, it's a ratio of 8 to 5. So every 5 points the S&P moves, equivalently tracked NASDAQ will move 8. So if you guys just want to learn a little bit about how one moves faster than the other, it's about 8 to 5 ratio. So in reality, you want to trade roughly half the size or 60% or 40% of the size or whatever when you're trading NASDAQ. Rule of thumb, just round to half. So in NASDAQ, when I'm really short, it's 2, like today. If you're medium short, it's 1. If you need to play, it's 5 micros, or then I sit out. So these are my 4 position sizes. So in NASDAQ, I'm usually trading like 1 to 2 contracts at most, give or take. And this works well with almost all of your 100K-ish prop accounts across the board. They have similar rules. Hopefully this is helpful to you guys. And you may not think about it because a lot of people just think about trading as like, where do I get in? Where do I get out? But the way that I make a crap ton of money doing this is all of that stuff I'm talking about. Notice how none of this is saying candles, direction, gaps, momentum, indicator. None of that's considered. The money-making art form of trading is knowing how much you're going to put in. The secret to successful day trading at the top right of my screen is 100% related to that number inside of that box. That position size is what all your decision making funnels into. That's the world's worst drawn funnel into this one decision that you make that is everything related to not losing money and making money is position size. That's it. Every decision you make needs to boil down to this one fact. That you can randomly long the market and make money over time if your position size is small enough to survive the drawdown. I teach this in my boot camp. I wrote a program that actually proved over time, as long as you lost less than half of your account, losing 20 days in a row trading, randomly longing the market at a random hour of the day would still make money over time and even survive 20 losing days in a row if you trimmed your losses just half your account. So if you had losing 20, losing 20, losing 20, you're down half and half and half and down to an eighth of your account. Over time, the bull market will still carry you. It's proof that position size and risk management is everything. It's a hypothetical situation. Every decision you make as a trader always needs to boil down to that position size. And that's it. Where you get in and get out doesn't matter, but you need to make sure that you survive based on the odds of the setup working, as well as how long you can trade that account before you have to refuel it, re-up it, or refund it, right? So make sure you guys understand that. There's a lot of emphasis, especially in the educational community, around trading techniques. You know, buy my indicator, buy my tool, follow my style. I'm going to show you the setups. Here's the setup. Here's the setup. And very few people out there are really good at this, especially people that sell and teach something. There are a lot of people aren't that good at this. And I know they're not that good because when you go through my boot camp, 90% of it revolves around betting strategies, how much to bet, where to bet, position size. It's everything to profitability. And a lot of people, it's just look at the chart. Here's where you long, here's where you close. That's the smallest part of trading. So hopefully this is some useful advice for you guys. And we got Fed coming up, you know, in a little tiny bit. It's going to kind of push the market around. And all eyes right now are on Powell when he starts talking. Watch this. So, yeah. But making sure that you guys understand that your journey is not to find the indicator that's going to work for you. A lot of people's trading journeys spin their wheels. I have people I meet all the time. I've been doing this for 10 years. I've tried this system, that system, this system. And I look at all of it and I'm like, so what's your position sizing strategy? And someone says, well, I really don't have one. And I'm like, you've been trading for 10 years and you don't have a strategy on how big you trade. They're like, I mean, I kind of just put, you know, same amount of contracts. You never put any thought into how big you trade, and yet you're blowing up money. Well, yeah. So you don't pay any attention to the investment you're making or the size of it. Okay. So then I tell them, so when you're buying a house, you just go out there and say, I'll buy a house, give it to me. They go, well, this is, I don't care how much it is. I'll just take it. And then after the fact, you find out, oh, that thing cost me like $2 million. That's way more expensive than I thought. Well, it's the decision you make as a trader. You want to know the amount of principal in your investment before you make it and have a reason it has value to you. Why 2? Why 5? Why 10? People in trading never really put 2 and 2 together. You're making a business decision, an investment, certain risk for certain reward. And ask any poker player out there that does this. I'll tell you the same thing. It's not the cards that get flopped in your favor that make you win. That might be the difference between first place and third place. But there's a reason the same 20 people are the same top 20 every single time, because they know how to bet with the odds they're given. And this is really, really the secret to this is when the going's good, you bet good. When the going's bad, you bet small. It's position sizing. Same thing in poker. It's bet sizing. The odds are against you. Don't go all in. You know, the reason a poker player always does well is they're able to throttle their bet size based on the risk they're taking. And as traders, you're actually poker players, just with a different card game. But yeah. So leading up to FOMC, market's pulling back just a tiny bit. I'm not engaged in any positions right now. I'm just chilling. I'm waiting for something good to happen. But yeah. So a lot of times you're just going to know that there's a lot of people that have like a strategy, even though I have a strategy where some of the setups work maybe 6 out of 10, 8 out of 10, even 9 out of 10 times under ideal conditions. It doesn't mean I just magically get that. Clearly this one worked and this one didn't. So it's 1 for 1 today on this one. And then this one worked. So obviously it works more than it doesn't, but I can't get a string of bad luck to where if something works once, doesn't work, once, doesn't work, and then works like 8 times in a row. Clearly the odds are good that I should have longed that. But what happens if I start trading inside of here and those 3 times accidentally blow up my account, right? You will get strings of bad luck. You just need to make sure that you're surviving such that a string of bad luck doesn't get you. And you need to make sure you're always throttling that position size is so important to trading. And like I said, I've done this as an experiment for fun. I actually did this one experiment where I tried to blow up an account on purpose. I did it on purpose to prove how random the market was. I tried to bust an account on purpose. and I made money. This is what trading is really like. You never think about it. You always think you try to win and you end up losing. I proved that if you go out of your way and try to lose, sometimes you win. I couldn't blow up an account even if I tried. And it wasn't because of anything other than proof that the stock market is random. And I was like, okay, let me try to blow it up with like small bets and just inch my way there. No, I was winning more trades. Okay, well, let me just put 15 contracts and short this when I think it's going to go up. Holy crap, it dipped. Well, I made $5,000 trying to. It's so funny that it teaches you that the market isn't out to get you. It just teaches you the market's random. I feel like, hold my beer. You want me to try to lose an account? But it's true. Like I tried to do it one time just to prove that the market was random. And I was like, let me take my setup and let me just take a random bet size and let me just put no strategy to this and let me just try to lose. And I would actually end up winning most of the time. And it's just because it's a bunch of coin flips. There's no strategy to that. So the reason you guys might actually lose more often than not when you're trying to win is not because the market is out of your favor. It's just because you bet too big and you stopped out when you probably could have been right. Most of people's betting are going to get it right half the time. But the reason you lose the trade is because you got squeezed out before you're right. It swept your stop and then it went in your direction. And then you decided to jump back in. Then you got in at a worse spot and then you took some chop. Then you stopped out a second time. It's your behaviors that make you go negative and lose. It's not picking the market right or wrong. So that was like a really fun experiment I did. It's true. And I was talking about it on my stream like a month ago. And like I said, I always do funny stuff like that. Can I please try to blow up your account? Yeah. But it is random. I'm sure if I would have done the experiment, 100 times, I probably would have blown up more than half. But just the one time I tried it, it was kind of hard to do. And I was trying to go opposite my normal strategy. And yet, even with the high win rate, trying to go opposite the high win rate, I got a string of bad luck trying to lose. I ended up getting a string of accidentally winning. And there's no skill involved in that. It's just the dice roll of the market. But yeah. So anyways, that's kind of how it goes. In the meantime, slight little pullbacks. It was a little quiet right now. Waiting to see if anything good happens. I'm going to tell you guys how I like to trade the FOMC. I know that the market's likely going to stay bullish. I know that the Middle East stuff is not going to crash our market like for the long haul. And I know I've got some really strong pivots. Now, of course, in the FOMC, sometimes if I have strong conviction, I may trade the news, but I have to have a really strong conviction that the news is going to come in as a beat. I'm not really sure about this one. My conviction is not that strong. Let's imagine that I have 20 accounts, right, to play with. And what I'll do is I'll say, overall, I'm bullish this market. So maybe I want to just take a small bet into the news. I don't recommend doing this, guys, so don't do this, but this is something I do. I might want to say, you know what, I have conviction because I have all these reasons to justify that we've overestimated the FOMC or underestimated. Let me bet on it. Let me bet that the ultimate result is that we go up. So I might, of my 20 accounts, into the thing long with one contract in one account. That's it. And leave the other 19 on the side, betting that at the end of all of the noise, we're up. Okay. And what if that one contract just takes a nosedive to some other strong pivot that I have? And I calculate, because like this is my next long pivot would be from here. Okay. So I have one contract taking the gamble in case it goes because I have conviction it will go. And also it's small enough to avoid the kind of chop that can come out of the Fed. Then I'll do that in one account. And then I still got 19 accounts on the side to actually play with strategically in case we fall to some of my stronger pivots. A lot of the time I'll straddle that event with that type of mentality. Is that if I did want to roll the dice, and it goes with my general philosophy, the less confident I am, the less I do, the smaller I do. So one contract in one account when I got 20 accounts, okay, that's small. And I'm okay with rolling the dice on small. Heck, if I bust one account, it's just one account. If I long one and it falls to there and I blow it up, okay, well, I've got 19 more. I've got a strong pivot there and a strong pivot here. Let me trade on both of them. Or in case the market goes up, then I made a little bit of money again on one account. I will do that sometimes. And only if I have good conviction like that, you know, like when the Michigan numbers came out, I longed into that because I knew the Michigan numbers were overestimating the amount. We had 2 back-to-back 7% or a 6% and a 7% estimate on the 1-year inflation when Trump was already becoming less aggressive on the tariffs. So I knew that we were going to come in way under 7, and the estimate said was still going to be up in 6. And I said, we'll probably come in closer to 5. So let me bet on the long side. It just so happened we came in at 5.5, and the market went up pretty quickly, and I gained a little bit on that contract. So the idea is that, okay, you have conviction, then I'm betting on the news on conviction, but I'm not betting on the news because I'm betting on a win. I'm actually betting fundamentally, but it's always small if I do. For the most part, like today, I'll be sitting out into the Fed. What's up, man?
What's up?
Back.
Are we going through FOMC?
I would love to stream through FOMC. You guys want me to stay here and do FOMC with you guys?
Should we do it, chat? It's a question for you.
We can hang on through the press conference, yeah?
It's a question for the chat. Are we doing it or not? We're going to see what... Does Pickles want a rate cut?
He does. He wants a rate cut, and he wants a chew toy.
All right. I'm seeing some yeses. I think we got to do it then. Should we do another code giveaway during FOMC to celebrate us streaming through it?
Let's go for it.
I see more yeses. Celebrate 15K subs. All right. I think we got to do it then, my friend. Is that okay? Yes, that's okay. He's game.
All right, I just tweeted. If you guys, if you follow me on Twitter, feel free to go and retweet that that link I just posted. That way you can get the word out there and get people in here for FOMC. Ooh, a little bit of sell-off pressure here, going right up into my support zones here.
And Matt, can we spin the wheel and give some random giveaways out to the audience?
We have to. I mean, they've been here long enough.
Being here with us.
Yeah.
How many spins do you want to do? Two wheel spins?
Could we do 2? Like maybe like some here, and then like people that come later, we should do them like periodically since we have a big event going through Fed. We should do a little bit, then wait, and then a little more, then wait, then a little more.
All right, how about we do 5?
Yeah.
And then right at 2 o'clock, I'm going to hint, right at 2 o'clock, we might have a code that pops up on the screen for people. And then how about we do 5 more at the end?
Yeah, that'd be great.
You like that? Man,
I like
Matt
that.
is a man of the people. He's driving the ship here.
Let's go. Royal
right,
9046.
We're doing 2 more right now. And then a code to celebrate us streaming through FOMC. And then we'll do a few more at the end. All right, last one. And we're streaming through because we love you. Retweet Matt's post. We implore you. Tell your friends.
Sam.
I'm going to do a bonus one. We're going to do a bonus one for Pickles.
Let's see. Pickle says movie 41768. Congrats.
All right. Tell your friends this is the place to be, the place to hang out during FOMC release. And again, when you see my face again, I might have a little code, a little wheel action for you.
I like it. All right. Okay, guys. Let me. I'm getting my tweets all ready here. Yeah, just go ahead and retweet that if you can. Go to my at Traders Paradise on X. Retweet that. Get the word out. Let's keep growing the show. Wow, we're falling. Pretty interesting. All right, we're falling to good supports here. The question is, bulls on bottom don't want to take long. Let's watch Nasdaq really quick as well. Where are we at here? Tests and lows. Oh, whoa. Wait a minute. That's not right. Do I want to try something here? Let me set my contract codes to you here. Hold up. You, okay, here. All right. Now we're kind of close to my little 90% zone here as well. This is the trade I took this morning. And I wonder if I could maybe do something here. Take one more stab at this. All right, I'm going to throw one contract here at bull zone right when we tap it. So what I'm looking for right now is bull zone bottom tap and half gap. So let me get in right here at the bottom here on this little tap. I might have missed it. Resilience is greater than 0, so half gap is likely to be support. My little note right here on the side. The resilience is always my indicator. That's my one indicator I have on the screen. It's a gap fill predictor. So the resilience is a flux through this box from here to here. This is the open and close price of the S&P up SPY, and I'm trading on S&P right now. So we hit that half gap. Half gap is usually support when this resilience number is greater than 0. All right, maybe I'll just jump in on the first red candle at half cap. I'm gonna double check that there's no news though causing this. Israel, this is 12:17, so that's earlier. Yeah, so we have some Israel estimates the United States will join the attack and follow nuclear and the Fordo nuclear facility. We already know that Iran would probably respond if U.S. joins Israelis war with Iran, so that's causing a little bit of turmoil in here. Let me grab a long right here, bull zone bottom. I'm going to tap it long very quick from here. I do like seeing that again. This might seem like knife fall catching, but I'm going to do it just one contract right here at the dip. I'm going to grab it and start building a position right here on the next little red candle I get. And my stopping point, I have a long from here and a long from here. Leading up into Fed, we shouldn't be selling really hard. But my pivots are really strong from here to here, really strong from here to there. And so I've got maybe one contract there. I might stab it with two more down here at the bottom. So right now I'm entering one contract now at half gap. I just entered long and we're good here. And I've got, let me show you my plan. One here and I've got two here. And I'm probably going to hang on to this because it's weird to be selling off so soon in the Fed. All right, we'll see. We'll see how that goes. Welcome to the stream, everybody. If you guys are just tuning in to MyFundedTV, don't forget to smash the like button. My name's Matt. I'm the live trader you're watching. I'm also the CEO of the Rock Scooter trading platform. I run the Marketplace, which is a trader marketplace. I do a lot of stuff. So if you guys have any questions about anything trading, feel free to hit us up. We're here live every day on MyFundedTV. And we should be doing some giveaways later. They've been doing giveaways probably like every half hour. So on this stream. So be here today. I made a trade for 3 points. No, I didn't. I longed right here. I bought one. I haven't exited the trade yet. In one sentence, where does Rocket Scooter come from? The name? The name actually in one sentence means that I take something that's a kid's toy. It's a powerless thing that you pedal with your feet. And I can put a rocket engine on the basic thing to make it 1,000 times better. Just like the thing right there. The scooter has a rocket engine like strapped to it with like a cord and it's like tied. So it's a nod to me being an engineer and like in souping something up, like making it better, building it up. Good. Long trade. Let's roll it. Popping it long. All right. See if it's good. All right. My P&L on this, or my profit target on this one's just to retrace the half. So I really got nothing else to go by other than just grabbing a quickie retrace here. This is the profit target on that. It was roughly about maybe like 1 to 1, but I might hold a little more just to see if we hold this area and we go back up to this yellow line. This is just a really good support right here. Let's keep going on it. Good stuff. Good stuff. You would let the low sweep of 21,909 on NASDAQ? Let me double check where that is. Yeah, and actually, believe it or not, your pivot is not far off from monthly hedge pressure, which is actually like rock solid support right here. It is almost like very, very, very hard to break this. This is the ultra rare to break through this. So yeah, if today with Fed, if Fed were to just nosedive to there, oh, I would love that trade so much. So this is good. Looks like that long pivot was a great catch. I bought it half gap. This is good. Market's moving pretty good on this. I like what I see. I'm definitely down for that. I like that. That looks good. All right, let's watching this. Half gap is always a really strong support. So I put notes on my screen that you guys can see it. Hopefully it's big enough that y'all can see. I kind of make sure I leave notes. I did this for the stream, by the way. Half gap is support when res is greater than 0. And you always see me talking about resilience. It's this indicator down here at the bottom. Right here, bear zone top, bull zone bottom, half gap. 90% close above, 90% close above. This is all A+ down in here. I don't know what caused that, but I grabbed the dip. I'm loving it. It's like McDonald's over here. I'm loving it. I'm loving it. What's my TP? I'm probably going to hold on to this for like 1 more minute and close out. It's just a retrace scalp. We fell to a long, strong pivot, and I'm probably, as a matter of fact, let me take profit on this in just a second. I'm going to watch it for like another minute just to see if it takes another bounce up. Just a retrace. Normally I just scalp. Yeah, that AM was not normal for FOMC. It kind of was, and we're kind of just resetting to the range. But yeah, half gap is a really strong support when your white line is greater than 0. So I got a bunch of A pluses all underneath here. I'm gonna have a lot of fun on Fed with this. When this white line here is greater than 0, the index favors being on this side of this dashed line here. That's what this means. The stocks have gapped up and are also continuing to move. They're not gapping up and then fading out. Well, relatively flat day, most of the stocks have gapped up and maintained their gap. So the index is unlikely to sell off if the stocks aren't doing the same. So I usually take that half gap bet all the time. And this is good just preemptively in the Fed. Maybe I'll just not be in a big position going into FOMC. And on the next screen candle, let me just take some profit. That was a good scalp for $1,000. And I am out. Okay, that's $1,043 on that trade. Very good, very good. Excellent. Now just to take a technical scalp on that, let me give you guys the full screenshot spectrum. I haven't touched my MyFundedFutures live account though. These are all other prop firm accounts. Let me just take a quickie snapshot of the total here. I got 2 DOMs in my Tradeify stuck right on top of each other. I've got 1 more of these 4. So I usually have 4 accounts and 5 accounts. I've only traded 3 of the 4 today. And that's it. So this is the 1,043 I just did on that long trade there. And again, it's on a Tradeivate web app, so I can't pop out DOMs like I can with the desktop. This desktop it's locked into one firm. So these 5 are the ones you see on the screen here. That was in another web trade. You have that different versions of Tradeify open. So that was good. That was just a technical scalp. There was really no reason to care too much about it. It's basically a 1-to-1 setup. Get 10 points, lose 10 points, but that was good. And yeah, so that's it. So on the bottom right of the screen, you'll see those. I just stacked my 2 windows next to each other, and that's basically it. And we're good. Yeah, so like I said, when I trade, I wait, then I act. You see what I did right there? I don't have to be, now people right now might be saying, oh man, I get on this long, right? I want to do this. You'll notice most of my trades are like that. The market's just chilling. I tried to take a long and I stopped out. Okay. And then the market fell and fell and fell and fell. And I waited and waited and waited. Then it got there, went up, fell. I got it on the long, closed out right there. It managed to take the loss I had and turn it into a total of $1,043 for the day. So now I turned that red account green, and that was just one account I was trading. I'm working on my accounts one at a time. How to mark the half gap level? Very simple. Okay, you're going to actually let's do it on futures. You're going to do the closing price of yesterday's equities session relative to futures. So it's not the closing futures price. What we're doing with half gap, it has everything to do with the stock market. So we're going to pin it to the stock hours. Right here, it's 16 o'clock Eastern, which is 4 o'clock Eastern. I'm going to mark the close price just with the line. I'm going to put a line right here at 4 o'clock. And then when the market opens at the same time, and again, this is the gap of equities. So it's futures at the time the equities market opens and closes. And here at exactly 9:30, when the equities market opens, I'm going to put another line on my futures chart. And half gap is just the point in the middle. There's a whole thing that goes to why this works, but that's how you draw it. Oh, that answers the question. Now is a 10K day. Oh, well, you guys weren't here yesterday. I mean, I was up on MyFunded when I was here. I was up for the day a little bit, like a couple thousand. I ended up the day being down like 9. So yesterday didn't turn out to be as good as today. Today's making back yesterday's loss. Yesterday, I got screwed by the Israel and Iran stuff. It just was nasty. You guys watched me. I jumped in on a trade. At the end of the day, I got the long right here. I said, tune into my stream to see how well it goes. Well, it didn't go well. And then we fell to another strong pivot. I tried a long again, got squeezed. Tried one more time, got squeezed, and I just gave up on it. It was down about 9K yesterday. Not the best. But sometimes it happens. And it doesn't mean that like I wake up today like beat up or too sad or too scared to trade. I walked in today like, oh yeah, it didn't even happen. Time to get back to it. And looks like I, recovered. So that's good. What a good trade. Thank you. This is why you guys like to watch live trading. Transparency is always good, I think. Like, I like to watch people that show their trades. They walk you through their trades. Oh, unfortunately, this one wasn't on the screen. I don't have a DOM to snap out. The Trade of 8's web app doesn't let you pop out little DOMs that are nice and tidy to fit in this little corner over here. So this is on the web version of Trade of 8 for another prop firm. So I've got all these accounts I've been babysitting forever. And so I'm glad you guys get to watch me do my trades. At least I told you what I was doing as I was doing it. But most of the time, you'll be able to see me like do it on the screen. The only reason I'm not trading the ones on the screen is that they're pretty much max profit. I can't make any more than this because of consistency. I'm trying to milk payouts out of all of these. So I can't really make more than about 1 to maybe 1,500 is as high as I want to go. So in 2000 on this one kind of accidentally went over. So I kind of blew the consistency on this one, which is totally okay. It just means I got to trade longer. But I can't really make any more money, so I can't trade these today, unfortunately. And damn, it's already back up. What? Look at this. We are back up to that starting point. Well, shoot. Only had the guts to hang on a little longer, but man, that was a nice little trade there. Rocket scooter pivots are fire. Thank you. Thank you. We put a lot of thought into our stuff. We're a team of engineers, coders, and a bunch of really cool concepts that we exploit. And this was textbook resilience. I have an actual handout for this particular trade. Let me show it to you guys. So my little boot camp that I teach, I actually give out handouts that have these setups on them and teach you what they're doing. Let me see if I can find the one for resilience. Teach you what it is. It's a half gap predictor. It's a gap fill predictor. And all it really does is it looks at what the stocks are doing in that gapping region. Let me open this up here. Where'd that guy pop out at? Yep. Let me close that. Let me pop this out. It says opening somewhere. Oh, there it is. Here. So what this actually is basically saying if the index is gap down or up, like SPIRE QQQ's gap down or up, is it going to fill its gap or not? I always was wondering, right? When you gap up, do we fill the gap and come down, or do we gap up? Does it continue to go? And my idea was, well, let's see what the stocks are doing. Are the stocks gapping and going, or gapping and fading? And I look at all the stocks at this white line at the bottom in one gulp. What this is telling you is that on a scale of minus 100 to 100, is that the majority of the stocks are actually above their own half gaps this way. So when the index falls to its own half gap, I bet that, well, the stocks are still not selling off. The majority of the it's market cap weighted, by the way. Majority of the market cap has gapped yesterday and continued to go. And this quick little selling point gave me a little bit of arbitrage to say the index fell below where the stocks are. It jumped in on the long. Such a great setup. Resilience is my favorite indicator. It's so good at that. It's never wrong. It's telling you what the stocks are doing. And whether the index is agreeing with the stocks or not, that's kind of random. For the most part, the index is tracking the stocks under most conditions. This is the second time I made that trade today. I made the same trade earlier today. This is the second time I did it. Pretty textbook there. And a lot of times people see this and the market's falling. They're like, okay, can I get in on the short? Can I get on the short? And I'm looking at the evidence. Oh, the stocks are holding sturdy. And I can see all of them in one little bite here. Like I can open up the stocks one at a time. Is NVIDIA crashing out? No, NVIDIA has gapped and gone. NVIDIA's selling off just a teeny little bit. What about Apple, right? Apple gapped and gone. It's not filled. Amazon selling off maybe a little bit. Amazon was the one that brought this index down. This indicator down, because Amazon did cross back down. So that's 1 out of 3 that looks bad. Google, right? Google kind of looks not terrible, but Google's below. So you see how it's kind of hit or miss, right? Microsoft, gap and gone. So you can see how it's not like universal agreements that all the stocks have been crashing out. Meta is somewhat still on the fence there. So as you see, not every stock was selling off. And I can see that in one little indicator right here. And that's why resilience is so good. That scalp. And right. So you can see that not all the stocks were crashing out. The index was. That's how I do my trades. 20K day. I might be done for today. I'm up. I've got one more account of the 4, the one at the top, the batch of 3. I've got one more still waiting to go. And I might maybe might try that. Like maybe. At Fed. Not now. 9 minutes until the good stuff, guys. That was a banger long. How do I get that chart? We have tools. I'm not trying to pitch my stuff on the show, but we have tools. Rocket Scooter has a link, I'm sure. Magnus, somebody can drop it in chat. You guys can always check it out. We have a boot camp that we do that starts on Monday that trains you guys on this stuff. If y'all want to check that out. This trader training boot camp I do is kind of cool. It's 20-day long, train you on all these different things, and only is $1 a day. It's only $20 for the month, and it's the most popular thing we do. And people always, out there, people are always trying to sell trading courses. It's actually free if you use our platform. It's a free service we do. But for people who don't use the platform, we were like, let's charge people $1 to come to the class. So y'all are asking about it. So it's $1 a class, because I don't like to sell trading courses for money, for profit. It actually, the money we generate from that just pays the 2 employees who edit our videos and make our handouts. I don't make these beautiful handouts. They do. I'm terrible at artistry. So we have 2 employees, and y'all's $20 just goes into a pot to pay their salary. So we don't make anything off of it. If you guys want to come to the boot camp, I'll tell you guys this. I won't hear y'all. I'm trying to pitch my stuff here, but you guys are asking about it. Magnus, thank you. He put it up there. Yeah, that's all in there. And we start the training on Monday. So this is our off week. You guys come out. It's at market close every day for about an hour and a half. But yeah, we teach you these cool techniques. They're unique. Nobody does anything like what I do. It's different. But the idea is very simple. The major part here is that I can watch what the stocks are doing, and the index is pinned to the stocks. Futures are pinned to the index. So the index is equal to some weighted basket of the stocks inside of it. Futures are tracking that index. And so if some of the stocks are selling, they may only sell a little bit, which is what we saw earlier, right? I showed you like half of the stocks are pulling back a little bit, but the index is pulling back a lot. There's a discrepancy there. They kind of want to like meet back up somewhere in the middle there, and we call it arbitrage. The stocks didn't sell off as much as the index did, and this indicator told me that. So this white line is actually a tiebreaker at this half gap, and that's what I trade off of all the time. I've scalped that twice today. I usually trade it. This was only just to scalp a little bit. My profit target was clearly 1-to-1 on that one, but hell, could have held on a little longer if I wanted to. But leading into Fed, I just wanted to quickly make a good buck and then get out of the way of it. Yeah, you can, this half gap thing, this indicator is only available like on our platform, but come to the show. I mean, you can see it live on MyFunded while I'm here on the show, or you come to my stream, you can always see it, or you can get the platform, it has the tools in it. Every month is a new boot camp. About every 2 months we do it. Yeah, 6 to 8 weeks. We usually do it, and then I take a couple weeks off. 2 micros left. You guys are trading? You guys got some win on that? Oh, man. You guys are crushing it. Y'all are making more money than I did. Good job. All right, Fed guys, we get ready for this. Now, what I like to do is I bring up, and I don't know if you guys use a news service. And again, I'm not affiliated with these guys. I just use it all the time. I'm a big fan of Financial Juice. I bought a long time ago when they first launched. I think it's a yearly sub. I bought a lifetime membership for $500 when they first opened. I took a bet on these guys, and I get a lifetime access to this thing. It's a news aggregator that puts all my news feeds in one spot, and I watch this instead of, I watch this on side of the Powell press conference. I usually have that open so that I can listen to it. I'll probably have it open on my screen, but you guys won't be able to hear it. So I recommend you open the press conference on your own screen. You can Google press conference. I'll give you a link for it. It's going to be on YouTube. And watch it along with me while we go through it. And while Powell's also talking, Financial Juice likes to parse out the important stuff and paint it red. So I'll be able to see the headlines as Powell's talking, within like a reasonable tiny little delay after he's talking. This just spits it all up there. So I keep this open on the side, and I keep the press conference open on the side. Now, hopefully today we get no rate cut. I don't think there's going to be much. I don't think we're going to get much movement on the initial announcement, but the dot plot is what's very important today. The FOMC projections are the most important part of today's announcement, simply because the dot plot has changed so drastically before and after Trump was president. I was talking about this when I first got here today, but I'll talk about it again. Before Trump was president, and again, just to review, so you guys are just joining in here, the dot plot is each participant of the committee has a vote, and they all cast their vote about what they think they're going to do over the next so amount of years, 2 years, and then the longer run. Jay Powell is one of these dots, right? And so this is the 2025. Each one of the members is voting inside of here. The majority of them are betting here. 2026, they're betting here. So basically, if you take the average between 2025 and 2026, you see that there's a distance of 225 runs, or 225 cuts. So on average, that's why they say, we expect maybe 2 cuts in 2026, or between now and then. That's because most people think we should go lower. Now, some of them don't think we should go at all, but the majority of them are lower. The range on the top end is 25 lower. The range on the bottom end is actually pretty drastic. Some people think we need to go a full point lower, but on average, about 2 is what we get. And then from here to here, on average, about 1 cut is what we get. And then what's weird is that the longer term, a lot of people think we don't need to change at all. The majority of the people down here are still at the same spot, practically 0. Some people think we should have no cuts these years, and that's this little group of people as well. So essentially, over the next 3 or 4 years, we're not really changing much on the rate. This new dot plot's going to be a big deal because in December, when we got one, we get them every quarter, December, March, June, September. That's you get the 4. And when you get this thing that comes out, you get to see how people are thinking it's going to look in the long term. And what's different now than we had before, we got 2 minutes until it comes out, was that it looks like a snowman because the camp is kind of split. A lot of people think lower for longer, and a lot of people think we don't need to move at all because of the tariffs, right? So there's a lot of people that split. When Trump wasn't elected, this wasn't a snowman at all. It didn't look like this. This was actually nice and fat and juicy down here at the bottom. But once Trump got elected, there's a handful of Fed members that are like, we don't need, we're going to have high inflation due to tariffs. This guy's going to put the tariff thing back on. And so a lot of the people that were down here retreated their bet and their thinking, or their estimate, and they're thinking we don't cut rates past 3.5. So they think we get 2 rate cuts and that's it. And this has been the same way because when March came out, it was still divided like this. So the question is, will the new one also be divided like that? So let's get ready to go. Now, again, my targets to trade are I'm going to be able to long off of a chase in a bull zone from here to here and a dip from here to there. What's up, Luke?
What's up?
We're 1 minute away from the goods, man.
We're 1 minute away, and I've got a 10-minute thing to discuss. It's
Let's go.
About bicycling, okay? Very
Let's go.
important time. No, just kidding. Celebrating us covering through FOMC, still keeping it clipping, still keeping it rolling. Code is going on the screen now. 25 of you are going home with 50K starter plus account 4 pickles 25. And Matt, I'm being quick with this one. I'll pass it back to you because we are right in the heart of the action. But I just wanted to say thank you to users for rocking with us, and we'll spin the wheel in a little bit.
All right. If it and mods, if you guys can grab the link, the YouTube link to the Powell press conference and just drop it in chat for everybody. And we are off. Looks like we're up and back down to where we started. I think this probably indicates that we're actually no rate cut, 4.5 on the 4.5 forecast, 4.5 previous, no cut as expected. That just came through just like we expected. And the market is now pushing up into strong bull territory. 62 to 72 is that nice liquidity pocket that we talk about. LPs are very strong to the bull side. Yeah, I'm not trading this, but this was a nice little run. I love that. That is perfect rocket scooter pivot. 62.72. That's the trade I made today as well. That's a trade I tried to make earlier. So it looks like we bumped on that. That is looking fantastic. Okay, now let's see what we got. All right, the projections. Let's get those numbers coming through. We are projecting a. Let's see really quick. Forecast. I lost the page here. Good, man. We're up. 3.6 in 1 year, 3.4 on the 2 year, and 3.9 on the current. Okay, and then 3 points longer. So longer term projection hasn't changed. The shorter term projections are slightly higher. Okay, so just so you guys know on the stats here, the longer term projections are slightly higher. That has everything to do with the tariffs. So 3.4 rate on the 1 year versus 3.6. That's basically one difference of a 25 basis point cut. Same thing on the 2 year. So that's what we got there. Median forecast still shows 2 rate cuts in 2025. That hasn't changed. 3.6 in 2026 versus and 3.4 in 2027 is fewer rate cuts in the future. Keep that in mind than what we expected earlier. So last read, we expected more rate cuts in the future. Now we have fewer. So that's what we're dealing with right now. So the market might pop and drop on that news. It's not the best news in the world for rate cuts. We wanted to see that more people were joining the camp of let's have more rate cuts over a period of time. But clearly with the projection going down basically, or sorry, going up a basis point, we're going to get one fewer rate cut in 2026 and likely one fewer rate cut in 2027 than originally planned. And the way that I'm determining that is I'm looking at the forecast last time versus now. I'm sorry, the read last time. Last time's actual previous number was, and mods, did you guys get the link for the Powell press conference? Can you drop it in chat so people can watch it? It'll be on YouTube. It should be starting in 30 minutes. All right, where to go the numbers here? Okay, so originally the last read was we would be down to 3%. Remember, we're at 4.5% now. So in 2 years, 3% is 1.5% cut. That's 625 cuts, right? Now we're saying 3.4. That's one fewer rate cut to go from 4.5 to 3.5. That's really only about 425 basis point rate cuts over the next 2 years. To go from 4.5 to 3.5 is again 4-ish in the first year. So last time we got these projections, people were forecasting an extra cut in the first year and forecasting an extra cut in the second year. Now there are fewer cuts. It's likely to pop and drop. Do you guys see how this works? Oh, there we go. I was even watching it. It's popped and dropped. So yeah, that's kind of what they're expecting. A little bit of, maybe not stagflation, but at least a little bit more inflation due to the tariffs. We don't really have a problem in the labor market yet. We're not seeing a lot of layoffs yet in the Thursday numbers that come out, but let's compare them side by side, guys. And again, pop and drop, not really tradable. Let's look at the side. Okay, this is the March and this is the June. Okay, so look at the dot plot. You guys see, let's put these guys side by side. Let's talk about it. I know this is the boring part of the market. Listen, I'm going to let it fall till the press conference. No, not going to trade this at all. It's not a dip to buy. Look at the change of 2025, guys. This is March. Okay, this is June. Look at how many people in 2025 have moved from here to here. Do you see the difference? This versus this. You now have maybe 3 more people that have moved from probably actually this category. So there's 2 fewer here and there's 3 extra here. A couple of people think we're going to have 1 fewer cut this year. That's what we're seeing. This dot plot is the reason the market's probably going to be selling off right now on this news. And again, I don't have it on my screen, but let's watch it. See how good I am at this? All right. This is what all that matters. So everyone else is trying to figure out like why market's selling off. Now, the interesting thing is that more people at the 3.5 camp are now at the 4 camp. Look at this. This is fatter right here than right here. Dude, all of us, look how good all of us are at this. You guys are going to be pros after like a month of watching the stream. You're going to learn how all this stuff really works. Do you guys see how fewer members have voted for more rate cuts? And the interesting thing is that over the long term, nobody has really changed their long-term assessment. Their medium term is actually more people are at 3.5. So if I put them side by side, this is where the bulk of people are, which is here. The last projection was we would get 25 points lower. The majority of people on this projection is here, 1 rate cut higher. That's where I came up with that earlier. So we're going to have 1 fewer rate cut in 2027 on average. The majority of people are actually inside of here. So compared to last read, most of the people are up in here. That's roughly 2 fewer cuts in 2026. 1 fewer, 2 fewer. And then here, a lot of people have moved up. The average is probably here now instead of here. 1 fewer cut in 2025. Okay, so the market is going to absolutely hate this news. I'm talking hate this news. It's not going to like it. That's how that works. It doesn't mean that we're going to crash, but the market hates this news. It's still showing rate cuts, but there's fewer each year, and that's 100% due to the tariffs. Now, are we going to sell off today? Maybe not, but as you see, we're not rallying through the moon because that actually was bad news, right? The far right dots look like a little person wearing a shirt. That's so funny. I think it looks like a snowman. It's slowly turning into Frosty the Snowman. It kind of is, right? There's more and more participants now on the side of, yeah, the tariffs are going to be pretty bad. So hopefully you guys learned a little bit about what the whole projections are. They really are a big part of understanding Fed policy. The biggest change that we see between the two is the shift of so many people think we don't need a cut at all. That's what this is, 4.5. This is the bigger alarming point. Almost a third of the percent, maybe, hold on, wait. This is 7. Hold on, 1, 2, 3, 4, 7. 7 out of the 19. So about roughly a third of participants believe that no cut. 1/3 of the Fed believes that we will have 0 rate cuts in 2025. That's their vote. Only this many people think we need to have one at all. Last read was here. More people are there. The inflation is expected to go higher due to the tariffs. And we're going to get farther away from the 2% target. The Michigan numbers projected that we are at a 5.5% inflation at the end of this year anyways. A far shot from the 2%. They believe that the tariffs are going to raise the CPI an additional 3.5%. So we're going to be like, all right, Mark going to hate this news, y'all. Hate it. But we might still bounce and rally. We'll see. But the problem is that the most people believe we don't need a cut now. And the distribution has moved up here as well. So it's definitely, I want to kind of take a screenshot of this and tweet this really quick. Let me draw my screen here. All right. Just kind of showcase with people. Fewer cuts. I'm going to tweet this over here. So, right. So, essentially, the projections are showing that inflation is here and here to stay. I'll tweet this real quick. So, maybe you guys hopefully learned something about this today. So, I appreciate if you guys have any feedback for the type of education and stuff we bring to the stream. Hopefully, that's useful to y'all. Hopefully, I'm not putting you guys to sleep staring at plots of data. I know that sounds really boring. One fewer cut in 2025. 2 fewer in 2026. 1 fewer in 2027. Looking at the averages. This is a this is a sign that the 5% Michigan 1 year estimate. Your FOMC members believe cutting rates. Too long, didn't read. Bad news. All right, there we go. Dot plots are good, man. Again, I know it sounds kind of like it's like math and plots and stuff. A lot of times the news people that read this kind of stuff, and you always watch the news or financial news or even on Twitter, people don't understand what makes the market move. I've been doing this long enough that I knew that pop and drop was the answer. As I said, we're probably going to pop and drop while I'm reading this. The market pops and drops. It's not the best news in the world. Now we got to listen to Powell talk and see what he's going to explain that away today. I'm going to predict what Powell's going to say. And so Powell's going to get up there in front of the podium and start saying, while the employment numbers are good, jobs market's stalling. He's probably going to say that. He's also going to say that uncertainty due to the tariffs, the projection of inflation actually going up due to tariffs is making it less likely we see rate cuts over the next couple of years. And he's going to say that. And this is how, when you watch the press conference that comes out, you can predict what Powell's going to say. He's going to read that same kind of thing I just told you guys, but you're going to hear it first from me before Powell talks, right? And the point is, as a trader, the way that you make a boatload of money doing this is you got to be first. That's really the trick. My trade today, I was first, right? I was the first person long in here. The way that you really, 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 really do well is position and risk management. Yeah, but in your trades, you got to be first. You got to always be ahead of the game. You can't be chasing something. You got to always be up on it, right? So that kind of information hopefully is useful if you guys learn how to read these dot plots that come out once a quarter. And when the data comes out, you can just read through it. You may not know how to read through it, but hopefully you can watch this video a couple times and maybe learn a little bit. Where'd that data go here? This one. So whenever you see these projections come out, and I use my little financial calendar here, you can tell that 1 year out, there's a 0.2 difference, right? That's roughly 1 fewer cut a year out. And then that's a little bit over 1 cut 2 years out. So that's where that kind of comes from, because you can see the difference of the average has moved up 2 slots 2 years out and moved up 1 slot 1 year out. And that's kind of where these numbers come from. And that's kind of helpful for you guys. How much does macroeconomics influence my trading? Macro, not much. I mean, I avoid the macro news as much as I can, just like now. If I had some kind of, now again, remember I told you today I might actually long to bet on the Fed. I'm glad I didn't, because I was betting that more people would want cuts. And actually my speculation was wrong. Actually, fewer people want cuts. I thought the inflation would be somewhat better than it has been as in the last quarter. But apparently the Fed is just having a delayed response because they're responding now like they should have last quarter. March's dot plots weren't really that good. Though they weren't really that big of a change off of December either. And I was like, I guess nobody wants to budge, and then maybe they'll budge now because it's better. Now the Fed is like just taking their sweet time and watching it play out, and now they're changing their opinion. So now I can see the Fed is not quick to make a decision. Now they're like, yeah, inflation's going to be here. Let's not do it. I just want to be trading a stable bull market, baby. You know how it goes. So macroeconomics, I'm always paying attention to the macro. I mean, that's really what you have to do as a trader. But it doesn't influence what I do, buy or sell. Like right now, I will still long off of my same pivots if I get them, despite, what it's going to. I will let Wall Street tell me what they want, what they believe out of all of this. Now, right now, it's telling you that the market is not happy with the news. It's not like they hate the news. We're not crashing on it. But we're certainly not picking up a big rally off of this either. That is actually really big news. And that's a really big hit to the bull market to see news like that. Market's back at all-time highs, and the Fed is less likely to cut rates. Obviously, we're going to hate that, right? But as a trader, these are the things, and you might want to ask, like, yo, Matt, where did you hear, or where'd you learn how to do this kind of stuff, right? And it's kind of crazy because I don't have an economics degree. I don't know anything about economics. I don't even like economics. It's kind of boring. Even talking about the dot plots, I was kind of putting myself to sleep over here. My degree's in chemical engineering. So I like data and I like numbers. I like figuring stuff out. But like I just started just digging through my calendar, my economics calendar, and I started learning that way. If you go, iinvesting.com is the best one. It's totally free. And you can see all the news data that comes out in the US, right? And you can just click on something like, let me click on this. And it'll open up a little window, and it usually will give you some information. And sometimes it'll tell you about what it is you're looking at. Now, this one doesn't have anything on it, but if I were to pull up anything else, like, I don't know, pull like a random thing, US leading index, let's just pop something on the screen. You can come here and you can actually start reading what that is. Oh, what is the leading index? Oh, it's a composite index, key elements, blah, blah, blah. This looks at several averages of leading lagging indicators. They're constructed, blah, blah, blah. And it just teaches you whatever this thing is, right? And so you come in here and I started learning what I call trading economics, which is like enough to get by as a trader just by reading through this and then diving deeper and taking little rabbit hole dives in each one of these things. And, so I've been trading since 2010. It's been 15 years. 15 years of doing this, I can probably explain all of these to you now. Even if I don't, I'll refresh my memory on some of them. But as you do this over time, you'll just pick it up. And I kind of learned everything just by reading. I didn't necessarily have a degree in any of this. I probably don't speak as eloquently as, an economist would about this stuff. I got street slang going on here. I learned my economics on the street, but it's pretty good, right? This report indicates the FOMC's projection for inflation and growth over the next 2 years. An important part of the report is the breakdown of each individual member's interest rates forecast. Each individual member's. Oh, so each one of the members is one of these dots. Gotcha. Makes sense. And then I remember that, and then I learn it that way. But you guys are like, what's all this stuff mean? I'm going to tell you, don't listen to CNBC. Don't listen to the news. Don't listen to people on Twitter. Most people don't learn how this stuff really works and moves the market. Your job is to decide, is the market liking or hating that news? And you got to learn it just by reading and just kind of digging into it a little bit. With this info and rollover ending on Friday, do I expect to sell off on open? I don't think rollover is going to have a big effect on the selling of the market. The VIX forward curve is relatively flat. So that means there's going to be very minimal discrepancy between current spot price and futures price of the index. You're not going to see a big gap between the two. Volatility differences would cause it. So I don't think that usually rollover doesn't cause, or expiration doesn't really cause an event. Futures are a little more dynamic, especially in equities futures. People don't just roll on a specific date like all at once. Futures are a little more fluid because they don't settle in any particular thing. When they say settle, like if you buy an oil contract and it expires, you get oil delivered to you on a date. there's a delivery of a commodity. So rollover is more important, and that effect typically is bigger seen in commodities. And equities, index futures like S&P, NASDAQ, whatever, they don't settle in anything. They just settle in cash. So nothing's actually delivered. So people just kind of casually roll over whenever it's convenient to them. So you don't see like a strict rollover or influence that rollover has, like a drastic bump in the market in the indices like you do in commodities sometimes. So I would say I wouldn't lean on expiration or rollover having much effect onto preventing or even causing selling. I think it's more of a non-effect. But that's because you don't have everybody rolling over at the last minute to get a few cents off the spot price or whatever. It's not really that important to choose which contract you're trading in futures because it doesn't in index futures doesn't deliver anything to you. It matters if you have the March oil contract versus the April oil contract because the barrels of oil delivered to you in March. If you want the oil for your company for that month, you're kind of locked into that contract. So you get stark rollover events more often in commodities than you do in the index and the treasury products. So I don't think that that's going to lead into an effect. But with the other thing that you said is that as Coop has said, most people will likely have rolled by then. Yeah, and most people have rolled already. And as Coop is saying, and when I say dynamically rolling is like everybody in the S&P just kind of rolls at different times and it's more spread out. Commodities are like, it starts to cluster up at the last minute, especially if it's trending. You get a little bit, like basically you can think of like rollovers creating a stronger actionable move in commodities. If the market's already selling off, you might get a lot of people at the last minute jumping in because it matters to get in for that delivery because you need that thing. If the market is selling off and because it's rollover in S&P, however, people aren't going to be forced to jump in to meet a deadline, right? Because there's no deadline for that. The contract expires. You're not delivering a bucket of S&P to your doorstep, right? So I always learned over the years that rollover it amplifies an effect. If you're selling, it'll sell harder. If you're rallying, it'll rally harder, mostly in commodities. Equities, it's less of a direct like meteor slam in the ground, I guess, if you want to think of it like that. All right. Press conference starting in 9 minutes. All right. Let me see if I can get the link up here. I'll be watching it here. I'm going to open up in YouTube on my screen. You guys probably can't hear it, but pop it in YouTube here. Hal will be talking. I'll drop the link for you guys here. It's going to start at 2:30 Eastern. Yeah, so that's good. And there's a link for you guys. I can check it out. And we'll just listen to it, and we'll stay here probably for like maybe just the first, maybe for like 30 more minutes, and then we'll head out. Appreciate the mods and everybody and all the guys behind the scenes for sticking around a little bit longer. FOMC is such an important day, right? It's the most important trading day of the month. Especially if you're a bull in the market, you kind of need some good news coming out of the Fed. But we'll stick around a little later for you guys and give you all a little bit extra information. Luke's going to go get a Celsius, making you guys stay longer. LOL. Real party's about to start. Yeah, the real party. So Pal's going to reiterate some of the things. Now let's get ahead of Pal, right? We do this all the time. Let's get ahead. Pal's going to be talking about the key things they're going to be talking about. I'm going to write it on the screen so that you guys can understand that the goal is to get ahead. So let's show how good we are at this. We're going to predict what Pal's going to say. He's going to say the following. Inflation is uncertain. I'm going to put uncertain due to the outlook on the tariffs. I'm going to shorthand this. Okay. Pal's going to immediately say that right out the door. Number two, he's going to say the labor market is questionable in a way. Well, let's say stalling. Labor market stalling. It's not growing and people aren't getting laid off, so there's no risk of stagflation, but the labor market is stalling. Jolts are coming down and continuing jobless claims are slightly going up. It means unemployed people aren't getting their jobs back because companies are in hiring sprees. Why aren't companies in hiring sprees? Well, because they just took a hit because of the tariff. They might not be out there with a lot of free cash to spend to go hire people. So he's going to talk about the inflation, the tariffs, the labor stalling, he's going to say something along the lines of the bond market, the other thing he talks about. He's going to say, now we're going to make this checklist. And I'm going to tell you, I'm going to check these off on the stream. This is going to be a funny thing you're going to watch because we're making a checklist. He's going to say trouble in the bond market. The reason there's trouble in the bond market is because of inflation as well. The yields aren't high enough because the yields aren't high enough to beat inflation. Nobody wants to jump in and buy bonds because the stock market's rallying. So the bond market's deteriorating, and it's been deteriorating for a while, and premiums are going to have to crash for yields to go up. Trouble in the bond market. And we're going to do like a Powell checklist. And then number 4 is when people talk about the future rate cuts when Steve Leisman is the first person that grabs the mic every time and says, when are we going to get the rate cut? When Powell's going to dodge. He's going to say, we're going to look at data. He's going to say, we will look at data. And I'm going to, this little checklist here, and we're going to listen to it one at a time. We're going to play Jay Powell scavenger hunt. We're going to look at the data, and he's going to stall. Okay, so I'm going to write this down, and let's see how accurate I am at predicting what Powell's going to say. All right, so you guys, you got the MyFundedFutures Powell checklist. Let's predict the future and see if we're right. We're going to look at the data, and he's going to stall. He's not going to answer. He's a dodge, not stall. Dodge the answer. We're going to look at the data. But then somebody's going to say, well, the dot plots show that it's fewer cuts. And he said, well, we're going to look at the data. We're going to look at the data. And that's what's going to happen. So let's make a little checklist off to the side, and then let's listen to what Powell says, and we'll check them off one at a time. Inflation, uncertainty of the tariffs, labor market stalling, trouble in the bond market, and people are going to say, when are we getting the cuts? And he's going to say, we're going to look at the data. If I get all 4 of them right, I should get a prize. We remain vigilant. Yeah, I know, right? The typical Powellisms. We need a t-shirt with like all his sayings on it. Counts for sure. Where's the link to join the giveaway mods? They'll post in a little bit. Is the half gap relevant on this time? It's always relevant. I mean, you're watching what the stocks are doing, right? It's always relevant. Now, today, while trading, I don't think he's going to say anything other than these 3 things or these 4 things. And I think because of that, Wall Street's going to kind of not really, it's kind of a nothing burger for the FOMC. We haven't done much. I don't think we're going to crash off on anything because Powell's just going to reiterate what we already know. Fewer rate cuts, right? He's not going to say it directly. He's going to dodge it, but he's basically saying it without saying it. So now it's all technical trading from this point. There to there is a nice long. We already got it earlier, but here to here is a nice long. If the market even sells off a little bit, I've got longs planned right down here for sure. I'll scoop that dip up. Maybe this again. Now, here's a trick with resilience. When you hit this level here, I look at the level, and if we hit it a second time, if the number is lower than the previous time, then the pivot's less likely to bounce. And I think right now it's looking like it might actually be lower, 24 versus 34. So if it does fall to here, I'll look at it a second time. If it's higher when we bounce a second time, I will long it even more ferociously. So we'll see how that works. All right, we're starting in about 2 minutes, guys. Glasses on. Time to get serious. And I need a snack. I'm hungry. Who here likes and then people always make fun of me in my stream because I'm always crunching chips in the mic. Do you guys like Miss Vicky's jalapeno chips? I'm gonna tell you, of all chips in the world, this is like the best chip of chips. This is like the best chips ever invented. They're so good. Like so good. Literally the best. I can't name a better potato chip. They're so good. Come on. What are your favorite chips, you guys? Oh, dude, they have this one. Let me tell you a story. Maybe you can order them in the UK. You can get them imported. They're totally worth it. They have one kind of chip that is so good, guys. And I'll tell you, if you haven't tried it, you have to order a box of them. They have a spicy dill pickle chip. It is a mix of jalapeno chip and pickle chip. And it is really good too. And I actually bought them. Wait, HEB specialty chips. Yo, my Texans in chat. Let me get a holler. Who here's from Texas? Right here. I hear that HEB. You're speaking my love language here. There we go. So the mix of the Austin, Texas. Let's go. HEB has legit tortilla chips. Yeah, I always buy them. They're huge. They're huge bags and they're really good. And they're really cheap. HEB chips they're really good. Dallas, Texas, Austin. Dang. Richmond. All right. Texas, Houston, nice. So I'm in Houston and I live in Memorial. So you guys in the area, that's where I live. You need more HEBs in Dallas? Oh yeah. OC, Austin. Okay. Pal's talking. Let's get ready to go. Labor market is at maximum. Oh, he said it. Hold on. He said the labor market's at capacity. He already said that. GDP down first quarter, last quarter. Oh, by the way, the story about the chips. I ordered a bag of those spicy dill chips, and I got a defected bag. Defected in the way that the chips were overly seasoned by a factor of 10. The chips were black. They were covered in so much seasoning. I have never had a tastier potato chip than a chip that is doused in that seasoning by a factor of like 10. I still have them downstairs. I'll show y'all tomorrow so you know I'm not lying. I've saved them because it's a treat. Every once in a while when I reward myself, I'll have one of those chips and it's so good. I have the defect bag. It's still halfway full. Dude, so good. I opened it up and I was like, is this full of ants or something? You pull the chip out, it's literally black. It is so spicy and so sour. It's like my little treat I give myself when I have a good day. Every once in a while, IDOC and I'll eat one. We're saving it. Saving them for like our anniversary or something. Yeah, that happened with salt and vinegar when you were a kid. Oh. God, I love sour chips. You guys like sour chips? Maximum employment. Maximum employment. All right, checklist. Labor market stalling. Max employment. We got it. We nailed it. Okay. All right. Bingo. JPAL bingo. Yep, that's right. Yep. Estimates based on the consumer price index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May. And that excluding the volatile food and energy categories, core PCE prices rose 2.6%. So PCE price is going up. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and inflation expectations gone up over months. Yep. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Point to tariffs as the driving factor. JPAL bingo. We called it. All right, next one. We're good at this. We're doing this for a while.
median inflation projection falls to 2.4% in 2026 and 2.1% in 2027.
Question is, can I take a long here?
Our monetary policy actions are guided by our dual mandate.
It's actually technically a long setup from here.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%.
Question is, do I want to take a long here?
We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain.
I'm not going to trade this. I'm going to sit out. I've done so well today. I don't care to press any harder. I'm happy with my performance.
And have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity.
Yep, tariffs are making the prices go up.
Could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflation
He's reading. He just said short-lived instead of short-lived.
that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully prices, and ultimately on keeping longer-term.
I'm glad I didn't take the long. Nice. Sometimes it's good to sit out.
One-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is for each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy.
If you guys are just tuning in, we're watching the link here.
In our SEP,
You guys can't hear it through my screen, but I'm watching that video that I just posted the link to.
based on what each participant judges to be the most likely scenario going forward.
Oh, you know what? I can actually just pop this on the screen.
Projects that the appropriate level of federal funds rate will be 3.9%.
He's talking about the dot plot right now.
Same as projected in March. The median projection declines to 3.9%
You guys can't hear it, but at least I'll put it on here. It's got the closed caption at the bottom.
These individual forecasts are always subject to uncertainty, and as I noted,
Uncertainty.
uncertainty is unusually elevated.
Uncertainty.
Of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed
Transitory during COVID. Yeah.
and a research conference that we held last month.
He didn't define transitory by meaning a decade, though. Yeah, that's what I was like, nah, dude. COVID's going to cause a decade of inflation longer. Any belief it was short term is foolish. How long before Donnie loses his mind? Oh, he's freaking out right now. Became even less likely to get a rate cut. Price and employment.
We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic
She always asks good questions.
And the timing of when it materializes in the data?
Timing. Number 4.
So we've had 3 months of favorable inflation inflation readings since the
Dodge.
January, February.
Let's see if he dodges.
Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit.
That girl's the goat. Yeah, she's good. She always asks good questions. I hate the ones that ask dumb questions. All right. Market's kind of getting a little crazy right now.
Goods being sold at retailers today may have been reported several months ago before tariffs. So we're beginning to see some, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment, things like that, that are attributable to tariff increases. In addition, we look at surveys of businesses.
I always wonder what they're looking at. Like when it pans to her, she's like looking down while he's talking. I wonder if they're all watching like Thinkorswim or something. Like they all got trades on the table. You know what I'm saying? I always thought this. Watch the camera pans back to her. They all seem to be like looking down at the desk at something while he's answering their question. I'm in no trade right now, guys. Nothing. Ask him if he has calls or puts. LOL. Yeah, that'd be funny. Everybody's here like, should I buy calls or puts? Which way should I go? I always try to look on people's screens like this guy's got Robinhood open right there. Look at him. You bet. Right here. Homeboy's watching his put spreads he sold today. I'm just kidding. Maybe. Kind of back to the support. I kind of like this area now. If I wasn't satisfied with my performance today, I might want to. It's the second time it failed and it came back. This might be a good setup from here to here. At least a pocket trade.
If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you ended a higher rate at 2027 than you would have in the prior.
He's talking about he's talking about the less of a quarter of a point what we talked about earlier today.
Why do you want to slow it down?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economies are going. You didn't see people moving their longer term, estimated neutral rate, for example.
You didn't. We didn't see that all in the dot plot. The longer term is pretty fixed.
So I think if you look at what's happened since March, right? You see a little slower growth, tiny tick up, 1/10 tick up in unemployment, and you see inflation moving up 3/10. And by the way, it was a similar.
Yeah, pocket trade was pretty good right there. 62.72. I made that trade so many times today. Or I tried to make that trade so many times today. It's a good one. Pal's PR game is well seasoned. He's been doing this long enough to at least keep everyone neutral, positive sentiment. Oh, 100%. Yeah. 62 to 72 on S&P was that's what I see on the screen where that arrow is drawn.
All the Liberation Day tariffs are still out there and unresolved. You've got now an exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say.
I don't think Iran and Israel have anything to do with the funds rate. U.S. involvement won't change that.
Remember to check that.
I haven't heard Powell laugh in like 10 years. He made it funny. Oh my God. Well, looks like market's doing okay. Absorbing this news at least.
out there in favor of cutting rates more immediately. Inflation has continued to cool, and in fact, it's been roughly 2% despite the tariffs. And I guess I also wanted to ask about cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing
Job market slowing. We already crossed that off a bingo list.
Do you see any concerns that the economy is weakening and that is a reason to cut rates?
Powell seems to be more optimistic about. They're a little more certain about the data they've seen.
What you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do.
Our concern to get certain market move around a little bit.
Restore price stability in a sustainable way.
Double checking what the VIX is doing, just so we can kind of pay attention to. VIX has been trading down, so there's not a lot of volatility here. Should tighten up pretty quick. I mean, granted, we have been faced with bad news on the rate cut front. I was surprised it didn't sell off harder, to be honest. I was expecting people to freak out on the dot plots. I mean, they're not terrible. They're just not as good as we wanted them to be. Oh, he just said watching the data.
Do you see odds of that scenario? What kind of odds do you see of that scenario coming true? And how many months of full inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think it will.
So those of you just tuning in, by the way, FOMC day, especially if you're a new trader, is one of the most important days of the month as a trader. Why are we watching this, you might ask? How is this important to you? And let you guys know, historically, bull markets, right, have been fueled, probably in your trading career, at least in mine, bull markets have been mostly fueled by the Fed, the ability to print money, control interest rates to stimulate commerce and lending and such. The Fed has been boosting the stock market since 2009. Since quantitative easing turned on, and the Fed has been the driving force for the bull market for the last 15 years, right? It's very important. And this is the first time in a while, in my lifetime at least, or my trading lifetime, that we've entered a period of quantitative tightening, which took place a couple of years ago, where the Fed is no longer propping the market up as much as they have been. They're actually letting things roll off their balance sheet. They're not adding things to it. So the Fed is investing less stuff into propping the market up. So in a period of quantitative easing and not a lot of rate cuts to stimulate like lending and such, the market's not going to respond. Hold on. Oh, Steve Leisman's question, number four. Dodged. He dodged. Hold on. Future cuts when, Leisman. Come on, say it. Say, look at the data. Say the line. Say the line, pal. Come on. Say, look at data. Say it. Say the words. Come on.
At some point it will become clear. I can't tell you exactly when that will be.
Dodge.
We'll be watching the labor market very carefully.
Watching what?
And tariffs, signs of what's going to happen there. Of course, there are many developments ahead. Even near-term developments are expected on tariffs. So I think we don't yet know with any confidence where they
have an estimate. It's a pretty, I think all estimates are pretty close together, but it's highly uncertain.
He's technically said look at data with that. He's talking about the data he's looking at. He didn't say look at the data. He didn't say the line. I'm sad.
Yeah, what you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer.
Yeah, like how quickly is somebody gonna be able to absorb the prices or absorb the cost of the tariff? It's hard to understand. Yeah, makes sense.
We haven't been through a situation like this, and I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data, and again, in the meantime, we can do that because the economy remains in solid conditions.
He technically said look at data, but he was talking about the data he's looking at. So let's.
I guess I'm wondering if you could explain a little more the divergence we see in the data, particularly around the 2025 rate projections. I realize that you have one group of officials that are putting down no cuts, another that are putting down.
Hey, so guys, stick around because when the press conference is over, they'll probably come in and maybe they'll spin the wheel one more time. A data watcher says what? He's been putting a lot of stress on the bond market issues.
Play out over the last 2 days. So you're right, and this is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to 2 factors that you mentioned. The first is just that parties have a diversity of forecasts.
Who says strong support of today's decision? This is what he means by that. Everybody's parked right here at no change. That's what he means by that.
But remember, as we see more data, we're going to learn more about inflation.
See more data. There it is. See more data. That's looking at the data. That's good enough. Cross it off. Okay, last piece on Powell bingo. We need to hear about the bond market. Last part. See actual data. There we go. All right. One more. Purple tie, no change. Red tie, one change. This is true. Okay. As you guys see, a little bit of teaching about what happens with FOMC, right? You see that the market has responded kind of crazily, right? We had the reading, it sold, it rallied, it sold. And you can see that Wall Street is kind of going back and forth, both on his comments and also on their belief of what's going to happen. We know when analyzing the data, right when it came out, that the news was bad. Despite everything you're hearing or seeing, we did the assessment here to know that it's bad. And the market is certainly pricing that in, despite the volatility we're seeing, right? So hopefully this inspires you guys to learn how to do this, to, kind of get ahead of things. If anything, don't trade your MyFundedFutures accounts into news because it's kind of crazy and choppy. I've been kind of sitting out since this came out. Market's pushing up, even though the news is bad. And it's finally starting to trade down, which I thought was going to happen, but hopefully you guys learned something. The goal is to learn to read the market before it happens to get ahead of other traders who, if the market sells off now, you and me and everyone else are probably, dang, it sold off. But now you know why, right? People might say, well, the market sold off because of XYZ reason. Well, now you know, right? There's fewer participants want rate cuts. And we analyze that right out the door within the first minute of getting the data, right? And Powell's talking about look at the data, look at the data. We look at the same data, right? So you can get ahead of what he's talking about. Just by being kind of smart, I'm glad he doesn't let Trump force his hand. He didn't last time Trump was in office. Trump was bullying Powell way back then, too. And he told him, he's like, I don't care. I'm not going to do what the president wants, which is kind of nice. He always dodges the Trump question. He's going to dodge it, right? He says, usually, I'm not going to comment on that. That's what he says.
This is just noise that the markets and everybody should ignore until
or whether you worry that it could lead
Market's selling lows, by the way, right now, or hourly lows.
on consumers about the outlook for the economy. Okay. From my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. I think our policy is well positioned to right now to deliver that and to be able to respond in time and way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much, that's all that matters to us.
He's like saying, like,
To ask, assuming you are not reappointed, would you stay on?
he's like saying the president doesn't matter. He always throws his subtle jabs there. I'm not thinking about this. He always dodges the question about Trump. Always dodges it. He doesn't want to say anything. He says it without saying it, though.
So you're asking immigration. Yeah. You know, I wouldn't want to speculate.
All right, I'm clearing my screen off. We had fun with Pal Bingo. Nobody asked about the bond market yet, but they usually always do. Lately, they have been. All right, guys. Well, it looks like we're coming towards the end of the press conference here. Probably Pal's going to talk for a little bit longer. But yeah, so there's really not many significant developments coming out of this that's going to really change any direction from now. Market's probably still trading down on that initial bad news that we saw earlier. Fewer rate cuts, and the market's responding very poorly to that. I do have possible long entries down in here, but I'm going to tell you today with just another news-driven day, I'll probably avoid it. I'm very satisfied with all my performance. I have one more account I could work towards, but I'm deciding I'm going to kind of just leave it as it is and do okay. So I'm going to call it a day on my trading, but that's it. All right. So guys, fewer rate cuts this year. September cut maybe, but maybe not, right? There's more people that think we don't need a rate cut. 7 participants believe no rate cut this year. That's 3 more than last time. And last quarter we got it. So, yeah. And now you can see why, right? The market traded up and now we're selling off because that news is actually kind of bad. So hopefully you guys learned this technique. And every quarter, when those plots come out, you can kind of compare like the last quarter to the next quarter and just see if it's worse or better and then make your decision there, right? I think we did pretty good today, all things being considered. That's why I told the guys, I was like, hey, let me stream a little longer today because, there's a lot of lessons you can take from FOMC. It is the most important trading day of the month, hands down. So much sentiment and direction comes from the decision of the Fed because we've been so used to the Fed creating a bull market for us. You got to kind of see that we're trying to learn how to operate without the training wheels. What's up, Luke, baby?
What's up? I just want to say thank you, Matt, for pushing us to stream this FOMC, for rocking with our viewers for so long. I want to say thank you to the audience for hanging out for quite some time today. We had fun. We learned a lot. If you're watching still, it's because you care about being better, and Matt cares about making you better. Boom. Can we spin the wheel the last 5 times?
Yes, sir. Let's go. 5 more times. You guys stuck it throughout this whole time. We're going to spin the wheel one more time for y'all.
Woo. All right. Wheel is going to go up on the screen. I'm going to press the magic button. And if your name appears, you are going home with a free 50K Starter Plus account. It's as simple as that. I'll ask the chat, do you want a 50K Starter Plus account? If you do, give me a little Y in the chat. We want to build some energy, some suspense for our session today. All right, I'm seeing some interest.
I like it. I'm seeing it too.
Is going. Winner 1. Winner, chicken dinner. Edison. 2. Again, 5 of you are going home with free, no strings attached Starter Plus accounts. It's as simple as that. Kanaki. We got 3 more, Matt. 3 more. And we'll be back on Friday, folks. We're not going to be here tomorrow on Juneteenth. We will be back on Friday.
Rado.
One more. Should we do a bonus spin?
One bonus spin for the longevity of people being here all this time. They deserve it.
Empire Steve, and last but not least, who's our winner going to be? Alex Coe. With that, Matt, I want to thank you. Audience, I want to thank you. I wish everyone some happy trading.
Yep. I'll be live tomorrow with the trading lessons. A half day futures day, but if you guys, my fund may not be live, but I'll be live just doing like a quickie lesson. I usually like to take the holidays as a learning opportunity. So you guys feel free to join us in the morning. And thanks for coming out.
Love it.